Very good morning, everyone. How are you all? Super. Super or good? 1 minute. Something went wrong. Now, live class student, is everything fine? Audio, video, just inform me. Live class. Super. Okay. Now, last class we completed financial instrument. Have you done all the pending question, means all the balance question, whatever book you are using? In that, are you able to solve that? Are you able to solve that and are you getting the answer? Any doubt still you have in financial instrument chapter? If any doubt, you can ask me right now. Financial instrument. Bolo. No doubt? Okay. Then we have also taken share based payment chapter. Share based payment chapter, last day we have not completed. 2 topics were left. So that I will do today at the end of the day. Today only I will take, but at the end of the day. First, today we will start with consolidation chapter. That is more important for revision point of view. Correct? Because from consolidation, business combination, one mandatory question they will ask. Mandatory means compulsory question. Question number 1 of 70 marks, descriptive question. One mandatory question will be there. However, mandatory question can be from financial instrument chapter also. There is no trend on that ki mandatory question will be always from consolidation business combination. It can be from financial instrument chapter or any other chapter also. But as per the trend or whatever MTP they have given or last attempt exam question, it is quite possible that consolidation or business combination can be one compulsory question. Okay. Now, already I have said that for consolidation, the way of doing the question, solving the question is different for different faculties. Even though if you have referred ICI solution, for different question, they have thoda sa different type of pattern. So there is no standard rules for any format. Correct? Whatever format, whatever way, means format not, whatever working note I might be doing, that might be different from your way of doing working note. But the concept remains same. Concept is not going to change for any type of working note, whether I am doing or any other faculty doing, the concept remains same. Now, when I say consolidated financial statement, why it become for us difficult from examination point of view? First is time constraint. First is time constraint. Whether you are able to do the entire solution with working note and balance sheet, and if notes to account is also required, so with notes to account, whether you are able to do it 30 minutes, the maximum time is 30 minutes. You can't go beyond 30 minutes in this particular question. If you are going beyond 30 minutes, means you are not able to complete 100 marks paper. Correct now? So 30 minutes I am saying maximum minute. Maximum. Minimum should be what? You should be able to solve that in 22 to 25 minutes. The minimum time I am saying. Correct? Means simple questions should be done in 20 to 25 minutes. Thoda sa complicated question, you can take maximum to maximum 30 minutes, not beyond that. If you are going beyond that, means you are taking 45 minutes, 50 minutes and doing correct also. No use, because then you are not able to attempt 10 to 20 marks other questions. Okay? So the target should be 30 minutes, not more than that. I will say less than that. This is one of the reasons why we are not able to do it correctly. Because of what? Because of we are in hurry, or we are not able to concentrate, or we do some small mistake and the entire solution become wrong. Second point, what I have understood in this chapter, if one adjustment you have done wrong, the effect will be in entire solution. Or one information you have wrongly understood, then you will do entire mistake. The third mistake which student do is taking wrong assumption. In this chapter, there are some general assumptions which you can't change. Means your assumption will not be applied. Even though that assumption might be correct from your point of view, but that is not correct from ICI point of view. So So if you are taking some assumption which is not taken by ICI, they are not going to give you marks. So there are some general assumptions. General assumption we cannot change. So actually in exam there are two type of assumptions. One is general assumption. General assumption we cannot change. We need to apply that assumption only in exam. And there are some assumptions which are not general assumption, which can change depending upon of what situation. So that assumption can vary from ICA solution. Correct? So in this chapter normally there are many general assumptions. If you are changing that, ICA will never give marks. So that is also one possible reason why ICA may deduct marks. Even though you think your assumption is correct, but ICA is not going to give you marks. So let us concentrate on this all important point, which is important from examination point of view. Got this point? Now when I say consolidated financial statement, so actually there are three IND AS. Three IND AS means what? One is IND AS 110, that is for subsidiary. That is for subsidiary. Then second is what? Joint arrangement, that is IND AS 111. IND AS 111. And then investment in associate and joint venture, that is IND AS 28. So these three will be taken as together. These three IND AS will be taken as together in this chapter. Correct? However, the starting point means when I say consolidated financial statement with subsidiary, the starting point of this chapter is nothing but IND AS 103, because the formation of subsidiary is one type of business combination. Means whenever we calculate goodwill or gain on bargain purchase for subsidiary company on the date of acquisition, that is calculated as per IND AS 103. So starting point of this chapter is nothing but IND AS 103. But you all have done business combination, you know about business combination. So we can start this chapter without doing business combination also. Correct? So let us start this chapter. One more point, there is one more IND AS 27. IND AS 27 is for separate financial statement. That is not so much important from examination point of view, but MCQs, with MCQs introduction to all chapters are important. That chapter might be important for MCQ, but that is very simple. If you go through by your own, you will be able to understand. However, we will be also discussing some part of that with our discussion. The separate financial statement will be prepared as per IND AS 27. Correct? And there is one more IND AS in this related to this chapter only, that is IND AS 112. IND AS 112 is for disclosure part. Now disclosure part, normally we say they will not ask anything about disclosure in this chapter. So that is not important from examination point of view. So that will not touch because they will not ask the direct question, write disclosures about this chapter. That is not possible because only the marks is 100 marks. In 100 also 30 is what MCQ, 70 marks. Now scope is not there to ask that type of question. There is no such scope. Correct? So that chapter is not important, not at all important from examination point of view. If they are asking that question, it means it is difficult for everyone. Don't worry about that. Okay, understood. Now let us start with the chapter. So when we are saying for subsidiary, first we'll start with subsidiary, then we'll go to associate and joint venture. So first we'll start with subsidiaries. So following working notes, when we prepare consolidated financial statement, what are the working note? Yeah, what are the important point which we need to understand, that we need to first analyze. First is fair value adjustment. Fair value adjustment means what? We all know that the assets and liability of subsidiary company means acquiree, will be recognized in the books of acquirer. Acquirer means parent company at fair value on the date of acquisition. Because it is recognized at fair value, so we need to do some fair value adjustment. This becomes the first working note. Means you might be doing it as a last working note, but I do as a first working note. So that may change, the order may change, the way of preparation may change, but the concept remains same now. So you might be doing last working note. I am doing what? First working note. That might be a difference. Got this point? So this become your first working note from my point of view. Then we need to prepare one analysis of profit. Analysis of profit, which company? Profit of subsidiary company. So when I say analysis of profit of subsidiary company, this is fair value adjustment of which company? INA of subsidiary company. Means all working note is related to what? Subsidiary company. Means for parent company we don't prepare any working note until there is some error in the books of parent company. If there is some error in the books of parent company, that need to be rectified. Apart from that, no adjustment is required in the separate books of parent company. Understood what I am saying? Analysis of profit of which company? Subsidiary company. In that there are some adjustment required. So we need to understand about abnormal loss. if given in the question. We need to understand about dividend declared by subsidiary company, that we need to understand. Then bonus shares declared by subsidiary company, that we need to understand. Then there is some error maybe in the books of subsidiary company, that we need to understand. So these all adjustment we need to understand ki what is the effect of that adjustment in our working note. Understood? Then after that we need to prepare one statement of net asset. Most of the faculty don't prepare statement of net asset, correct? But I prepare statement of net asset to make it more simple, correct? So if you are not preparing, so you might be giving direct effect. You might be giving direct effect in your other working note. But I prepare one statement of net asset, you will be able to understand why I am preparing, correct? So statement of net asset will also prepare. How many of you are not preparing statement of net asset? All are preparing. All are preparing. Statement of net asset, everyone is preparing. I am asking how many of you are not preparing statement of net asset in your previous? Okay. We are not preparing now. Others all are preparing. You don't remember only. You don't remember. I am here to interact with you. Please interact. Then what is the use of this face-to-face class? Then the better you watch in virtual class only. Interact with me. Interact. How many of you are not preparing statement of net asset? Others are preparing. Bola sir, we don't remember. Bol? Preparing. Chal. The statement net asset of subsidiary company will be prepared. Then NCI measurement. NCI measurement ki how to measure NCI. So IND AS 103 says that NCI will measure by two methods. One is fair value method. Second is proportionate share in INA method. So what is proportionate share in INA method? What is fair value method? We need to discuss. Then goodwill or gain on bargain purchase. How to calculate goodwill or gain on bargain purchase? That we need to understand. Then impairment loss on goodwill. If suppose there is some impairment loss on goodwill, impairment loss is calculated as per which IND AS? IND AS 36. IND AS 36. So that might be also included in this chapter. So how to calculate impairment loss on goodwill, that we need to understand. Then remeasurement gain or loss on previously held equity interest. There is one concept is step acquisition. Step acquisition means multiple acquisition to obtain control. Multiple acquisition to obtain control. So if that is the case, how to calculate remeasurement gain or loss on previously held equity interest. Then we need to also understand about unrealized profit on unsold stock or asset due to some intra-group transaction. Intra-group means transaction between parent company and subsidiary company. Then balance, we need to also find out balance of other equity and NCI. What will be the balance of other equity and NCI on the date of consolidation? On the date of consolidation. And the last is cancellation of intercompany debt. So this much adjustments are required. Now all adjustment will not be given in the question. Out of these, few adjustment might be given, few adjustment might not be given. Correct? So this is the entire adjustment from examination point of view. These are the adjustment which may be asked in exam. If you understood this all adjustment, so can you say any question you can do it? So you need to understand adjustment, not question. Question will remain same with adjustment only. So let us understand how to apply this all adjustment. Before that, I will just want to ask you one thing. Whenever this chapter, any questions given, so you need to find out two dates. One is known as date of acquisition. Date of acquisition. One is known as date of consolidation. There are two dates. Date of consolidation means when you are preparing the consolidated financial statement. So suppose you are preparing on 31st March 2025 and the date of acquisition is suppose 1/4/2023. So this is how many period? So 2 year become your post acquisition period. This become what? Post acquisition period. Correct? And can you say before acquisition it is what? Pre-acquisition period. Pre-acquisition period. So in this chapter normally I will say pre-acquisition period, post-acquisition period. I hope you have understood what is pre and what is post-acquisition period. Now normally in exam till now whatever question they have given, post-acquisition period is normally examination till now whatever question they have given is 1 year. But till now they have not asked for 2 year, 3 year, but that can be also a possible situation. The post-acquisition period can be more than 1 year. Post-acquisition period can be more than 1 year. Understood? Correct. Now, sometime what happen? They give date of acquisition during the year. Date of acquisition during the year. Correct. So this become date of consolidation. Then the post-acquisition period is only 6 months. Then the post-acquisition period is only 6 months. In that case, what we do? We divide the entire profit of subsidiary company, entire profit of subsidiary company of that particular year in pre and post acquisition period. That adjustment is known as time adjustment. And we allocate the profit in which ratio? Time ratio. We allocate the profit in which ratio? Time ratio. It can be 6:6, it can be 3:9, it can be 2:10. Correct na? Anything as per the information given in the question. Chalega. So this become a basic point which everyone knows. Because CA Inter may also you have done consolidation. So because in CA Inter there was consolidation, so it should not be difficult in CA final. It should not become difficult in CA final. But why it become difficult in CA final? You know? Why it become difficult in CA final? You know? Huh? No. Adjustment is more difficult. We teach in CA Inter more adjustment. I teach CA Inter also na. CA Inter mein I can say in CA Inter this is tough chapter. I can say, but in CA final it is not a tough chapter. Why it become tough chapter? You know? चुप रहना मेरे को बोलने दे. I want to say why it become, you know, bolo yes sir, why पूछो? Why? So I will say why, because everyone is saying complicated. Because we don't decide this chapter is complicated by our own experience. We decide about what others are saying. We ask others whether it is easy, complicated. They say complicated. Acha, complicated. So we think from others' point of view. I have never understood, just try to understand, any student who have not written CA foundation exam, he is saying CA is complicated. How it is complicated? First write exam na, first fail and then say complicated. Without writing exam, everyone is saying complicated. You have not, how many of you have not yet written CA final exam, first attempt? So you have not experienced it na. You have not experienced it. So can you say, till you have not experienced CA final exam by writing, how can you say it is complicated or easy? First we should experience it na. Are bolna yes or no? First you should write and then experience, and then we should say it is easy or complicated. Without writing we are saying it is easy or complicated because others are saying. Others why they are saying? Because they are not able to pass. Because they have not studied. They have not studied from ICA point of view. So because of that reason, they might not be able to succeed in the exam. Quite possible na. Suppose to study FR2, suppose I am just taking example, to complete FR syllabus 300 hours required. But if some student is taking 100 hours, so the passing probability will be high or less? Less only. Now if he passed, very good. But if he failed, it is his mistake na. Yes or no? So we can't say because of his experience that CA become complicated. So that is actually wrong. So everyone says this chapter is complicated because everyone is saying. First you experience, then you say it is complicated or tough. So normally it depends upon our mindset. Now let us start step number 1. What is step number 1? Fair value adjustment for INA of subsidiary company. Normally student do mistake yahin par. And if you have done mistake in this adjustment, your all other working note are affected. This is the most important working note where in exam you may do mistake. Fair value adjustment of INA. Now what is the fair value adjustment of INA? We need to compare fair value of INA on the date of acquisition with the book value of INA on the date of acquisition to find out what is the increase or decrease in the value of asset. What is the increase or decrease in the value of asset? Understood? Very simple. Can you say the fair value on the date of acquisition given and fair value, book value on the date of acquisition given? Very easy. So you need to compare. They may give this type of asset, PP. Normally in most of the question they give only what? PP. Most of the question they give only PP. But they may give inventory also. They may give trade receivable also. They may give trade payable also. They may give provision also. They can give any asset, any liability. Because all asset, all liability need to be recognized at fair value only. In 90% question they will give only PP. But it can be other than PP also. It can be other than PP also. Got this point? So first find out fair value on the date of acquisition. Normally it will be given. 95% question fair value on the date of acquisition will be given. Book value on the date of acquisition. Normally for these will be given. But sometimes they confuse you with for PP. Means they now will trouble you in exam. They will check your presence of mind. They will check your how you are concentrating in exam hall. So normally for inventory, trade receivable, trade payable and provision, they will give book value on the date of acquisition. But for PP, they might not give book value on the date of acquisition. It means you need to find out by doing some back calculation or doing some forward calculation, you need to find out. So how to find out if not given, that I need to explain. But can you see if given, so you can find out either fair value gain or fair value loss. Increase in asset will be what? Gain. And decrease in asset will be loss. Increase in liability will be, and decrease in liability will be gain. So that I have done. Fair value gain means what? Increase in asset, increase in asset, increase in asset, and decrease in liability and decrease in liability. Correct. Fair value loss means what? Decrease in asset, decrease in asset, decrease in asset, increase in liability, increase in liability. So gain you write down in positive amount, loss you write down in negative amount. Correct. Understood. Now after this, whenever you have calculated fair value gain or loss on the date of acquisition, for post acquisition period, because this is the fair value gain or loss on the date of acquisition. Now for the post acquisition period, some adjustment is required. Some adjustments are required. So what are the post acquisition adjustment that we need to understand? For PP, it will be depreciation adjustment. For PP, it will be depreciation adjustment, means just try to understand. Everyone, just suppose this is the date of acquisition and this is the date of consolidation. Correct. Now you have already calculated, suppose 1 lakh is the fair value and the book value is 80,000. So what is the fair value gain? 20,000 is the fair value gain. Now during post acquisition period, subsidiary company has already charged depreciation of which amount? 80,000. But parent company will charge depreciation of which amount? 1 lakh. Therefore, can I say from parent company point of view, we need to calculate additional depreciation on 20,000. Additional depreciation on 20,000. Similarly, if there is a fair value loss, so there will be some saving in depreciation. Saving in depreciation during post acquisition period. So can you say additional depreciation will decrease post acquisition profit and saving in depreciation will increase post acquisition profit of which company? Subsidiary company. Of which company? Subsidiary company. This much you have understood. Similarly, suppose there was inventory. 1 lakh was inventory and the book value of inventory was 80,000. So what is the fair value gain? 20,000. Now if it remain unsold during the period, if it remain unsold during the period, so unsold means what? This remain 1 lakh and this remain 80,000 and this is 20,000. So can you see there is no post acquisition adjustment because it remained unsold. But suppose this was sold. So can you see because it was sold, so 80,000 was sold and that will not be a part of balance sheet now. So can you say once the inventory is sold, it become our cost of sales. It become our cost of sales. So can you say as per subsidiary company, what was our cost of sales? But as per parent company, what will be our cost of sales? 1 lakh. So can you say there will be additional cost of sales due to what? Sale of such inventory during which period? Post acquisition period. Post acquisition period. Understood? So can you see if the inventory, if this inventory is sold during post acquisition period, this will increase our cost of sales. If it will increase our cost of sales, our post acquisition profit will decrease. Similarly, if there is a fair value loss, so that will decrease our cost of sales. If that will decrease our cost of sales, it will increase our post acquisition profit of which company? Subsidiary company. Understood? Correct. So simple word I will say, just try to understand. Simple what happened. We need to give post acquisition adjustment. Post acquisition adjustment. Correct. So additional expense, there will be some additional expense during which period? Post acquisition period. Yeah, there will be some additional income during post acquisition period. Understood? There will be some additional expense, yeah, additional income. So for depreciation, either there will be additional depreciation or there will be saving in depreciation. For inventory, there will be either additional cost of sales or decreasing cost of sales. Decreasing cost of sales will increase your post acquisition profit. Similarly, for trade receivable, till now they have not asked for trade receivable, but suppose trade receivable is collected during the period. Collected. So can you say you should minus? If there was fair value gain and there was fair value loss, then plus it. Means in simple word, if this is plus, this will become minus. If this is minus, this will become what? Plus. This will become plus. So if it is collected, reverse it. If it is collected during which period? Reverse it. Similarly, trade payable is paid during which period? Post acquisition period. Reverse it. Means if it was plus, make it what? Minus. If it is minus, make it what? Plus. Are you able to understand? Similarly, provision, if suppose reverse during post acquisition period, provision settled or reverse, either provision will reverse or settle. So if it is reverse or settle, so if it is plus, what you will do? Minus. If it is minus, what you will do? Plus. In simple word, whatever fair value gain or loss is there, if during post acquisition period some adjustment is there, reverse it, and the net amount will remain, whatever net amount is coming, that will come in what? Consolidated balance sheet. Consolidated balance sheet. As simple as, suppose 1 lakh was the fair value gain. If I am saying 1 lakh was the fair value gain for PP, understood what I am saying? And there was additional depreciation of 20,000. So how much will come in the consolidated balance sheet? 1 lakh was fair value gain and there was an additional depreciation of 20,000. So how much will come in consolidated balance sheet? 80,000. So that adjustment will go to what? Consolidated balance sheet. Suppose 1 lakh was fair value gain for inventory and entire inventory was sold. So how much will come in the consolidated balance sheet? 0. It will come 0. Suppose there was a trade receivable fair value gain of 20,000 and out of that 50% collected. 50% collected. So how much will come in CVS? 10,000. Suppose there was trade payable of 1 lakh and nothing was settled, nothing was paid. How much will come in balance sheet? Same amount, same amount. I hope you understand. This is what your fair value adjustment on the date of acquisition. Understood? But in this case, there are following adjustment. Assumption. What are the following assumptions? Let us understand. These assumptions are general assumptions you can't change. Correct? So I have already following assumptions are required if question is silent. You can't take any other assumption. If you are taking any other assumption, that is wrong. So if the rate of depreciation is not given, so can you assume any rate of depreciation? No. Then ignore what? Depreciation adjustment. Assume there is no depreciation during post acquisition period. Understood this point? Correct. Second, if question is silent about depreciation method, suppose they are given 10%. Suppose they have given 10%, but they have not given SLM ki reducing balance method. So which one will you apply? You need to apply SLM or RBM? RBM. Don't read right now. Think whatever you have done, that you say. You need to use SLM or RBM. So if you are doing RBM, it is correct. It is RBM. You can't use SLM if the question is silent. If you are using SLM, then 0 marks. If you are using SLM, then 0 marks. This is general assumption in this chapter. You can't change it. You can't change it. Correct. Then if question is silent about inventory, so inventory remain unsold during post acquisition period. You can't assume it is sold. If the question is silent, always assume inventory remain unsold. Similarly, trade receivable will be assumed to be uncollected during post acquisition period. Similarly, trade payable will be assumed to be unpaid during post acquisition period. These are our general assumptions. Normally, it is quite possible question is silent about inventory, question is silent about receivable, question is silent about trade payable. Correct? This you have understood. Not depreciation adjustment. Here normally student do mistake. Now depreciation adjustment, there can be two type of information. Either they will give remaining useful life. If they will give remaining useful life from the date of acquisition, then to very easy. Whatever fair value gain or loss you have calculated, divided by remaining useful life, multiplied by post acquisition period. Suppose remaining useful life is 5 years and post acquisition period is 2 years. You will do 2 by 5 to find out what? The additional depreciation or saving in depreciation. This is very easy. So whenever remaining useful life is given, apply this formula. But when rate of depreciation is given, then normally students do mistake. Ki rate of depreciation is given. If they have said SLM, then your additional depreciation or saving in depreciation will be fair value gain or loss multiplied by rate of depreciation multiplied by post acquisition period. Means if it is 6 months, to do 6 by 12. Understood what I am saying? So it will be, if SLM do directly fair value gain or loss multiplied by rate of depreciation multiplied by post acquisition period divided by 12. Chalega. But if it is RBM, then you should calculate in this way. First find out fair value minus opening balance of that asset. Opening balance of that asset multiplied by rate of depreciation into post acquisition period divided by 12. Here normally student do mistake. This is dangerous. Correct? Let me take one example. Suppose they can give three type of information. Just try to understand. Suppose this is date of acquisition. This is date of consolidation. This is 1/4/2023. This is 31st March 2024. They have given fair value of PP 1 lakh. Correct? First type of question, they will give you book value as on this date. Book value has been given 70,000. Rate of depreciation is given 10%. Correct? Batao. How to calculate fair value gain loss? Fair value is how much? 1 lakh. 1 lakh. Book value is how much? 70,000 minus 6 month depreciation. We need to find out as on this date. If you are taking 70,000 wrong, 70,000 minus 6 month depreciation. 70,000 minus 6 month depreciation. How much it is coming? 70,000 minus 3,500. How much? 66,500. So what is the fair value gain? 33,500. And because I have not given RBM or SLM, you will use what? RBM. So can you give me additional depreciation? If you can calculate correctly, means you have understood. Can you give me additional depreciation? Normally student do mistake yahin par. And if you have done mistake yahan par, your post acquisition profit is wrong, entire other working note are wrong. What is additional depreciation? Means what you have done? 1 lakh minus what? Minus what? Achha, give me answer. What is your answer? 1675. One answer I got 1675. What is another answer? Everyone getting 1675? You need to respond, otherwise I'll go out of the class. I'm asking, otherwise I can solve now. I know everything. I know everything. I don't require your help. I'm asking because you do mistake. Don't now check my patience level. If you are not responding, I'll go out of the class. Better I will teach virtually only. Correct now? Respond. I'm here to help you. First do mistake. Try to understand that you are doing mistake. Then only you can rectify it. If I will say you will not be able to understand that you are doing mistake, you will say, I don't know everything. Then exam you will do mistake. One mistake, 0 marks. 6 months. Dangerous na? Correct. Now say. One answer I got 1675. Another answer? 3325. Another answer? 1000. Another answer? None of the above. Those who are not calculating, they are saying none of the above. So how many are saying 1500? How many are saying 1675? How many are saying 3325? How many are saying none of the above? There are many people who are not raising hand. None of the above, na? Chalo. If you are not saying, it means something is wrong. Chalo. It means you have understood. Understood. Danger or not? You may be correct, you may be wrong also. One mistake, 14 marks become 1 or 2 marks. Correct? So this is the area where you need to understand. Consolidation, you know how to prepare. You do small mistake. That you need to identify. You think that you don't know consolidation chapter. You know. Everyone knows from CA inter you have done. Correct. So 1 lakh minus, if you have taken this is wrong. It is what? Minus 70,000. Into what? 10%. Into 6/12. What the answer is coming? 1500 is correct. 1500 is correct. I said normally student do mistake yahan par. Abhi right now I will not give the concept behind this because concept mein it requires 1 hour to explain this. But I will not give. The formula is kasam khao. It is what? Fair value minus what? Opening balance. What was the opening balance? 70,000. Opening balance. I can give you explanation because just try to understand. For this 6 months, Parent company will charge depreciation on what? On 1 lakh. But subsidiary company already charged depreciation on what? 7 opening balance only, na? For the entire period 12 months, they will charge depreciation on opening balance. You can understand in this way. Correct now? Yes, sir. But if it is SLM, then directly calculate on which amount? If SLM, then do 33,500 into 10% into what? 6 by 2. If SLM, but SLM you use only when specified in the question. Otherwise, don't use SLM. Otherwise, don't use SLM. Understood? Have you understood? So, what is the formula for RBM? Fair value minus opening balance into what? Rate of depreciation into what? Post acquisition period, whatever has been given. So here just write down, this is only danger, write down, this is danger. If you have already taken the printout, you need to revise this point before exam. Calculation you know, but you need to retain this point before exam. Chalega. I think now it's understood. One more type of question to confuse you, ICI give to confuse. Now, what they will say, this is what? Date of acquisition. This is date of consolidation. This is 6 months, 6 months. And they will give you 1 lakh fair value on this date. Now, they will give you book value as on this date, 80,000. And they have given rate of depreciation 10%. Batao, what you will do? They have not given opening balance. So, in this case, can you say first we'll find out opening balance? Opening balance will be what? This 80,000 divided by what? 90%. Because this 80,000 is 90% of opening balance. So we can find out how much it is coming. 88,888. Then minus what? 6 month depreciation. 6 month depreciation, you can find out book value as on this date. Book value as on this date. So they try to check your presence of mind. They try to check your presence of mind by not giving some direct information. Understood? But easy only. I hope you have understood. In this, though, normally I think you don't do mistake. Chalega? Yes, sir. Got this point? Yes, sir. Now suppose the post acquisition period is 3 years. 3 years. And if it is SLM, then what you will do? How to find out? Opening balance. If it is post acquisition period is 3 years, quite possible, na? Post acquisition period is 3 years. Understood? Then how to find out opening balance? 80,000 divided by 70%. But if it is RBM, then understood, na? Understood? It is not divided by 70%. Correct? Because it is, suppose this is X. So first is 90%, then iska 90%, then iska 90%. Will be what this? Understood? So you need to do back calculation. If you are good in mathematics, you can understand. I hope you have understood. So be careful about this point. Normally they want to confuse you in this point. If you have done this correct, then we can go to next step. I think you have understood whatever I want to say. Fair value adjustment, any doubt? Fair value adjustment, any doubt? No doubt. Means, can you say for fair value gain, what is our journal entry? Can you say this will increase your pre-acquisition profit? It will increase your pre-acquisition profit of which company? Subsidiary company. So we'll pass one journal entry. Asset will increase, all liability will decrease to pre-acquisition profit. For fair value loss, what is the journal entry? Pre-acquisition profit will decrease to asset or liability. Understood? This will be the journal entry. For post-acquisition adjustment, if there is an additional expense, then your post-acquisition profit will decrease. So what journal entry will do? Post-acquisition profit to respective assets to respective liabilities. If there is an additional income during post-acquisition period, so your post-acquisition profit will increase. Then what journal entry? Respective asset, respective liability account debit to post-acquisition profit. Journal entry, even though I don't give, you are able to understand. Chalega? Yes, sir. Once you have done this, then let's come to step number 2. This is the most important working note of this chapter. Most important working note, analysis of profit. Now, analysis of profit of which company? Subsidiary company. Now, when I say profit, profit means reserve and surplus. They will not give you direct information of SOPL. So we need to find out profit earned by subsidiary company during the period by using the reserve and surplus. So normally they give retained earning and general reserve. Normally in all the question 99% they will give retained earning and general reserve. Means they are not going beyond that scope. But ICI is changing the question. Suppose they have given some OCI component of what? Subsidiary company. Till now not asked. Can be asked. Means OCI means what? Either revaluation surplus. It can be foreign currency translation reserve. It can be FB OCI reserve. Any other OCI component. Understood what I am saying? Normally from my point of view they will give revaluation reserve only if they ask. Till now not asked. So that will also come na. That will also come. So first write down retained earning, general reserve and OCI component any other reserve and surplus given. Capital reserve, securities premium, whatever given write down. Normally they don't ask. Correct? In this first write down closing balance. Closing balance will be given in the balance sheet. So this you have taken from balance sheet. Balance sheet of which company? Subsidiary company. Then opening balance will be given in additional information. This will be always given in additional information. This will be always given in additional information. Correct? Suppose additional information not given. Then for retained earning, always assume nil. For retained, suppose additional information, nothing has been given by mistake. So for retained earning, always assume nil. Retained earning, always assume nil. And for other reserve and surplus, assume equal to what? Closing balance. Equal to closing balance. If additional information is silent, that is general assumption. Once again, general assumption you can't change. You can't change. Understood this point? Have you understood this point? Chalega? Understood? So the difference between these two is what? Profit after appropriation. Profit after appropriation. I hope you know about profit after appropriation. Profit after appropriation means profit after dividend, profit after bonus shares, etc., etc., etc. So profit after appropriation. So this become profit after appropriation. But to apply time ratio means to find out pre-acquisition, post-acquisition profit, we want net profit earned during the period. We don't require profit after appropriation. We want what? Net profit earned during that period. It means we need to convert profit after appropriation to net profit earned. Means net profit earned means profit after tax. Profit after tax. Therefore, all appropriation item will be adjusted, will be added back, will be nullified, will be eliminated. Understood? So first, if there is any abnormal loss is not an item of appropriation. But if there is any abnormal loss, can you say abnormal loss will happen at a particular point of time? At a particular point of time. So we cannot assume that abnormal loss is happened throughout the period. Therefore, first we'll find out profit before abnormal loss. Profit before abnormal loss. Till now, this point has not been given in ICA study material. But I am expecting 100% they may ask this type of information in exam. Correct? So if they have given some abnormal loss in the question, first add back abnormal loss. So we'll find out profit before what? Abnormal loss. So you have add back in retained earning because it is an item of SOPL. So add back only in retained earning. Don't add back in general reserve or other comprehensive income. This point have you understood? Correct. Then we'll add all the final dividend paid. Final dividend paid, whatever given. Whatever final dividend paid. During which period? During which period? During the what? During which period? What I am saying? Suppose they have given this year now. This is opening balance. This is closing balance. This is the date of acquisition now. So during this period, post acquisition period not. During this period, because you are finding current year profit. You are here to find out current year profit. So during this period, whatever final dividend paid, add back. Okay, the final dividend is paid in current year. For which year? Previous year. Final dividend paid in current year. For which year? Previous year. So add all final dividend paid. Similarly, any interim dividend paid, if paid during the year, that will be also added. That will be also added, because whether it is final dividend, whether it is interim dividend, both are appropriated in that year only. However, interim dividend related to current year only, and final dividend is related to previous year. Understood? Till now, no question of this nature has been given in ICA study material, but can be asked. Till now, no question of interim dividend has been given in ICA study material, but it can be asked. So, whether final dividend or interim dividend, add back. So, there is no difference between adjustment of final dividend or interim dividend. Chalega? Yes, sir. Then any bonus shares declared. Bonus shares declared. Now, bonus share declared. So, what is the journal entry for bonus shares? What is journal entry for bonus share in the books of company who has allotted bonus shares? Well, fast. It is reserve and surplus account debit to equity share capital. Reserve and surplus, first we use capital redemption reserve if available. If not available, then securities premium. If not available, then we can use general reserve. Correct? But can you say we don't know from which reserve subsidiary company has adjusted bonus share? So they will always inform you that bonus shares has been declared out of which reserve and surplus. They will inform you. If the question is silent, always assume it is from general reserve. Always assume it is from general reserve. Correct? However, normally in exam they will inform you out of general reserve only. Out of general reserve. Even the question is silent, always assume what? General reserve. Question says out of retained earning, then you don't have choice. Then out of retained earning. Correct? But till now no question of that nature has been created. So either they inform you or they don't inform you. If they don't inform you, then also what? General reserve. Are you able to understand what I am saying? But suppose general reserve is not there only, then to out of retained earning only, na? If they have not given any opening balance and closing balance of general reserve, then there is no general reserve, then it will be out of what? Retained earning only. But it cannot be out of OCI component. It cannot be out of OCI component. I hope you are understanding. Correct? So normally, can I say it will be out of general reserve? So add back where? General reserve. Now there can be two situations in exam. Means to trouble you. They will say journal entry has been done. So add back. But if they say कि subsidiary company forgotten to pass journal entry of bonus share, then what you do? No adjustment. If no journal entry, so no add back na. If no journal entry, then no add back. So only add back when it is recorded. In the last two exams, they have asked bonus share, and both exams they have said no journal entry. So there is no need to add back. And if you are adding, entire effect will be wrong. Understood what I am saying? So they play with what? Your mind. They play with your mind. Understood? But simple only. So once again, bonus share you will add back when recorded. If not recorded, then no need to add back. No need to add back. Understood? I hope you have understood this much. At CA final level, you will be able to understand everything. While doing, you will do some mistake. Chalega? Yes, sir. Then any rectification, any error is there. So till now, no question of error in subsidiary company books has been given. But this is also probable, as we are now aware that they are changing the question for consolidation. So all the questions, whatever they have taken, new two questions, they were actually from old scheme of syllabus when AS was in what? In CA final syllabus. That was similar to AS based question. So they are asking that question now. Understood? So in that time, they used to ask error in the books of subsidiary company. So they may give error also. They may give error. So if there is error, either that will increase your profit or decrease in profit as per the information given in the question. Suppose they say ki salary expense not recorded. So that will increase or decrease profit. Decrease profit will do minus. They will say sales not recorded. So it will increase or decrease profit. Increase profit. That you understood because you are expert in rectification, because entire audit you have done that only. Entire audit means in your office, article C, you have done that only now. So that you can understand, but you may forget to do adjustment. You will be able to understand, but you do adjustment plus minus rectified profit. Plus minus rectified profit in retained earning. Okay. Understood? Then any proposed dividend. Proposed dividend. Now you only say if suppose any dividend proposed for current year. Any dividend proposed for current year, what journal entry? Any dividend proposed for current year, what journal entry? No journal entry. No journal entry. Any dividend proposed for current year, no journal entry. So two type of question may ask. They will say proposed but no journal entry done. Thank you very much. It is correct only now. Then ignore that. But they say proposed and journal entry has been done. Then proposed dividend is coming in the balance sheet as a liability. So we need to cancel that proposed dividend because they have not applied IND AS 10. As per IND AS 10, we can't recognize liability for proposed dividend. So we should cancel. Cancellation journal entry is what? Proposed dividend account debit to return and increase what? Return earnings. So we'll do plus proposed dividend if recorded. So can I say this is also an error? This is also an error only. But I am expecting this also because they used to ask this type of adjustment in CA final. Old scheme of syllabus. Old means when there was AS. Correct? Now they are not asking this type of question, but they can ask. So this become what? Your profit earned by subsidiary company. This profit earned by subsidiary company during that year before abnormal loss. Before abnormal loss. Have you understood? So what are the adjustments we have done? First we'll find out closing balance minus opening balance. We'll find out profit after appropriation. First plus what? Abnormal loss. Plus final dividend paid if any. Plus interim dividend paid if any. Plus bonus shares if recorded, if any. Correct? Then proposed dividend if recorded, if any. If any means if given the question, not given, then what you will do? Then last, any error given in the question, it can be plus, it can be minus. It can be plus, it can be minus, depending upon the information given in the question. Understood this much? This become profit earned by subsidiary company before abnormal loss. It is before abnormal loss. Chalega. Now you need to allocate this profit in pre and post acquisition profit as per the information, as per the date of acquisition and date of consolidation. That you need to identify from the question given. It can be 6 month post, it can be 9 month post, it can be 12 month post, entire period is post. Quite possibly entire period is also post. Correct? So you need to allocate. So allocation of profit to pre and post acquisition profit as per the information given in question. So you will do pre and you will do post. Post may write down retain earning, general reserve and OCI. Because pre will be total together. So first write down profit earned and this profit will be allocated in which ratio? Time ratio. On the assumption that profit are earned evenly throughout the year. So that is bakwas assumption, the maha bakwas assumption. But we don't have any choice in exam. Practically we never do in this way. Practically we want actual profit now. Correct? The practically we never do in this way. Therefore I always say this is totally bakwas chapter from CA point of view. Correct? But we need to score what? Marks. We need to score marks. So in this chapter normally they check your presence of mind. Whether you have a power to become CA or not. Because a CA, the most important quality is what? Presence of mind. They should give maximum output in what? Worst condition. Due date is what? Last date, but 1000 files are pending. So we need to be very much efficient in that time now. So that is our best quality. We give our maximum output in what? Worst condition. They want to cross check that only. So whether you have that quality or not. Understood? So pre, can I say, we can allocate to this is pre, this is post, this is pre, this is post, correct? But for OCI, you can't do pre-post. Just try to understand when I am saying revaluation gain. So revaluation gain is uniformly occurred at a point in time. When you will do revaluation, either you will do revaluation at the beginning of the year, or at the mid of the year, or at the end of the year. That revaluation gain is not throughout the year now. Are you able to understand? So any OCI component, don't allocate in pre and post. Till now this type of question has not been asked. OCI component will be as per the information given the question, when that gain or loss occur. That may occur in pre-period, that may occur in post period. Suppose, let me explain. Suppose this is what your opening date 1/4/31st March, and this is what date of acquisition. They say revaluation happened yahan par. So this gain belong to which period? Pre-period. Therefore allocate entire revaluation gain to which period? Pre-period. But suppose they said revaluation gain happened in this period, the entire gain is what? Post period. Normally, if question will be silent, I know question will be silent, always assume post. Always, because revaluation normally we assume at the end of the year. Normally we do at the end of the year if the question is silent. If the question is silent, always assume that revaluation has been done at the end of the year. So entire revaluation gain, entire revaluation loss transfer to what? Post period. If the question is silent. If the question is silent. So that I have done. You can see OCI. If question is silent, always post. Therefore, I have allocated entire to post because I know question will be silent. But question says at the beginning of the year, then it what? Then it become pre. So be careful. Be careful. Chalega. Understood? So OCI I have just introduced on the assumption that if suppose they introduce this item in a new question, be careful. Be careful. So can you say this become pre, total pre, this become post retained earning, post journalism and post OCI. Now in this we'll add opening balance. Can you say opening balance is always pre only? Opening balance will be pre now. So opening balance given in the question will be pre. So add opening balance, add opening balance, add opening balance. So this now become total pre and total post of respective reserve and surplus. Up to this any doubt? Up to this any doubt? So can you say you have already identified pre and post, but can you say now some adjustments are required. Whatever adjustment you have done yahan par, then you do once again reverse it because you have added abnormal loss, but abnormal loss already occurred now. So you should now deduct what? Abnormal loss. Now abnormal loss you should deduct from pre or post as per the date of occurrence. If abnormal loss happened during pre-period, deduct from pre-period. If abnormal loss happened during post-period, deduct from post-period. Means it can be pre, it can be post as per the information given in the question. And question will give you the information. In this question will not be silent. In this question will not be silent. Means identify the date of loss. Find out this is pre-period ki post-period. If it is pre-period, deduct from pre-profit. If it is post-period, deduct from post-profit. Understood? Then dividend paid will be deducted as per the payment date. When it is paid, after acquisition ki before acquisition. Understood what I am saying? After acquisition or before acquisition. So if it is paid after acquisition, deduct from post. If it is paid before acquisition, then deduct from pre. Understood this point? Have you understood this point? Means, let me ask. Normally student do mistake yahan par. Because of CA inter concept. CA inter was thoda different because of AS 13. Because CA inter se you came, CA inter mein we teach in some other way. But in CA final the different concept different because of IND AS. Because of IND AS. And if you apply CA inter concept, so you might do mistake. Let me confuse you now. Let me confuse you. Correct? Now this is the date of acquisition. You have understood whatever I have said. You will do pre-post as per the date of payment. As per date of payment. Now final dividend was paid. Yahan par. This is which year? 24-25. This is which year? 23-24. This is our current year. The final dividend has been paid from which? Is paid for which year? Is paid for 23-24. Means it is declared out of which profit? This profit. Declared out of which profit? Previous year profit, but paid after what? Acquisition. Paid after acquisition. Have you understood? The question will say in this way. If final dividend has been declared out of pre-acquisition profit, paid on this date. They will provide this information. Dividend is declared out of pre-acquisition profit, but paid on which date? On this date. Date will be given 30th June, 30th September, whatever. Correct. Have you understood the information? Now say, deduct from pre ki post. Deduct from pre ki post. Pre ki post. Pre ki post. Chalo, everyone is correct. Means you have understood. So it means it deducted from pre or post as per the date of payment. As per date of payment. Understood? Even though question they have given declared out of pre-acquisition profit. Of course, it declared out of pre-acquisition profit, but paid after what? Post. Paid after acquisition. So see that payment date. See the payment date. Correct? So as per the date of payment. If suppose question में payment date is not given, always assume after acquisition. If this is date of payment is not given, however they will give, normally they give, but by mistake they have not given, which was in one of the exam, I will inform you. So always assume what? Always assume post acquisition period. Always assume post acquisition period. चलेगा? Yes, sir. This also you have understood. This is both for interim dividend as well as final dividend. Both concept remains same for interim dividend and final dividend. Understood? Correct? Yes, sir. Then bonus shares. Can you say bonus shares now, because it is already declared, even though journal entry is not done or journal entry is done, now we'll deduct. So bonus shares will be now deducted whether recorded or not recorded. Whether recorded or not recorded. Whether recorded or not recorded. So less bonus shares. Can you say out of general reserve only? This is my mistake. This should be out of general reserve. Out of general reserve. Because question is silent from general reserve, even the question will mention, they will mention general reserve only. Correct? So out of general reserve. Oh, sorry. It was okay. My mistake. Okay. Out of what? Pre-acquisition profit always. My mistake. This is the post now. Pre-acquisition profit. Always deduct from pre-acquisition profit. Bonus here always deduct from pre-acquisition profit. But bonus here will be given from current year profit or accumulated profit. Accumulated profit. And accumulated profit means what? Pre-acquisition profit. So even though question is silent, however, question will inform you out of pre-acquisition general reserve. Normally question inform out of pre-acquisition general reserve, but even though question is silent, what you will assume? Pre-acquisition general reserve. So it will be always from pre-acquisition general reserve, whether recorded or not recorded. Always pre-reserve, always pre-reserve. Now this become your total pre, this become your total post. Understood? Any doubt? Have you understood? So can you repeat with me what we have done from the beginning? From the beginning, I will say adjustment. You will do plus ki minus. Okay. First, we'll don't see it now. Don't see it. So we'll start. First, we'll find out closing balance and then opening balance. Closing balance, opening balance will be given in the question. You can find out profit after appropriation. First adjustment, abnormal loss. What you do? Add. Add where? Add where? Retained earnings, general reserve, OCI. Then second is what? Bonus shares. If recorded. Bonus shares is recorded. Add where? General reserve. If not recorded, no need to add. Correct. Final dividend. Add where? Retained earnings. Interim dividend. Add where? Retained earnings. Error. Add plus minus as per the information given in the question. Where? Normally it is retained earnings. Correct. Then proposed dividend. If recorded, add where? Retained earnings. They could just try to understand what happened. We have done this much discussion. Right now you are thinking. In exam, if you think a lot, you will do mistake. Correct na? You will think a lot now, you will do mistake. So it means थोड़ा सा क्या होना चाहिए? You need to understand effect and direct effects of them. 1 second, मजा आ रहा है. 1 second. Can we repeat 1 second? Everyone need to respond. First we'll find out closing balance, opening balance, profit after appropriation that you can do. Correct. First बताओ. Abnormal loss. Where? Then proposed dividend is recorded. Add where? Proposed dividend is not recorded. No need. Bonus share recorded. Add general reserve. Bonus share not recorded. Final dividend paid. Interim dividend paid. Rectification of error. Done. So we got what? Profit earned before abnormal loss. Then we'll allocate what? Pre-acquisition profit and post-acquisition profit as per the time ratio given that you need to identify as per the information given in the question. It can be 3:9, it can be whatever. Correct. So that you can allocate. So profit earned you can allocate pre or post. You will do pre, post, in post all retained earning will come, general reserve will come, or OCI may come. Correct. OCI will be always allocated to what? Post. If the question is silent, but it may be pre or post, only pre, only post as per the information given in the question. Once you have allocated, then add opening balance. Opening balance will be always added to what? Pre. Opening balance will be always added to pre. Because opening balance means pre-acquisition period only. Correct? Understood? Then once you have find out to pre, post, then do again all the adjustment. So abnormal loss you will deduct from pre or post. Either pre or post as per the date of occurrence. Dividend paid will be deducted from what? Pre or post as per the date of payment, as per date of payment, correct? Bonus shares you deduct even though recorded or not recorded. Recorded or not recorded. Always from where? Always from pre. Always from pre. Even though question is silent. Even though question is silent. We have done? I think we have done all. Correct? So this become what? Profit as per AOP. As per AOP. Correct? Now general assumption already I have said. If opening balance of retained earning is not given, assume what? Nil. If opening balance of any other reserve is not given, always assume equal to what? Closing balance. You can't assume nil in this case. Okay. Final dividend is declared out of what? Previous year profit, but will be paid in current year either after or before the date of acquisition. It can be paid after or before the date of acquisition as per the information given in the question. But if question is silent, always assume paid after what? If the question date of payment is not given, what will assume? Always after the date of acquisition. If dividend are declared and paid after the date of acquisition, if dividend is declared and paid after the date of acquisition, means the parent company will receive dividend. Parent company will receive dividend now. And if it is declared before acquisition, then parent company will not receive dividend. Dangerous. Correct? So it will be received by parent company, will be credited to his PL account. Will be credited to his PL account as per separate finance statement as per IND AS 27. Understood? So whenever dividend is declared and paid after acquisition, it will be received by parent company, and parent company will record where? As an income in profit and loss account. So if recorded correctly, no separate adjustment is required. If it is already transferred to PL account, no separate adjustment required, because this is not an error. This is not an error. So it will be recorded where? In PL. If recorded correctly, thank you very much. If recorded correctly, then thank you very much. Understood? Correct. But be careful, till now that type of question has not been given. If dividend is paid before acquisition, this type of question till now not given. If dividend is paid before date of acquisition, then it will not be received by parent company. So if it is not received by parent company, the question of recording will not arise. The question of recording will not arise. So be careful in that situation. Understood? However, no question till now they have asked like that. Now, if question is silent about OCI of subsidiary company, example revaluation gain as per IND AS 16, always assume such OCI occurred entirely during what? Post-pay. These are general assumption. General assumption. Final dividend is always calculated. Achha, one more special point. Special point where student will do mistake. Now suppose they have given this is the date, opening date, this might be date of acquisition, this might be 31st March, and they have said bonus shares declared. If no journal entry, then so if opening is 1 lakh, so closing will be 1 lakh equity share capital. Because opening 1 lakh equity share capital, closing will be 1 lakh. But if journal entry has been done, no journal entry has been done. So if opening is 1 lakh, so closing might be 1,20,000, 20,000 is bonus shares. Are you able to understand this? So if journal entry not done, so normally they will not provide this information. They provide always what? This information. They will not provide this information in exam. They will provide balance sheet. Balance sheet as on the date of consolidation they will provide. So they have provided this information. Understood what I am saying? Now my question to you all, suppose final dividend paid at a rate of 10%. At the rate of 10%. That is for which year? Previous year. So previous year, whether previous year there was bonus share? No. So if no journal entry you are saved, then the 10% of 1 lakh you have done, correct ho gaya. But if journal entry has been done, till now this type of question has not been asked in exam. If journal entry has been done, so can you calculate on 1,20,000? No. Because this final dividend is for which year? Previous year. In previous year there was no bonus share. Therefore be careful. Be careful for final dividend. Therefore we need to first make it what? Before bonus year. As per the information given in the question, you can convert that I know. Correct. So suppose you already understood 1 lakh is what? Before bonus year. So on 1 lakh you need to calculate what? Dividend. Understood. 1 second. Suppose you wrongly calculated, entire AOP is wrong or not? Entire AOP is wrong, Sona is wrong, goodwill is wrong, everything is wrong. Got this point? So one point, this chapter become difficult. But if you understood, you will not make mistake. Final dividend is always calculated on share capital before what? Before bonus share. Before bonus share. Chalega. This till now not asked in exam, but this was one favorite point in AS based consolidation, which I teach in CA Inter now. CA Inter we teach everything because CA Inter is AS based now. Understood? Yes, sir. Then we'll come to statement of net asset. Statement of net asset I have designed in such a way so that all questions can be done. You might use some other format, but don't worry. Statement of net asset I have designed in such a way that all questions can be done. Any question of any nature. Okay. Date of acquisition, post, date of consolidation. So date of acquisition you can write down. Post with this will come retained earning, general reserve, OCI, and date of consolidation will come. Correct. You can write down equity share capital because closing balance will come. So this you write down same only. They will give you closing balance of equity share capital. So you write down same only now. Understood? Now for bonus share, if they have given bonus share recorded, so but this equity share capital is before or after bonus share? One second. Listen. Because once I have done, then only I will take all the questions. Correct now? In class, so we do step by step, one adjustment, then two questions, then one adjustment, then two questions, then one adjustment, then two questions. But right now, all adjustment, all questions. This is a revision class now. So all adjustment together, all question together. Understood? So thoda sa become difficult if you are doing for the first time. Okay? But if you have done previously, you are able to understand everything whatever I am saying. So if bonus share already recorded, but this equity share capital, whatever has been given, this is before or after bonus share? After bonus share. But if bonus share is not recorded, this is before or after? Before bonus share. So be careful for identifying that. Understood? Not able to understand? One second I repeat. Bonus share journal entry not done. So whatever equity share coming in the balance sheet of subsidiary company, that is before or after? Before bonus share. If journal entry not done, but journal entry done, then after bonus share. That you need to identify by your own. So this can be before, this can be after. This can be before, it can be after bonus share. Correct now. Now you only say, if bonus share already recorded, will you again add bonus shares? No. So no adjustment. But if bonus share not recorded, will you add bonus shares? Yes. So bonus share capital add if not recorded. If not recorded. Understood? If recorded, to already recorded now, why you are adding again? Why you are adding again? But if not recorded, you need to add it now. You need to add it. Add from what? Pre, date of acquisition and date of consolidation. Means this formula is what? This plus this will be equal to this. Date of acquisition plus post will be equal to what? Date of consolidation. What is the objective of this? To find out net asset on the date of acquisition and net asset on the date of consolidation. Correct? So can you say we are using this, we are net asset, we are calculating. This net asset can be calculated by two approaches. Either by net asset approach or equity approach. Equity approach means what? Equity share capital plus reserve and surplus plus all other equity whatever given. Or asset minus liability. Or do asset minus liability. What is better? But asset minus liability is better or equity share capital plus reserve and surplus is better? Hat na like asset minus liability is better na. Why equity? Don't see this format now. If I am saying find out net asset, in any other question, I am saying find net asset, what do you do? All asset minus all liability? Or you do what? Equity share capital plus reserve and surplus. Are bolna re? All asset minus all liability. But what happened in this chapter? They will not provide you the information of asset and liability on the date of acquisition. Because they are not providing, we don't have any other option. Therefore, we are preparing net asset statement based on equity approach because they are not providing the information of what? All asset minus all liability on the date of acquisition. But if they give, we'll use all asset minus all liability at fair value. Are bolna re? Understood what I am saying? In business combination chapter, this is nothing but business combination only. In business combination, they provide all asset minus all liability. There, so you don't use equity share capital. Maja aa raha? They do INA means what? All asset minus all liability. INA means what? Identifiable net asset. So normally we do all asset minus all liability. But in this chapter, they will not give a balance sheet on the date of acquisition. Because they are not giving balance sheet on the date of acquisition, we don't have any option. Therefore, we are using what? Equity approach. So this is only from exam point of view. Only from exam point of view. Practically, you will take all asset minus all liability on the date of acquisition. Understood this point? So equity share capital plus bonus share if not recorded, plus all other equity as per AOP. As per AOP means this will come. This already we calculated now. This will go to what? Date of acquisition. This will go to post retained earning. This will go to post general reserve. This will go to post OCI. Understood? So this will come as per the previous step. As per the previous step. And this will become total. Understood? Have you understood? Have you understood? Now, just try to understand. So my question to you all, if you have taken equity share capital plus reserve and surplus of subsidiary company, this subsidiary company, na? So this is book value of INA or fair value of INA? Don't see. Either don't see. Everything written in this book value of INA or fair value of INA? Book value of INA, but we want what? Fair value of INA. Therefore, working note number 1, fair value adjustment now will be considered. Correct now. We need to convert book value into what? Fair value. Book value into fair value. So this is the book value means carrying amount of INA. This is carrying amount of INA as per subsidiary company balance sheet. But we want fair value of INA. So therefore now we'll do fair value adjustment as per working note number 1. As per working note number 1. Correct. So if there is an increase in PP, we'll add. If there is a decrease in PP, we'll what? Deduct. If there is an increase in inventory, we'll add. Decrease in PP, we'll deduct. Increase in trade receivable, we'll add. Decrease in trade receivable, we'll deduct. Increase in trade payable, deduct now, because it is a fair value loss. Correct. And decrease in trade payable, add. Increase in provision, deduct. Decrease in provision, normally I see students do this plus minus mistake only. Pata nahi kya hota hai. Right now you are saying everything correct, but in exam plus become minus, minus become plus. I don't know why. Have you understood this? Correct. Can you say we need to do post acquisition adjustment also? Already we have done for PP depreciation, for inventory cost of sales, for trade is collected, for trade payable paid, for provision reverse. So we need to reverse it now. So if this is what depreciation adjustment, post acquisition depreciation adjustment, that will either increase or decrease post acquisition profit. This is what cost of sales adjustment if sold. Are you able to understand? This is if collected adjustment, if paid adjustment, if reverse adjustment. Means simple word. If this is plus, this is minus. अरे बोलना रही. Correct ना? Means थोड़ा सा examination point of view file से. Correct. So can you say if this is plus, so this will be minus. If this is minus, so this will be plus only. So be careful in exam. If this is plus, this will be minus. And the net effect will come where? On the date of consolidation. Net effect will come on the date of consolidation. Understood? This you have understood? Some of the teacher or in ICS study material, this adjustment has been done in AOP only. But I don't prefer AOP because if you do in AOP, you might be confused with some other working note. So from my point of view, adjustment should be done here to make it more simplified. And you can understand also book value we are converting into what? Fair value. But in your ICS study material or many faculty do adjustment in AOP means they will add pre-acquisition profit or loss here and post-acquisition adjustment deducted from our retained earnings. You might be doing that. So that is also correct. You can do that. That is your choice. So if you have done there, so automatically now whatever will come after adjustment, that will be fair value only. But I will explain you what is the advantage of this. I will explain you what is the advantage of this. Understood? Correct? This much any doubt? Fair value of INA. What I will do, I will take one question up to this. because after that there is one more working note. You will be confused if you are not able to understand this much. I will take one question up to this which have been asked in exam 3 times. How many times? Of how many marks? 16 marks. Then also students say it is complicated. I don't understand why. Let me take one question. We'll do together. You will help me. I will not refer my solution. I will also do with you. But with fast. Very fast. Without any handwriting. Good handwriting. Bad handwriting will do. Chalega? Okay? Yes, sir. So let me come to that question. Come to question number 23. Ram Limited acquired 60% of ordinary shares of 100 of Krishna Limited. 60% they have acquired. How many shares they have acquired? 60%. On 1st October 2001. This is what date of? On 31st March 2002, the summarized balance sheet of two companies are given. Chalega? The balance sheet is given, you can read. Then retained earning of Krishna Limited showed a credit balance of 60,000 on 1st April. This is opening balance given. Out of which a dividend of 10% was paid on 1st November. 1st November is before or after? After. But this was declared from pre-acquisition profit. Has Ram Limited has credited the dividend received to retained earning. Retained earning is PL. PL se crediting. So correct or wrong? Correct only. Now they will transfer it to PL only. They will transfer to PL, and from PL it will go where? Retained earning. So this is not an error. This is not an error. Fair value of plant and machinery on 1st October 2001 was 4 lakh. The rate of depreciation of plant and machinery 10%. But the SLM RBM. RBM. Following are the changes in fair value. Changes in fair value means what? Increase, decrease. Means they have given changes. Thank you very much. Na? Thank you very much. We want changes only. Correct. As per respective IND AS from the book value as on 1st October 2000, which are to be considered by consolidated balance sheet. So trade payable, they have given 20,000. Land and building 2 lakh. Inventory 30,000. But if they have given positive, it is increase or decrease? So this is to increase. This is to increase. This is what? Increase ki decrease? Huh? Means it is gain or loss? Very good. Very good. Positive means increase. Negative means decrease. Positive means increase. Negative means, so positive does not mean gain. Positive does not mean gain. Positive means this is what, increase means loss. This is loss. Chalega? Understood, yes sir. Note, it may be assumed that inventory is still unsold, even though not given, we'll assume that only. General assumption. Trade payable are not yet sold. Thank you very much. We know this point. If not given, we'll assume that only. Also assume other reserve. Closing balance was, opening balance was not given. We'll assume what? Equal to closing balance. So this, they have given general assumption only. They have given general assumption. Even though not given, we'll assume this only. Have been asked in exam. Similar question have been asked for 3 times, 16 marks. Can we do? First you will do what? Fast karenge, हाँ? Fast. Working note number 1 is what? Fair value adjustment. So we have what? Property, plant and machinery. Then they have given inventory na? Sorry. Land and building na? Land and building. Inventory, trade payable. What is the fair value on the date of acquisition? Plant and machinery, 4 lakh. What is the book value given? Book value on the date of acquisition? Date of acquisition is 1st October. We want book value on 1st October. Whether given? You don't have question. You don't have question. You have not taken printout. Already I have informed take printout. But whether date of acquisition book value is given? Not given. Opening balance is given. Opening balance also not given. So it means closing balance will be given. Closing balance given how much? 3 lakh. No, it is land and building. Plant and machinery 2 lakh 70,000. So closing balance given. So we'll do back calculation. So first we'll find out opening balance. So 2 lakh 70,000 divided by 90%. How much? 3 lakh. 3 lakh is opening balance. This is opening balance, but we want book value on the date of acquisition. We'll provide how many month depreciation? 1st October. From 1st April to 1st October, 6 months. 6 month depreciation will be how much? 15,000. 15,000. This will become 2 lakh 85,000. So what is the fair value gain? 1 lakh 15,000. 1 lakh 15,000. Correct? Understood? Now we'll do minus what? Additional depreciation. For which period? Post acquisition. Post acquisition period is how many months? 6 months. 6 months will do 10%. Find out 10% depreciation how much? 10% depreciation how much? Everyone will calculate. Everyone, live student, you also calculate. Don't see me. I am looking good, I know. Don't see me. Please calculate. How much? 5,000. 5,000 is correct or wrong? From my point, it's correct only because I remember the solution. So, batao, what you have done? 4 lakh minus what? Minus 3 lakh. Very good. Anyone taking 2 lakh 85,000 wrong? Into what? 10%. Into what? 6 by 12. So now it is coming what? Net changes what? Net changes 1 lakh 10,000. Correct. Understood. Now inventory, can you say they have given changes only? Land and building. What is the changes given? 2 lakh given now. So this we don't require, this we don't require. We want changes, and they have given changes. Thank you very much. For inventory, how much given? 30,000. For trade payable, how much given? But is the loss. Correct. And can you say for land and building, they have not given depreciation rate? Ignore. Rate of depreciation not given? Ignore. For inventory, they have given unsold. Ignore. For trade payable, they have said unsettled. Ignore. Means net changes also become how much? 2 lakh 30,000 and 20,000. Suppose they would have given this inventory is sold, so minus 30,000 in post acquisition period. Suppose they say 50% inventory sold, then minus 15,000. Suppose say this out of this trade payable 40% paid, so 40% minus 60% remain in the balance sheet. Very common sense topic, I will say. Common sense. Apply common sense. Got this point? This chapter become difficult because we think without common sense. I think very much simple. Okay, working note number 1 done. No trouble. Working note number 2. Working note number 2 is what? AOP. Working note number 2 is AOP. So we have two retainer. One is retained earning and second is general reserve. Can you give me closing balance fast? As per the balance sheet. As per the balance sheet, it is how much? 1,64,000 and 2 lakh. 1,64,000 and 1,64,000 and 2 lakh. Opening balance is given only for what? Retained earning. How much given? 60,000. And this is not given. We'll assume at null hai. Who said 0? I heard 0. 2 lakh na? 2 lakh. For other reserve, always assume both are same. Correct. So this become what is profit after appropriation? How much? 1,04,000. This is nil. Now think in exam. ऐसे think. Any abnormal loss? Not. नहीं. Add back. Not given na. Add back what? Add back. Anything add back. Not given. So ignore. Any dividend? No. Yes na. One final dividend paid. So plus what? Final dividend paid. What is the rate given? 10% of what? Equity share capital of which company? Subsidiary company. What is the equity share capital? 4 lakh. 4 lakh. So it becomes 40,000. So final dividend paid also done. Any error given? Not given. Correct. Any bonus here given? Any proposed dividend given? nothing given. हो गया, खत्म. Only one adjustment. 16 marks question. Means this type of question, believe me, I do in CA Inter. CA Inter में I do. And they ask also in exam. This type of questions. But in CA final, we make it complicated by our own. We don't study, we don't practice because we don't have time. This is the only point. If you practice, very simple. This become 1,44,000 nil. Now, can you say this become what? Now we'll allocate what? Everything done. Now we'll allocate pre, post. In post you write down retained earning and general reserve. But the first allocate based on time ratio. So 1,44,000 we allocate in which ratio? 6 months, 6 months, 72, 72. So 72,000 and 72,000. Here general reserve we don't have. So general reserve is nothing, nil nil. Then we'll add opening balance. Opening balance of retained earnings how much? 60,000. And general reserve opening balance how much? 2 lakh. Post is this. Total become how much? Total 3,32,000. It is not good that I am writing and you are not writing. I am not there to give exam. Huh? Understood? If you are not writing, means you are thinking that you will be right. When you write, you think. When you don't write, you don't think. Then you say, acha, I know, acha, I know. But when you write, you think that whether you know or you don't know. Right? In exam, you write or you see. Right. Writing is only the best habit. Right. If I am writing, you also write. I am writing now. For my purpose or your purpose? Your purpose. You also write. Don't become CA. Don't become CA right now. You are CA student. You are not CA na. Are bola, you are CA or CA student. So behave like student. Don't behave like auditor. You think you are auditor. Correct? Behave like CA student till you pass CA examination. Okay? Understood? Yeah. Now this happened. Now adjustment. Only one adjustment. Final dividend paid. But from pre ki post. Pre ki post. Post. Why? Because it is paid after acquisition. So how much paid? 40,000 paid. Minus kar do. No other adjustment. It is 3,32,000. 72 minus 40 how much? 20. 32,000 nil. Done. AOP done. Now let us come to Sona. Statement of net asset. So working note number 3. Statement of net asset. We write on date of acquisition, date of consolidation. Date of acquisition is 1st October. Post May, it will be only retained earning because there is nothing for general reserve. But the equity share capital how much? 4 lakh and 4 lakh. 4 lakh and 4 lakh. Then other equity, pre is how much? Already we calculated. 3 lakh 32,000. Post retained earning is how much? Total is what? This must be always equal to closing balance. You can check. If it is not coming closing balance, means you are doing mistake. What is the total of this? If it is not coming, you can cross check. You are doing some calculation mistake or not. Sometimes we do calculation mistake. So you can cross check whether you have done correct or wrong. So this is the cross check point. So if you have done some mistake, first rectify that, then proceed. So it should be always equal to closing balance. Until there is some error. If there is some error, so that will not match. So that you will be able to understand this is after rectifying the error. Now done. How much is given? 7 lakh 32,000. 32,000. And this is how much? 7 lakh 64,000. Now we'll do plus minus fair value adjustment. For PP, it was 1 lakh 15,000 and 5,000 and 1 lakh 10,000. This is minus. For land and building, it was 2 lakh. 2 lakh now. This is nil. This is what? 2 lakh. For inventory, it was how much? 30,000. Then nil. It is what? 30,000. Then for trade payable, it was plus minus minus. This is nil. This is what? Minus. Can you give me the total? I am writing very fast, huh? Because we need to do many questions. So don't think about my handwriting. My handwriting is very good in normal class, huh? Also my handwriting. This handwriting is good, na? This is my normal handwriting. Okay, this is my bad handwriting. How much? 10,57,000. This is 32 minus 5. 27,000. This is what? This minus this. 10 lakh. 30,000. 10,84,000. 10,84,000. Correct. Now this will be allocated to what? Parent company and NCI. Parent company and NCI in their respective ratio, means 60% and 40%. Allocate. $16,000 and 16,200. Okay. 16,200 and 10,800. Chalega. Okay. Now we'll do calculation of goodwill or gain on bargain purchase. I will explain that step also, but you know this point. So we'll first find out what is purchase consideration. Purchase consideration will be equal to cost price of investment in the balance sheet. So in this chapter, normally PC is given. Normally PC is given. So PC will be what? Cost price of investment, which is 8 lakh. 8 lakh. This is purchase consideration, means fair value of consideration paid. Fair value of consideration paid to obtain control. So for 60%, how much has been paid? 8 lakh. 8 lakh. Then we'll add value of NCI. Value of NCI will be two method: fair value method or Pasinda method, proportionate share in INA method. If nothing has been given, always use proportionate share in INA method. So in this question, no information about fair value has been given. We'll use proportionate share in INA method. Proportionate share in INA method means 40% of fair value of INA on the date of acquisition. So now understood what is the importance of this. We are getting yahi par. This simplified working note. So 10,57,000. So do 10,57,000. This is proportionate share in INA method. Proportionate share in INA method. How much it is coming? 22,800. Can you give me the total? 12 lakh 20 minus what? Fair value of INA on the date of acquisition. So 10,57,000. What is the goodwill? 1 lakh. This is the goodwill. Understood? The last working note. Last working note is what? Other equity and NCI. So other equity may we have what? Retained earning, general reserve and NCI. NCI will be shown in the balance sheet separately from these two. But we'll make one working note. Now first we write down balance of these two from parent company balance sheet. From parent company balance sheet. So parent company balance sheet is where? There. So parent company balance sheet, this is 1,14,400. This is 6 lakh. Correct now. So write down 1,14,000 and 6 lakh. And this balance will be from this working note. This is 4,22,800. This become initial value on the date of acquisition. So this become 4,22,800. Means this always take from previous working note. Previous working note. This from balance of parent company balance sheet. Chalega. In this add what? Share in profit of which company? Subsidiary company. Already we allocated 16,200 and 10,800. Done. No other adjustment. In this question, there is no URP, unrealized profit, nothing is there. What is this total? 1 lakh. And this is what? Done. Now prepare balance sheet. Balance sheet, I know you can do it because plus only. Okay. So I'm not be concentrating on balance sheet. Working note done, then you can prepare balance sheet. But for 16 marks, simple question, difficult question. Now, if you are doing one mistake initially in fair value adjustment, if you have done one mistake, it will be affected in AOP, SONA, goodwill, everything is wrong. So avoid that mistake. Got this point? Correct? Up to this, any doubt? I think you have understood all the thing. Chalo, done. So we have done up to this. Now, recent time, they have given one question till now not asked in exam, deferred tax calculation in one of the question. However, I was expecting from the beginning that someday they will introduce that type of question. They have introduced one question in RTP, but till now not asked. Correct? So if they ask deferred tax adjustment, we need to apply IND AS 12. Now, IND AS 12 says that whenever INA is recognized at fair value, correct? So for business combination transaction, the tax base of INA will not change. The tax base will be the tax base of acquiring. So because tax base remains same, but carrying amount change because of fair value adjustment, so there will be some temporary difference at the beginning only. So that can be taxable, that can be deductible. If taxable, create DTL. If deductible, then create DTA on initial recognition of INA. And that will be adjusted with goodwill or gain or bargain purchase. Means that DT or DTL will not be transferred to PL. That will be adjusted with goodwill or gain or bargain purchase. It means in simple word, in this type of question, they will not give you tax base. If the tax base is not given, we assume tax base is equal to carrying amount of INA. Carrying amount of INA. If the tax base is given, then we need to write down tax base. What is the formula? Formula is what? Deferred tax adjustment. First find out fair value of INA on the date of acquisition. This is this only. This amount, na? Sorry, this amount. Fair value of INA on the date of acquisition. Then this is what? Amount on the date of consolidation. This already we calculated. We already calculated. So this is as per previous working note. Fair value of INA on the date of acquisition and date of consolidation. Bolna rahe. Understood the importance of that SONA. This is the importance of SONA. Understood? If you are doing direct adjustment, you will not be able to do it. Correct. Now, you need to find out tax base of INA. If the tax base of INA is given, then take that tax base. But in this type of question, they will not give tax base. So if the tax base of INA is not given, we always assume tax base is equal to carrying amount of INA. Means we'll assume that in the books of subsidiary company, there is no deferred tax. That assumption applies. Okay. So if the tax base of INA is not given, then assume carrying amount of INA. So carrying amount of INA will be what? This is the carrying amount of INA. This is the carrying amount of INA. Under the importance of this, you have already calculated a carrying amount of INA. If the tax base given, then take tax base given, whatever given. If not given, because I know they will not give. Because only one question, they will not change the question till they ask in exam. Understood what I am saying? So carrying amount also already calculated as per previous working note. So that you write down carrying amount of INA. If this is more than this, so this is taxable. Means if the fair value of INA is more than tax base, it is taxable temporary difference. Otherwise deductible temporary difference. So can you say temporary difference? This will be temporary difference. If fair value is more than carrying amount, it means it is net fair value gain. Means this is due to what? Net fair value gain, and gain is taxable in future. Gain is taxable in future now. Therefore, it will be taxable temporary difference. This will be also taxable temporary difference. But if fair value is less than carrying amount, means this is due to net fair value loss, and net fair value loss will be deductible in future. For computing taxable profit, that become deductible temporary difference. So this become deductible temporary difference on the date of acquisition, deductible temporary difference at the end of the, means on the date of consolidation. Correct. So can you say on taxable will create DTL, on deductible will create what? DTA. Correct. Now just try to, suppose you created 1 lakh DTL on the date of acquisition. which become 70,000 on the date of consolidation. What does it mean? 1 lakh on the date of acquisition, it becomes 70,000 on the date of consolidation. What does it mean? During post acquisition period, DTA reverse. During post acquisition period, DTA reverse by what? 30,000. It means reversal of DTL. It is a reversal of DTL. Are you able to understand what I am saying? So this will be reversal of DTL during which period? Post acquisition period. And this will be reversal of DTL during which period? Post acquisition period. Understood? Reversal of DTL will be DT income or DT expense? It will be income or expense? The reversal of DTL. Achha, creation of DTA will be income or expense? What journal entry for creation of DTA? PL account debit to DTL. So it is debited or credited? Debited to PL now. So it is an expense. What is journal entry for DTL reversal? DTL account debit to PL. You are crediting or debiting to PL? It is income or expense? 1 second. Reversal of DTL will be income ki expense. So it will be added or deducted from post acquisition profit? Added. It will be added to post acquisition profit. Reversal of DTA, creation of DTA, what is the journal entry? DT account debit to PL. It means income. So reversal of DTA will be what? Expense. So it will be deducted from post acquisition profit. Understood? It means, can I say, now simple, even though you don't know this working note, what I am saying, just try to understand. Can I say taxable temporary difference will be due to this sum total of this or not? This is the only difference. This is the only difference now. Means difference between these and this is what? The fair value adjustment. If it is net fair value gain, so taxable apply rate of tax, create DTL. And that is reversed due to what? This post acquisition adjustment na. Reversed due to what? Post acquisition adjustment. Because of additional depreciation, additional cost of sale, additional collection, whatever. Correct? So reverse due to post acquisition adjustment. So you can find out the total of this and can find out the reversal. So what you do? You do DT adjustment, DTL minus. But reversal what? Plus. And this will be the net DTL on the balance sheet. If DTA, then plus. DTA will be added to the net asset. But here DTA reversal is what? DTA reversal is what? DTA reversal is what? Loss. So it is minus. Correct? And this will net DTA in the balance sheet. This becomes total fair value of INA on the date of acquisition and carrying amount of INA, and this becomes total post acquisition profit. This is a new adjustment till now not asked in exam. Till now not asked in exam, which I am expecting most probably in the coming exam. Most probably. But it is simple if you have understood. If you have not understood, so anything is difficult. I will say, right now my younger son is of what? 7 years. And believe me, I always teach A for apple, he is not able to understand. For him, that is also difficult, na? Are bolna re? Are bolna re? For you, it is not difficult, na? Because you have understood. A is equal to what? Apple. Whatever you understood, that is easy. Whatever you have not understood, that is difficult. So understand, it become what? Easy. Correct? Understood? Okay? Yes, sir. I hope you have understood now this. Correct? Can you say, I will take that question, then you will be able to apply that. So I will take one question on this. But have you understood? DTL? This done. Then can you say, this will be allocated to share of parent company. Post acquisition profit will be allocated to share of parent company and NCI, as the case may be, as per the respective ratio. Deferred tax adjustment also I explained. Then concept of IND AS 12 you know. Then let's come to step number 4. NCI measurement. NCI measurement, you know, I don't think so much discussion required. As per IND AS 103, NCI measured by 2 methods. One is known as what? Fair value method. Second is known as what? Proportionate share in INA method. Which is more preferable? Fair value method. First preference will be given to fair value method. If the information is not given, a total question is silent, then use what? Proportionate share in INA method. Correct? Yes, sir. So what is the how to calculate value of NCI on the date of acquisition as per fair value method? First, find a number of equity share not held by parent company. Number of equity share not held by parent company. Multiply by fair value of equity shares of which company? Subsidiary company. So multiply by fair value of equity shares of subsidiary company. This will be given. If not given, it means you are supposed to use what? Pasina method. Proportionate share in INA method. Chalega. Second method is what? Proportionate share in INA method. The value of NCI on the date of acquisition is what? Well, fair value of INA. Fair value of INA on the date of acquisition. On the date of acquisition means first column total. First column total multiply by share of NCI. Chalega. Now you all know that whenever you use fair value method, we calculate full goodwill ki partial goodwill. We'll calculate. In this we calculate what? Full goodwill. And in this we calculate what? But the full goodwill is attributable to whom? Both parent company and NCI. Partial goodwill is only attributable to parent company. Let me ask you one question. Whatever goodwill we are calculating, whether full or partial, that goodwill is of parent company or subsidiary company? One second. Whatever goodwill we are calculating, that goodwill is of parent company or subsidiary company? Very good. It is a goodwill of subsidiary company, but in this case attributable to both parent company and NCI. In this only attributable to parent company. Understood. Very good. Okay. So I think no much discussion required for NCI measurement. Then step number 5 is fair value of previously held equity interest in case of step acquisition. One of the question last to last attempt they have asked step acquisition question. Correct. So in that case, what type of question they will give? They will give this type of question ki initially they obtain 20% and then they obtain 40%. So on this date control is obtained. So you will calculate goodwill or gain on bargain purchase on this date. So this become previously hold equity interest. So what IND AS 103 says that if suppose the carrying amount of this is 1 lakh, but for IND AS 103 it will be measured at what? Fair value. And fair value will be given in the question, otherwise we need to calculate it. So we need to remeasure the carrying amount of previously held equity interest at its fair value on the date of acquisition. And because you have done remeasurement, there will be some fair value gain or loss. There will be some fair value gain or loss. Understood? Have you understood this point? So what they want to say? Ki first find out fair value of previously held equity interest. That will be number of equity shares acquired by parent company before the date of acquisition. Number of equity shares acquired by parent company before the date of acquisition multiply by fair value of equity shares of which company? Subsidiary company. This fair value on which date? On the date of acquisition. This you can calculate, or otherwise this information will be given. Correct. Then deduct what? Carrying amount given in the question, carrying amount of that investment given in the question. So deduct carrying amount. This will become remeasurement gain or loss. Remeasurement gain or loss will be transferred to either PL or OCI. PL means what? If that investment was previously measured FBTPL, then PL. FBTOCI, then OCI. So it can be transferred to PL or OCI. If question is silent, then always PL, and question will be always silent. So if question is silent, always what? PL. Very simple. Understood? I think no point required. Correct. Now this remeasurement gain loss, you say this remeasurement gain loss is attributable to parent company or it is attributable to parent company NCI? Only attributable to parent company because this is information of parent company. The profit of subsidiary company is attributable to what? Parent company and NCI. This is the information of what? Parent company. Understood? So all profit of parent company belong to what? Parent company only. Correct? This also done. Now step number 6, calculation of goodwill or gain on bargain purchase. This formula, so you know, ki fair value of consideration paid. Suppose on the date of acquisition we acquired 40%. Fair value previously had equity interest, previously we acquired 20%. So NCI become what? 40%. So fair value of consideration paid plus fair value previously had equity interest plus value of NCI by using Pasina method or fair value method. This become the total from this minus fair value of INA on the date of acquisition. This will be either goodwill or gain on bargain purchase. The goodwill can be full goodwill or partial goodwill. Then we'll do less what? Impairment loss on goodwill. Normally impairment loss on goodwill, in this chapter they provide the impairment loss only. But one of the questions recently introduced Still now not asked in exam. In that they asked you to calculate what? Impairment loss on goodwill. So now we need to understand how to calculate impairment loss on goodwill. Impairment loss on goodwill. If impairment loss is not given in the question, chalega. So impairment loss, if any, on goodwill, this is the carrying amount of goodwill on the date of consolidation, which will come in balance sheet. Which will come in balance sheet. Now this impairment loss, you only say you have understood. If it is full goodwill, this impairment loss will be attributable to what? Parent company and NCI. If it is partial goodwill, then this impairment loss is only attributable to parent company. That is understood by. But how to calculate? Correct? How to calculate? Acha, one more point. Sometime what happens? Normally 95% they will give you this information in the balance sheet only. Purchase consideration. But sometimes they will say till now the investment is not recorded. Means the PC is not given the question. If PC is not given, means we need to calculate PC. As per the concept of IND AS 103. Because IND AS 103 says how to calculate PC. So if PC is not given, then calculate PC. If PC is not given, then calculate PC. Correct? So we'll do one question after this for calculation of PC also. So PC, how to calculate? As per 103, calculate what? The PC is not given in question, calculate PC as under. It will be equal to cash payment plus fair value of equity share issued. Fair value of equity shares issued means what? Number of equity shares issued multiplied by what? Fair value of equity shares of which company? Parent company. Number of equity shares issued, sometime not given. So number of equity shares issued not given. It means number of equity shares acquired multiplied by what? Swap ratio. Swap ratio means 2:1, 1:2 like this. Correct. Of course, this you can calculate because entire amalgamation chapter in CA Inter you have done this only. Correct. In this, I think no discussion required. So fair value of equity shares issued also you understood. Then there may be some deferred consideration. Deferred consideration means which will be payable after some time. So that deferred consideration will be calculated and measured at present value, as on present value. So any future payment given multiplied by what? Present value factor, that will become fair value of deferred consideration on the date of acquisition. Okay. Sometimes they will give some contingent consideration. Contingent consideration means any consideration which is payable on the happening or non-happening of some condition. There will be some future condition. Correct. So right now, we don't know whether condition will be satisfied or not satisfied. So IND AS 103 said it will measure at fair value on the date of acquisition. That fair value will be given in the question. This fair value will be given in the question. So fair value whatever given on the date of acquisition will be taken. This become total PC. This become total PC. Correct. So this will come here if not given. So of course you can calculate if not given. If you can calculate if not given. Correct. Now if suppose not recorded, so what journal entry you will pass in separate financial statement for this? Badao. Investment will increase in separate financial statement with the amount of PC. To cash, if cash paid, to equity share capital, to securities premium, this will be what? Some portion nominal value, some portion premium, depending upon face value given in the question. Depending upon face value given in the question. Then to deferred liability and to contingent consideration. Contingent consideration, this journal entry will do. So can you say this will be adjusted in consolidated balance sheet or not? This will be also adjusted in consolidated balance sheet or not? Because this was not recorded, you need to record it by your own. You will record it by your own now. So this will decrease what? This will decrease what? Cash and cash equivalent. This will increase what? Equity share capital of which company? Parent company or subsidiary company? This will increase what? Equity share capital of which company? Parent company, na? Parent company. Because we are doing journal entry where? In SFS of parent company. This will increase what? Securities premium of parent company. This will increase deferred liability of which company? Deferred liability is nothing but financial liability. So you can show in financial liability either non-current liability or current liability as the case may be. It is payable after 12 months, non-current, payable within 12 months, current. Okay. Contingent consideration, this will increase the contingent consideration of parent company. Now this contingent consideration may be of two types. This contingent consideration may be of two types. Now, what IND AS 103 say that if it will be settled in cash, then this is a financial liability. Then disclose where in financial liability. If it is settled in equity share and the number of equities is variable, then what? Then financial liability. Then also disclose where in financial liability. But if it is fixed number of equity share, then what? Equity. Then it will be shown under other equity. Then it will be shown under other equity. Till now, the contingent consideration wala part has not been given in this chapter. Has been given in business combination chapter, but has not been given in this chapter. Which can be asked? Which can be asked. Understood. Deferred consideration they have given, but contingent consideration in consolidation chapter they have not given. But can be asked. If they can ask deferred consideration, so they can ask contingent consideration also. Understood? Have you understood this point? But this will affect the asset and liability, means whatever asset and liability of parent company, not subsidiary company, because we are doing this journal entry where in SFS of parent company. Be careful about this point. Normally student will not be able to adjust it directly in CVS. So be careful if the PC is not given. Be careful if PC is not given. I will say pass journal entry and think about adjustment. Think about adjustment. So have you understood this point? This you can calculate, this you can calculate, this you can calculate. Goodwill आ गया, impairment loss. Now how to calculate impairment loss if impairment loss is not given? Please apply IND AS 36. Apply IND AS 36. So apply IND AS 36. Now it is based, the calculation is based on whether it is full goodwill or partial goodwill. Correct. So can a subsidiary will be considered as one CGU. Means subsidiary net asset will be considered as one cash generating unit. You remember CGU? CGU. So in CGU what we do? We write on first goodwill, then we write on other asset INA, and then we write on total. This is one CGU, one CGU. We write on carrying amount on the date of, on which date? On the date of acquisition or on the date of consolidation? Because impairment testing will do on the date of consolidation. So this amount will come where? From where? This amount will come from where? SONA, statement of net asset. Already we prepared. This amount will come, this amount na? This amount. This amount. Understood? Not this amount na? Not this amount. This is on the date of consolidation. Understood the importance of SONA? This is the importance of SONA. This amount you can write down. This is INA on the date of consolidation. Okay. So it means this amount already we calculated. This amount already you calculated now. This amount you already calculated. This amount already we calculated from previous working note. This amount is what? This amount. This amount. This amount. So both amount already we calculated. Correct? Got this point. So we'll start with goodwill and then INA and this become total. Recoverable amount will be given in the question. If not given, then it means we can't calculate impairment loss. So recoverable amount will be given in the question. Then compare with the total carrying amount. This will become total impairment loss. Now as per IND AS 36, this total impairment loss will first allocated to what? So first allocated goodwill and balance to what? INA. Balance to INA. However, from my point of view, total impairment loss will be entirely allocated to what? Goodwill. Because if it is INA, it becomes very difficult question. It will become very difficult question. From my point of view, they will not go to that level. They will not go to that level. Understand what I am saying? But chalo, ठीक है, आता तो मैं समझाता हूँ. So this amount will be deducted from goodwill to find out revised carrying amount of goodwill. And this impairment loss, if suppose it is coming, from my point of view, they will not ask that type of question, but suppose it is coming, so as per IND AS 36, it will be allocated to only those assets which are covered under IND AS 36. For example, PP, intangible asset, investment property, ROU asset, in the ratio of their carrying amount. However, they will not ask that type of question, but ask to apply your concept of IND AS 36. Apply the concept of IND AS 36. So this will be attributed, this will be allocated to only those assets which are covered under IND AS 36. But this INA include inventory also. To that it will not be allocated. It includes trade receivable also. That will not be, to that impairment loss will not be allocated. Understood? Correct. Now, can you see this impairment loss will be attributable to both parent company and NCI, and this impairment loss will be also both attributable to parent company and NCI. Chalega. So simply deduct this impairment loss from respective asset to find out revised carrying amount. But from my point of view, in exam they will give this only. This will be nil from my point of view. Correct? So that will be deducted from where? Here. And then we will get revised carrying amount of goodwill, which will come on the date of consolidation. Understood? If it is full goodwill, but in exam they will ask partial goodwill, because only one question has been given with partial goodwill. So partial goodwill, you know what to do as per IND AS 36. So partial goodwill if there, so this is goodwill. First write down goodwill as we have written previously goodwill. Then INA. This is as per previous working note. This is as per SONA. But can I say this is partial goodwill? Suppose 60% is held by parent company. So this is 60% now. This is 60%. बोलना है सुनो. Partial goodwill. Suppose 60% is held by parent company. So this is only attributable to parent company. So this become only 60%. So what IND AS 36 says that to calculate impairment loss, first we should make it full goodwill. First we should make it full goodwill. Only for purpose of impairment loss calculation. So we'll add unrecognized share of NCI in goodwill. So we can add 40%. Means what we'll do? We'll divide by 60 into 40. So this amount will come. If this is 60%, you can calculate 40% now. So 40% will add. Only notionally you will add. Notionally. You will not actually increase in the books of account. This is only for the impairment testing. Impairment testing. So this amount will also increase. This becomes total notional carrying amount. Total notional carrying amount. Not compare with the recoverable amount. Whatever given the question. This becomes total impairment loss. This total impairment loss will first allocated to what? Goodwill. Balance will be what? To other INA. But can you say this is total impairment loss? But out of this, some portion belong to what? NCI, which is not yet recognized only, which is not recognized, cannot be charged to PL account. So deduct share of what? NCI. So as per my exam, 40% of this will be deducted. 40% of this will be deducted. Only recognize what? The portion of parent company. So this is the impairment loss to be recognized. That is only portion to what? Parent company. This is what total, this become total. Understood? So it means this is only attributable to whom? Parent company. Attributable only to parent company. But this will be attributable to what? Both. However, from my point of view, in your exam, this will be nil only. Understood? This is partial goodwill. So once you have calculated this, you can deduct from goodwill. You can find out carrying amount of goodwill on the date of consolidation. Yes, you can. One question has been asked. Can you combine analysis of profit and SONA? Yes, you can do. Working note you can do in any way. Any way you can do. The objective is what? To find out the net effect in balance sheet. Working note can be done in any way. Okay? Understood? But if you prepare AOP and SONA, then this goodwill point, this which is new type of question they are asking, you will be able to understand. Okay? This much you understood. Now two small adjustment. Elimination of URP on unsold stock. Elimination of URP. Elimination of URP you understood. If the goods are sold by parent company into subsidiary company, so stock of subsidiary company will include some profit of parent company which need to be eliminated, or vice versa. So there are two type of transaction. One is known as what? Downstream transaction. One is known as what? Upstream transaction. Downstream is what? Parent company has sold to subsidiary company. Upstream is what? Subsidiary company has sold to parent company. Understood? So can you say in this stock of subsidiary company, profit of parent company is included. So we are eliminating profit of parent company, and profit of parent company only attributable to what? Parent company. Therefore, what journal entry will do? Retained earning account debit to inventory. Means reduce retained earning, reduce inventory. Reduce retained earning, reduce inventory. But can you see in this stock of parent company include profit of subsidiary company? Means we are eliminating the profit of subsidiary company. Now profit of subsidiary company belong to two party, parent company and NCI. Therefore, reduce retained earning, reduce NCI with the proportionate share and to inventory. However, this can be also deducted from post acquisition profit. Means you can do first from post acquisition profit. Means many faculty teach in this way, they will deduct from where? Post acquisition profit, because ultimately if your post acquisition profit reduced, so that will be distributed what? To parent company NCI. What we are doing, we are not deducting from what? And we are giving direct effect. This we are giving direct effect. Correct? What you have done? You have deducted from post acquisition profit. That is also correct. So either you deduct direct from what? Post acquisition profit in AOP. Ultimately what happens? The allocation will be to what? Parent company and NCI. Or if you have not deducted from post acquisition profit, then deduct directly to what? Retained earning and NCI. Ultimately your effect will remain same. How many have done in this way? No one. So how many have deducted from post acquisition profit? The balance you have forgotten. Huh? Have you understood what I am saying? So either deduct from what? Post acquisition profit or give direct effect. Either of these. Have you understood what I am saying? Because if you deduct from post acquisition profit, so your post acquisition profit will be now less amount, and now that will be attributable to what? Parent company NCI. Now if you have not deducted from post acquisition profit, that is higher amount, then at the end deduct from what? Retained earning NCI individually. So ultimately your answer remains same now. Ultimately your answer remains same. Understood? Or if you want, we can do that also. But this you don't deduct from post acquisition profit. Normally students take what? Any profit they deduct from what? Post acquisition profit, and their mistake ho jata hai. Downstream transaction you can't deduct from post acquisition profit. Why? Because it is a profit of which company? Parent company. So that will be always deducted from retained earning, and therefore I choose this method. This is safe. If you are deducting from AOP, so by mistake in exam what happened? Any profit, whether downstream, upstream, deducted from there. One mistake in AOP, and in this what happened? You are safe. If you are doing mistake, you are doing mistake at the end now. If you are doing mistake at the end, then also 1, 2, 3, 4, 5 all working not correct. So if AOP is wrong, your other working note is also wrong. So be careful. Whatever you are doing, be careful. Understood this point? Have you understood this point? Yes, sir. This also you have understood. The last step is what? Step number 8, balance of other equity and NCI. Last working note. Okay. Retained earning, general reserve, OCI, NCI. OCI means, so we have taken OCI also into consideration now. So first write down balance. These are the balance from which company? These are the balance from which company balance sheet? Parent company balance sheet. So this you take from parent company balance sheet. This NCI we have taken from which working note? From goodwill, NCI measurement, initial measurement, whether fair value method or proportionate share in INA method. Then you first think whether any error given in the books of parent company. If any error given in the books of parent company means this profit is not correct now. It means this profit is not correct. So rectify that profit. Rectify that profit. One question has been given with error in the books of what? Parent company recently. Okay. So any error in the books of parent company need to be rectified. Understood? That will be as per the information given in the question, will rectify. It can be plus, it can be minus. Then sharing profit or loss of subsidiary company. Retained earning, general reserve. Retained earning, can I say, will go to, this is suppose 60%, this is 40% to parent company NCI, already allocated from SONA. General reserve, this will be 60%, this will be 40%, but general reserve will be added to general reserve. Then share in OCI of subsidiary company. OCI, we have taken OCI also. So OCI will be 60%, 40%, 60%, 40%. Understood? This so I hope you have understood. Chalega. Then unrealized profit upstream. Unrealized profit upstream. But that will be allocated to what? Parent company NCI, only parent company. Only parent company, nothing in what? Sorry, upstream, my mistake. Upstream, first I am saying downstream. Downstream will be only allocated to what? Parent company, and nothing to what? NCI. but upstream will be allocated to both parent company and NCI. Both parent company and NCI. However, this you can do directly with what? This you can do directly in AOP also. Upstream profit directly you can deduct from AOP also. Directly you can deduct from AOP also. That is also advisable. You can do it. ICI is doing from directly from AOP only. So you can follow ICI. Chalega. Then impairment loss on goodwill. This is danger. Normally students forget this. Danger. Impairment loss on goodwill. If it is full goodwill, then attributable to what? Both parent company and NCI. If it is partial goodwill, then only to what? Parent company. Understood? Then remeasurement gain and loss one we calculated. Remeasurement gain and loss, that is only attributable to parent company. So remeasurement gain and loss of previously held equity interest, that will be only added to what? Or deducted from what? Parent company. This becomes total. This will come to other equity in the balance sheet. This will go to NCI in the balance sheet. And balance sheet you can prepare. Balance sheet you can prepare. Then intercompany balance. This is the cancellation journal entry. Cancellation of what? Receivable, payable, bills receivable, bills payable. Correct. So if suppose intercompany owing is given, so trade payable and trade receivable cancel. Now there can be two type of information. If suppose this is 10,000, this is 10,000, so cancel both. But sometime what happens? This is 9,000 and this is 10,000. Why this will happen? Because of some check in transit. One party has issued check, but other party has not received the check. So difference will go to what? Check in transit. And this check in transit will be shown in cash and cash equivalent in consolidated balance sheet. The third situation is practically not possible. 10,000, 9,000 is not practically possible. This is possible only because of error. So once you rectify the error, so 10,000 will become 10,000 only. So this is actually not practically possible unless there is an error. So this situation they will not give in exam. Either they will give this or they will give this. Chalega. Then intercompany acceptance, bill payable to bills receivable. So bill payable means one party is drawer, other party is drawer, parent company is drawer, subsidiary company is drawer. So in the books of drawer, bills receivable will be there. In the books of drawer, bills payable will be there. That too you know now. The first situation either will be this 10,000 and 10,000. Then you cancel both. But second situation, this can be 10,000, this can be 6,000. Why? The sum of the bill may be discounted or endorsed by the drawer. So if some bill has been discounted or endorsed by the drawer, can you see that is actually a contingent liability of drawer? Because drawer will not pay, drawer need to pay. So that become contingent liability of drawer. This is foundation level. See a foundation में चले गए. You remember bills of exchange chapter? कि any drawer can discount the bill. So if the drawer will not pay to the bank, who need to pay? Drawer. So that become a contingent liability of a drawer. Understood? But here, suppose this is coming 10,000, this is coming 6,000, means 4,000 bill has been discounted. So how much you can cancel? You can only cancel to the extent of what? 6,000, and 4,000 will remain in the balance sheet because now it is payable to bank. So 4,000 which was contingent liability now will become what? Actual liability. So that will now not come in contingent liability because that will come in what? Balance sheet. So contingent liability will now become what? Actual liability in CBS. Contingent liability will now become actual liability in CBS. Understood? So you can cancel only to the extent of bill which is undiscounted or not yet endorsed, Correct? The third situation is not possible. This is practically not possible. It may be possible only because of error, which will be given in the question if error is there. So either this or this. So cancel to the extent of bill not yet discounted or not yet endorsed. In one of the last exam question, they have given one more point where all students were confused. But apply common sense. I am asking you one question. Let's see. Apply common sense. Suppose this they are asking. This is the balance of parent company, balance of subsidiary company. There is one debenture debenture of rupees 1 lakh. Correct? And same debenture is coming as an investment at rupees 1,20,000. Means they have invested in a debenture of subsidiary company. But what you will do? This type of question was asked. Once again, same thing we teach in CA Inter. Because CA Inter this type of question has been given. Means this was actually taken from AS based question. But what you will do? Means this is what parent company invested in a debenture of subsidiary company. But what you will do in CBS? Apply common sense. Suppose this question comes, you have two options, do or do. To do. Either do correct or do wrong, but you will do it now. Do it right now. Think. What you will do, batana? Huh? What you will do? That I have also understood. Intercompany transaction. But what you will do in CBS? But this will be cancelled, this will be cancelled. What will be 20,000? Transfer to PL. Of which company? Parent company. 100% correct. 100% correct. Means what I am saying? Do 90% of time you will be correct. 10% time everyone will be wrong. If you are wrong, so everyone is wrong. That is that situation which is 100% you can't apply common sense. Correct? But 90% time if you are doing without wasting your time, you are correct on. This was simple adjustment they have asked. Student panic. What is this? What type of question you ask? If you will cry, so nothing will come in your mind now. And I see a play with your mind. First question, dhamaka. All questions are simple. Dhamaka. Blast in your mind. They will throw what? If you can catch it, you will win. If you will not catch it, you will surrender. Mentally surrender. You are mentally surrender in exam hall. Mentally surrender. If you are mentally surrender, now easy question will become super difficult. So that only they want. They want you to surrender in exam hall. Understood what I am saying? So just try to understand. They will play you with your mind. Even though you are not done, do now whatever you know. Do wrong. But if you are doing, you are getting some marks. If you are not doing, 0 marks. And worst question paper, easy checking. I'll give you my example. In SFM, in our exam, all questions were from out of book. Means I said ki why I have done study. Without study also same question paper. Wastage of time now. Believe me, all questions, not all questions, and I was expecting 90 marks in AFM. That much preparation I have done. Means my goal was to achieve 90 marks. All questions were from out of book. What I have done, whatever I have understood, I have done. Whatever I have not understood, that also I have done. Because if you have studied, you can do it now. Bolna, wrong or correct? When I came to after exam, I calculated. I said ki I will get 40. 40 I will get. Not more than 40, but 40, 42 I will get. ठीक है ना, pass होंगे ना. So I will go for next exam na. How much I score, you know? How much? I got 64. I don't know how. Grace mark. 100% 30 marks grace. 30 marks grace was given. 30 marks. 100%. I can't score only. I know. I know that I don't know this question. I know I don't know. Whatever I have done, that is bakwas. But whatever I have understood, whatever I have not understood, I have attended. 100 marks paper I have attended. Because time was there, na. If you don't know anything, full time, na. 2, it means enjoy your 3 hours. You need to enjoy the 3 hours. That only you need to understand. If you don't enjoy, you need to come again to enjoy. Enjoy it. Believe me, this is only fact. This is only fact. And I don't know how I got what 64 marks. And after SFM, the next paper, 60% students were absent in the class. They want that only. Mentally surrender. mentally surrender. Out of 6 paper, 2 paper will be complicated. One in group 1, one in group 2. 2 paper, not more than 2. Every attempt this hota hai. Sometime FR, sometime AFM, sometime audit. Others will be easy. They play with your mind. Surrender. Correct? Now, I hope you have understood this. Consolidation done. Subsidiary part done. Subsidiary part done. Now, I will take one very good question which is not yet asked in exam, and let's see whether you are able to understand or not. Whether you have done this question previously. This question, Ishwar Limited, the newly inserted question. You have done. Because RTP November 2023 till now not asked. ब्रेक ले लो, ब्रेक में क्या है? We'll take a break of 10 minutes. 10-minute break. I also require break here. Now, can we start once again? Everyone? Now, we are taking question number 25. Now, question 25, very important question, not yet asked, can be asked. So, always you need to identify some question which you must do before exam. Before exam means 2-3 hours before exam. Some question. 2-3 hours before exam. So, you need to identify some question like that. That question are those questions which you think that, of course, if that question come, you require more time. So, once you have done that before exam and same question come, can you see it will save your reading time? Because they will change only the name of the company and only amount. Other all information will copy paste. So, if you have done that question just before 4 hours before, 5 hours before, it will remain in your mind now. So, that is smart work. Correct? So, this is that type of questions. Okay? So, Ishwar Limited hold investment in Vinayak Limited. The draft balance sheet is given Ishwar Vinayak PP investment. Correct? One thing, whenever they give investment and they have not given investment in subsidiary, it means it includes other investment also. Correct? So, this is an indication that this is not only investment in subsidiary company, this will include some other investment. To be careful. Be careful. Understood what is care required here? Because when they say investment in subsidiary, then this is nothing but cost price means purchase consideration. But they have not given investment subsidiary, means this includes some other investment also. Be careful. Then they give inventory, trade receivable, cash and cash equivalent, share capital of ₹1 each, retained earning, other component equity, provision, long-term borrowing, deferred tax, trade payable, short-term borrowing, total current liability. Normally what I have seen, students don't read balance sheet in exam. You don't read balance sheet sometime. Means you read only additional information. You think balance sheet will do at the end. But sometimes some important information is given in the balance sheet that is required for adjustment, and you miss that adjustment at AOP. The entire question, entire solution will be wrong. To read balance sheet but with very fast. You just identify some important information is given in the balance sheet or not. So sometimes they give you some additional information in the balance sheet only. Understood? To read balance sheet but very fast. Very fast. Additional information. What they have given. On 1st April 2001, Ishwar Limited acquired 400 million shares in Vinayak Limited by means of share exchange of 1 share in Ishwar Limited for every 2 shares acquired in Vinayak Limited. Correct? It means this information they have given to calculate PC. Why? Because KN's direct information of PC was not given. Because this include PC plus other investment also. So because direct information of PC was not given, therefore they ask you to calculate PC. You need to calculate PC in this. Understood what I am saying? Correct? Now what is the swap ratio given here? 1 share for every 2 shares. So swap ratio always you need to identify. The swap ratio is 1 by 2. One by 2. How many shares acquired? 400 million shares. So always circle all the important terms. 1 by 2. So that when you are computing it, once again you are not able to, you should not find out it. So all information you should circle. All important information circle it. Understood what I am saying? This should be your habit. On 1st April 2001, the market value of shares of Ishwar Limited is rupees 7. Ishwar Limited appointed a professional firm for conducting due diligence for acquisition of Vinayak Limited, the cost of which amounted to 15 million. Now, as per IND AS 103, because you have done IND AS 103, any direct cost related to acquisition incurred by acquirer is charged to profit and loss account as an expense. It is never included in PC. It is never added to investment account. But what they have done? This is the cost. Ishwar Limited included this acquisition cost in the carrying amount of investment in Vinayak Limited in draft balance. This is mistake, error. So this become one error. Means investment will reduce by what? This investment should be reduced by what? 15 million. 15 million means 15,000 in 1,000. 50 million means in 1,000. It is 15,000. So millions convert by adding 30. Understood? So this is error. So what is the other effect? You reduce investment and what you will do? You will debit retained earning. So your journal entry become rectification entry. Retained earning account debit to investment. Retained earning account debit to investment. So retained earning means other working note, other equity working note, we need to do that. Error understood. This is error in the books of parent company or subsidiary company. Error in the books of parent company or subsidiary company. So error in the books of parent company. So write down error. Write down error. If this is error, you need to do some adjustment entry for that. Correct. There has been no change to the carrying amount of this investment in Iswa Limited own balance sheet since 1st April 2001. But there is no other changes. Means there is no acquisition, there is no disposal of shares. On 1st April 2001, they have given opening balance of retained earning and opening balance of other component of equity. This is subsidiary company opening balance they have given. The directors of Iswa Limited carried out a fair value exercise to measure identifiable asset and liability of Vinayak Limited on 1st April 2001. The following matter emerged. So they have given fair value information. Fair value information. Property having a carrying amount of 800 million. Land component is 350 million and building component is 450 million. So land is not a depreciable asset and building is a depreciable asset. Had an estimated fair value of 1000, land is 400 and building is 600. So we can find out fair value gain or loss. They have directly given fair value and book value information on the date of acquisition. The building component has a useful life of how many years? Remaining useful life of 30 years. Plant and equipment carrying amount is 600 and had an estimated fair value of how much? 700. The estimated remaining useful life of the plant is how many? 4 years. None of the plant has been disposed of. Okay. On 1st April 2001, the notes to financial statement of Vinayak Limited disclosed a contingent liability. On 1st April 2001, the fair value of contingent liability was reliably measured at 30 million. Now, as per IND AS 103, because we have not an IND AS 103 revision right now, when we will do, I will explain this point. Any contingent liability of acquiring means subsidiary company. Contingent liability of subsidiary company in this chapter will be recognized in the books of parent company means acquirer on the date of acquisition if fair value can be estimated reliably. So if the fair value information is given that the contingent liability of acquiring will become provision of acquirer, means it will be recognized as a liability in the books of acquirer even though it was not recognized in the books of acquiring. So can you say the carrying amount of this will be 0 but the fair value is given how much? 30 million. Fair value is given how much? 30 million. So this contingent liability will become provision in the books of parent company in the consolidated balance sheet of parent company. The contingency was resolved in the year 31st March 2002 and no payment was required. Means it was resolved means reverse. So during post acquisition period it was reverse. Chalega. The fair value adjustment have not been reflected in individual financial statement of Vinayak Limited. In CFS, the fair value adjustment will be regarded as a temporary difference. Means that fair value gain or loss will become temporary difference. Means can is a tax base of INA will be equal to carrying amount of INA. Tax base of INA will be equal to carrying amount of INA, and therefore the temporary difference will be equal to that fair value gain or loss only. Fair value gain or loss only. For the purpose of computing deferred tax, the rate of deferred tax to apply temporary difference 20%. This point again I will explain with working note. The directors of Iswa Limited use the proportion of net asset method when measuring the NCI in Vinayak Limited in CBS. So they have used which method? Pasina proportionate share in INA method for NCI. Impairment review. No impairment of goodwill on acquisition of Vinayak Limited was evident when the review was carried out on 31st March 2002 and 2003. Achha, I forgot to ask you, what is the balance sheet date? 31st March 2004. 31st March 2004. And what is the acquisition date? Acquisition date is 1st April 2001. So what is the post acquisition period? Post acquisition period is 3 years. Post acquisition period is 3 years. So there are 3 post acquisition years. Therefore, they are saying in the first year, second year, there was no impairment review, means there was no impairment loss of goodwill. But on 31st March 2004, means on the date of consolidation, the directors of Iswa Limited carried out a further review and concluded a recoverable amount of net asset of Vinayak Limited at a date was 2000 million. That they have given recoverable amount means we need to find out impairment loss. We need to find out impairment loss on goodwill. Vinayak Limited is regarded as a single CGU for the purpose of measuring goodwill impairment. Correct. Then last point, they have given one more error in the books of parent company. This is again one error in the books of parent company. This you will explain me, I will not explain. Abhinay, not now, don't read now. After completion of entire question. Can you say, if suppose you have done wrongly this point, then also 90% your question is correct na? अरे बोलना रे, this error in the books of parent company, so that will only affect your retained earning, only affect your retained earning na. So if you have done wrong, then also your 90% your balance is correct. Out of 60 marks or 40 marks now, 40 marks, you will easily get 10 marks. But 10 marks is good marks or bad marks? 10 by 14, how much percentage? 10 by 14? 70% you are getting. Means if you are getting more than 7 marks now, it is always welcome. 7 marks is target. More than 7 marks surplus. Surplus for other subject. Understood? Not able to understand. Means if you are getting 50, you are passed in whatever. Now you are getting surplus marks for AFN audit. The first target is 7 marks. Then 8 marks, 1 marks for AFM. Then 8 marks, 9 marks, 1 mark for audit. So think like that. 7 marks also you are getting. You are passed in FR na. One question. Bolna yes or no? Every question you are getting 50%, you are passed. Therefore attempt. Because if you will attempt, normally I will think, thoda if you have done correct, you will get 50%. Blunder mistake you have done, then to come again. Correct? Come again. But normally I think that if you have done studies, 50% you can achieve. 50% you can achieve. And can you say out of 10 questions, 5 questions you will do 50%, but some question you will do 100% correct also na. So in the question when you are doing 100% correct, so that will automatically set off where you are doing 100% wrong. So this is only what you need to be smart enough to understand that only objective is 50%. So don't panic in exam. Don't panic in exam. But this you don't read right now. This will do at the end. Let's see how you are reacting. How you are reacting in exam hall. Can you say balance all point you have understood? Now, can we start? You have the question. But the working note number 1, what you will do? Working note number 1. Whatever you will say, I will write down. Fair value adjustment. What are the item given? Land, building, plant, and provision. These are given now. Can you give me fair value fast? You will give me in 1000 because balance sheet is given in 1000. Give me in 1000. Fast. I believe everyone have question. Huh? If you want, I can split it. बोलो. चलो ना, you have ना, बता. Land how much? 400 means 1000, 400,000. Do in 1000. Don't do in million because balance sheet is given in what? 1000. Balance is given 1000 ना, तो better do in 1000. चलेगा. Then building, तो 600,000. These are fair value. Plant, 700,000. Then provision, I know 30,000. This is given 30 million. Correct? Don't do mistake. If you are doing mistake, means I am doing mistake. Carrying amount. Don't copy paste. Huh? Okay. Don't copy paste. Do from your book. Don't copy paste. You are not here to copy paste. Huh? ठीक है? Do one question by your own ना. Try. Maximum over 11. Wrong होगा. ठीक है? I am just helping myself. You help yourself. ठीक है? Carrying amount बताओ line. Land 300, 350. So 350,000. Building 450,000. Plant 600,000. Provision it was a contingent liability in the books of acquiring. So carrying amount is what? 0. Carrying amount is 0. It was a contingent liability now. So contingent liability is not recorded. So carrying amount is 0. Carrying amount is 0. Batao. So one mistake, you are not able to say this. So this become one important point. You know, identify this. You are not able to understand by your own. So carrying amount is not given, means 0 only. Simple. Chalega. Now can you give me fair value gain? This is 50,000. This is 1,50,000. This is 1 lakh. This is 30,000. Loss, gain. Gain or loss? Loss. So fair value gain or loss. Then can you give me remaining useful life of land? How much? 30 lakh. Remaining useful land. Land is what? Now he is saying 30. Maja aa raha hai. Remaining useful land is 30. Building how much? Why you are saying 30 for land? Okay, plant how much? 4. And provision how much? Not applicable. Now can you give me additional depreciation for how many years? 3 post acquisition period. Here nil. Building how much? 1,50,000 divided by 30 into 3. Additional depreciation for 3 years. 1,500 na? 15,000. Then plant 1 lakh divided by 4 into 3. Correct. And this 30,000, but whether it is reversed during post acquisition period. See the question. Whether it was reversed or settled. It was reversed, so it means closing balance will become what? 0. So reverse means what you will do? Plus ki minus? Plus how much? Plus how much? So this is minus, this is minus, this is plus. So if this is plus, this is minus. This is minus, this is plus. Rule is this. Reverse means closing balance will become 0. So your net effect is what? Net changes on the date of consolidation. This is 50,000. This is 1,50,000 minus 50. 1,35,000. This is 25,000. Nil. One working note done. You got 1 marks. So only 1 marks. They let 2 marks. 2 marks. But 2 marks you got now. This is step marking. For this you will get some marks. If this is entirely correct, chalega. Then working note number 2, what you will do? You will say, whatever you will say, I will do. Analysis profit. Batao. There are 2, they have given retained earning and other equity, other component of equity. But the closing balance, as per balance sheet. Closing balance as per balance sheet. This much time. 10 lakh, 1,500, 50, 50,000. Other equity, 50,000. Opening balance given as an additional information, 7,50,000. Other equity, 25. Can you give me profit after appropriation? 3,50,000. And this is what? Someone is saying 3,50,000. They have written 3,50,000. Whatever you say, I will write down. Is I am only doing whatever you are saying. Okay? You're wrong to wrong. But this is post acquisition. This is profit after appropriation for how many years? 3 years. 3 years. Now think. Any abnormal loss? No. No. Bhul jao. Any dividend? No. Bhul jao. Okay. Any bonus share? No. Bhul jao. Correct? So simple now. Any error in the books of subsidiary company? Books of subsidiary company. Yes. Books of subsidiary. There are 2 errors, both given in the books of parent company. No na. Any error in the books of subsidiary? No. Bhul jao. Any proposed dividend? No. Bhul jao. Means such easy question. No adjustment only. No adjustment. Means it is simple question, difficult question. Simple. This simple question, na? No adjustment. Nothing is given. So this become. But you will allocate. You write down pre, post. Here you write down retain earning. Write down other equity. बताओ. Entire profit is what? Entire profit is post. So 3 lakh is post and 25,000 is post. But opening balance will come. Opening balance retain earning is how much? That is the pre na. 7,50,000 is pre. And other equity is how much? 25,000 is pre. Total is what? 7,75,000. And this is 3 lakh. And this is 25,000. Low. AOP done. Achha, if you want to that fair value adjustment, you can do from here also. I don't do from here. I do from Sona. If you want to do from here. Your choice. Correct. Working note number 2 done. Let us come to working note number 3. 3 is what? Sona. Date of acquisition in exam, please don't write Sona. They will then. Chalo. Post. Retain earning, other equity. But the equity share capital how much? Of subsidiary company. 5 lakh. 5 lakh. Plus other equity, pre how much? Array. Whatever I have done, not saved. I am doing here, okay? This much you have written, na? Okay. So we are doing Sona, na? Sona. Equity share capital was how much? 5 lakh and 5 lakh. Always write down date of acquisition, date also, huh? So you write down 1 for whatever is given in exam. Post, retain earning and other equity. Other equity, how much was the pre? 7,75,000. Retain earning 3,25,000. Other equity? Achha, 3 lakh and 25,000. I said 3 lakh and. How can I enter the 3,25,000 you are saying? Total is what? Total 10 lakh. Exactly 10 lakh. Use calculator, huh? You have calculator, na? 11 lakh. This should match with closing balance. Cross check. My deleted. Matching with the closing balance, it means you are doing correct. All calculations are correct. Be confident in exam now. Aage chal. Total 7 plus 5, 12,75,000. This is 3 lakh. This is 25,000. This is 16 lakh. This become carrying amount of INA. But we want what? So we'll do fair value adjustment as per previous working note. But the land, how much? 50,000. Post acquisition. Post acquisition how much? Post acquisition nil na? Nil. Building how much? Post acquisition. Post acquisition with additional depreciation. How much? 15,000. Net effect. Then what is the plant? Na plant 1 lakh. Post acquisition net provision 30,000 plus minus post acquisition. Then what? Nil. Give. How much? टोटल यहां से यहां, this total 15 lakh 45,000, this total 40, then 25, then 18 lakh 10,000. Correct. Now whether deferred tax given, so whenever tax rate given, even the question is silent, we need to do deferred tax calculation. Even the question is silent, if the tax rate is given. So can I say, because they have not given tax base, so we need to compare this fair value with what? Carrying amount. So this is the only difference. So you are not supposed to do another working note. You can do directly here. So this becomes net fair value gain, which will be taxable in future. So on taxable temporary difference, you will create DT or DTL? DTL. DT or DTL? DTL. DTL will increase net asset or decrease net asset? Increase or decrease? Decrease, because DTL will be deducted. It will do plus minus DTL. How much? So it is total 50,000 plus 1 lakh 50 plus 1 lakh minus 30. How much? 2 lakh. So this become taxable temporary difference. On that, what is the rate of tax? 20%. How much? 54,000 DTL created. So minus. Understood? This you have understood first. And can I say this will reverse due to this post acquisition adjustment? So during post acquisition period it will reverse due to additional depreciation, etc. What is the total of this? 15 plus 75 minus 30? How much? 15 plus 75 minus 30? So 60,000 taxable temporary difference will reverse. So we'll say 60,000 into what? 20%. Means this much DTL will reverse during post acquisition period. How much? So that DTL reversal will be income or expense? Income will be added to what? Post acquisition profit. 54 minus 12. How much? So this will come in the balance sheet as DTL. 42,000 will come in the balance sheet as DTL. Understood? Correct. This done. This become what? Your calculation. But what is the total now? $14 lakh 91,000, 2 lakh 52,000, 25,000, then 17 lakh 68,000. Now you can allocate this to parent company and NCI. What is the profit sharing ratio? Ownership ratio. How much they purchase? 60% now. How much? 400 million shares na. So 400 million divided by total kar do. 400 million will be 4 lakh. What is the total share capital? So 4 lakh divided by 5 lakh, 80%. So 80% and 20%. Allocate these and these. Post acquisition profit. How much? 80%, 20%? This and this. Only this and this. $2 lakh 1,600 and 50,000. This I think 20,000 and 5,000. Done. Any difficulty in so now? I think simple. So in this also AOP and this is correct. So can I say additional 5 marks you will get. So 5 plus 2, 7 marks so you got 50% achieved. 50% achieved. Now let us now try for surplus for AFM and audit. For AFM and audit. FR तो gone ना 50% achieved. Now think about AFM and audit. If suppose audit question पे भी stuff, so we should think about that also ना. Correct? Okay. Now coming to working note number 4. What you will prepare? Bolo. NCI. Can you say NCI directly we can do? Why to waste our time? Directly we'll do. Then there is no step acquisition. Now let us come to goodwill or because NCI we can do directly. You can do that also separate working note, but you are wasting your time. So here, but what is the fair value of consideration paid? That is not given. So you can calculate. But how many shares acquired? 400 means 4 lakh. What is the swap ratio? So this is number of shares issued multiplied by fair value of equity shares of parent company 7. So this become your 14 lakh. 14 lakh is PC. 14 lakh is PC. That was not given in the question. So this you can find out now. Or you can prepare one separate working note for this if you want. But directly we can do. Then we'll write down value of NCI by using which method? Always write down. It is proportionate share in INA method. For how much percentage? This was for 80%. So you'll do 20% of what? 20% of what? Batao. 20% of 14,91,000. Understood the importance of Sona? 14,91,000. So 14,91,000. Can you give me NCI? 290, 98. Correct? Once check na. This is correct na. Achha, we will calculate goodwill. But the 14 lakh plus this how much? 16,98,200. Then minus what? Fair value of INA. How much? How much? No. This you are doing on the date of acquisition. Or goodwill and gain on bargain purchase is calculated on the date of acquisition. Only information about date of acquisition. But how much? 14,91,000. This will only come. देखो one mistake हुआ ना. If you have done mistake, write down danger. Write down. In exam also you will do that mistake only. If you are doing mistake means danger. Understood? Correct. So this will become full goodwill, partial goodwill. Partial goodwill how much? 2,07,200. But we need to calculate what? Impairment loss. Impairment loss will do a separate working note. Up to this, any doubt? I think in this also no mistake should be happen. You get another 2 marks. In this though you should not do any mistake. Impairment loss may you can do mistake, but let's see whether you are doing mistake or not. Now be careful, huh? Whatever I'm asking, think and say. Calculation of impairment loss. On 31st March 2004, that was the date of consolidation. Huh? We read on goodwill, we read on INA, we read on total. Means you read on CGU. But what is the carrying amount? Goodwill how much? 2,07,000. INA how much? INA how much? 17 lakh. 17 lakh 68 or 14 lakh 91? I have written also, you know, impairment loss on which date? 31st March 2004, on the date of consolidation. So 17 lakh. Write down, if you have done mistake, write down. Write down. Same mistake you'll do in exam. So total become how much? 19 lakh 75,200. But that is partial goodwill, full goodwill. So what we'll do? Add grossing up. So we'll do unrecognized share of NCI. So that will be 2,07,200 into 20 by 80. 20 by 80. Gross up. How much? 51,800. 51,800. Total notional carrying amount. This become notional carrying amount. Two lakh 59,000 exactly. Total 2 lakh 20 lakh 27,000. So you will now compare with recoverable amount. What is recoverable amount in thousand? Given in the question 20 lakh means 2000 million given 20 lakh. So what is the total impairment loss? 27,000. Out of this, how much will be allocated to goodwill? Entire 27,000, and nothing will be allocated to INA. But out of this, what will do? Minus NCI share to the extent of 20%. 20% of this 5,400 you will not recognize now. So what is the impairment loss to be recognized? 21,600. 21,600. हाँ, थोड़ा सा in this be careful. First time they have asked this type of question, which can be asked in exam. Be careful, but simple. It is not complicated. If you are going with the flow, it is not complicated. Okay. 21,600. What you will do now? Minus from this. So what is the carrying amount of goodwill? How much? 1 lakh. See now, this amount is correct now. So check. I don't know the answer. In balance sheet, how much goodwill is coming? Correct. Same amount is coming. चलो मजा आ गया. ऐसा ना? So this much we have done. ठीक है. Now, after this, what you will do? Other equity and NCI. Working note number 6. Other equity and NCI. So other equity means there is retained earning, other equity, NCI. Can you give me first balance from parent company for retained earning and other equity? How much? 28 lakh 65,000. Other equity 12 lakh 50. NCI will be how much? As per previous working note, it is how much? 2 lakh 98,200 as per previous working note na. NCI initial measurement. This rate, what you have given? You are saying 3 lakh. Which amount you are giving? On the date of consolidation, we are calculating now. Where you have calculated? Till now we have not calculated that. चलेगा? ठीक है. Now, okay, so we'll do first. There is some error in the books of parent company that we'll do at the end. First, can you give me share in profit? Same profit. There is what? Retained earning and other equity. Retained earning, how much allocated? As per SONA, 201, and NCI 15,000 50 50,400. Other equity 20,000 and 5,000. Okay. Then Be careful about impairment loss. Impairment loss normally you will forget. Impairment loss on goodwill. But the partial goodwill or full goodwill? So it is attributable only to parent company. How much? 21,600. Done. There is no URP given. Only this much. Now error. There are two errors given. One error already I have explained. They said 15,000 is included in investment account which will be charged to profit and loss account to deduct from investment, and it will become an expense which is charged to, so I don't, direct cost wrongly debited to investment account to deduct 15,000 from. This one error was simple. This error was simple. Yes or no? It means, can I say, just try to understand. If you want to find out what is the investment in balance sheet now, so how much investment will come in the balance sheet? So can you say out of this 21 lakh 15,000, already you deducted 15,000, and what was the PC? PC is 14 lakh, that will not come in CBS. So what is the other investment? Okay, the other investment becomes 7 lakh, which will appear where? In CBS. So other investment will be how much? 7 lakh, which will remain in consolidated balance sheet. Chalega. This point have you understood? Now all point done, everything done. Now suppose this you have not understood. Leave this, prepare balance sheet and enjoy. I will say don't waste your time. This is thoda sa, but I will say good type of information which in exam you might not understood or you might do wrong. Even though you do wrong, ठीक है ना यार, we are born to do mistakes only. Yes or no? We are born to do mistakes. Human being only will do mistakes now. But simple, thoda, not pura. Okay? Now let us see whether you can do it or not. You read, you only understand by roll. I will not help you. Read it by roll and see whether you can do it. I am just giving you 5 minutes, not more than that. 5 minutes may do adjustment whatever you want to do. Means what I want to say, if suppose this question comes, so all balance to okay na, only this adjustment we have not done in our class. Suddenly this adjustment comes. So how to react in exam hall, that I am explaining. Understood? You're not able to understood. There are two things. Either you have understood fully, or you understood partially, or you have not understood. If you have not understood, leave it that moment in exam. If you have not understood now, leave this. Can you say in one question only they will give 1 point which will trouble you, and that is killing point. I say one that point only will kill you, and you will leave entire question, because initially if you read this, so you will concentrate on this point, you will focus on this point, and your time will be wasted. Some of you are reading that point you have not understood. You have understood this is error, this must you have understood now. Leave it, do balance point. But if you are wasting your time because of this particular information, which you have not only understood, then you will be mentally surrendered. And because of this point, all other questions you will die. Now, partially understood, suppose, to do whatever you have understood, it will be wrong most maximum. Do it, but whatever you have understood, fully understood, do correct only. It might be correct, it might be wrong. Let's see what you have understood. I will not ask you, I will only explain. On 1st April 2003, means, can you say this is 1 year before? 31st March 2004 means 1st April 2003. ISWA Limited completed a construction of a non-current asset with an estimated useful life of 20 years. The cost of construction was recognized in property, plant and equipment. Means they constructed some property, plant and equipment which useful life was 20 years and depreciated appropriately. Depreciated appropriately means correctly recorded. ISWA Limited has a legal obligation to restore the site on which non-current asset located on 31st March 2043. The estimated cost of this restoration work at 31st March 2043 prices was 125 million. So this is future expenditure. We all know that whenever there is decommissioning, restoration or similar liability, we account it as present value of future expenditure and will capitalize it. So it means what will be the present value? 125 million means 125,000 into what? At 6% given. They have also given what? 31.2 paise means 0.312. So 0.312 how much? 39,000 means we should create a provision of what? 39,000 and we should capitalize means our journal entry should be what? PP account debit to provision for dismantling etc. Provision for dismantling etc. Now what they have done, directors of ISWA Limited have made a provision of 6.25 million. Wow. Means 125 million divided by what? 20. Wrong. Means we should create a provision of 39,000. They have created a provision of 6250 and they have not capitalized also. They have only created provision without any capitalization. They have not created capitalized. It means they have charged it to profit and loss account. There is a wrong effect. That is wrong effect. Correct. Means what we should do? What we should do? Can you say we should create a provision of 39,000 and we should add interest expense on this for 1 year, because this is created on 1/4/2003, but right now we are into 31st March 2004. So as per IND AS 37 we should do unwinding of provisional amount. So we will add interest. So interest will be at a rate of 6%. 6% how much? 2,340. It means carrying amount of provision in the balance sheet will be how much? 41,340. This should be 41,340. Means this should be our provision. And can you see it will be capitalized to the cost price of PP? Means PP should increase by 39,000. PP should increase by 39,000. Correct? Understood. And we'll charge depreciation for 1 year. So we'll do divide by 20. Divide by 20. So this much additional depreciation should be also charged because it was not capitalized. So we have not charged depreciation on that to the extent of that 1 year. So divide by 20. How much depreciation? 11950. This is the depreciation. What will be the increase in PP on the date of consolidation? This minus this. 3705. 37050. 050. This is the adjustment. But how much provision we have already created? We have already created 6250 already created. Correct? Can you say whatever we have created, wrongly created return earning means we should reverse this. We should reverse this now. Means what will be the rectification entry? You only say. rectification entry means what? Ki how much we should reverse? Retained earning account debit how much? 6 to, sorry, my mistake. Sorry. But the property, plant and equipment we should increase by how much? 37,050. Correct. Provision we should increase by what amount? Can you say 41350 minus 6250? Minus 6250? Yes or no? Minus 6250 how much? 35,000 and balance will be adjusted where? In retained earning. To retained earning how much? Retained earning difference? This minus this. 1919. So your retained earnings should be credited by how much? 1960. This is the net effect. Or you can do in this way, simple, if you are not able to understand. First we'll do PP account debit to provision. First journal entry with 39,000. Correct. But already we have created a provision of what? 6250. That will be debited to credited to 6250. So what is the additional provision required? Beginning 39,000 minus 6250. 30,000. 3750. Then can you say will pass one journal entry interest expense debited to retained earning to provision. Means I am just giving separate journal entry now. So what was the interest amount? 2340. Then we'll pass one journal entry for depreciation. Depreciation retained earning will be debited to what? Property, plant and equipment. Property, plant and equipment. That was amount was 1950. So you can think in this way also. So ultimate effect of retained earning is what? 6250 plus 2340 minus and 1950 minus. What is the effect? Ultimate effect is what? $1960. Either do one net effect or this separate journal entry. Ultimate effect will remain same. So it is coming 1960 only, na? 1960. So this is what the rectification entry. So what is the effect? Means your PP will increase by how much in the balance sheet? 37050. Your provision will increase by how much? 35090. And your retained earning will increase by how much? 1960. This is the rectification effect. So increase kar do plus for provision effect, provision wrongly, so 1960 will be affected. Increase kar do. This will be your closing balance of all other equity. Can you find out? Bolo, how much? Have you understood this? Understood? What is the closing balance? Bolo. $13 lakh, 30 lakh. And this is how much? This to I have done. NCI how much? 3 lakh. Check karo in balance sheet whether it is matching. It is matching means we are doing correct. check करो in balance sheet, match. Balance sheet you need to prepare by your own. I am not preparing balance sheet. If this much done, the balance sheet you can prepare. Got this point? With this question, I have covered all the points. One question we have done with that also. Final dividend paid wala also we have done. Now balance all question whatever is given ICA statement, you can do it if this much you have understood. This much you have understood. Okay? Now, there is one more adjustment which was asked in last exam question. Dividend declared but not paid. This I will explain with that question only. But that question I will take after IND AS 28. Okay? So I will explain this dividend declared but not paid. However, if you are conceptually strong, you can do it by your own. Abhi tak we have done dividend declared but paid. Here it was dividend declared but not paid. Means it will come as a liability in the balance sheet. Correct now? Understood? So I will explain this point. Second, there is one more adjustment which is not yet asked about preference shares, which from my point of view in some attempt they will give. I don't know which attempt. If you want, I can explain this point. You want me to explain preference shares? I don't know in your attempt it will come or not, but 100% some attempt they will create that type of question, because this was also very important point in AS based consolidation chapter. Why I know? Because I used to teach in AS that time also CA final. Correct now? So I know these are important points. Some attempt they will create that type of question, but I don't know which attempt. If you want, the topic is what? Preference shares of subsidiary company. Now there are two type of preference shares. One is what? Classified as financial liability. One is classified as what? Equity. If it is classified as financial liability, it is as simple as borrowing. Means as simple as debenture, as simple as other financial liability. So no special adjustment. No special adjustment. My question to you all, if it is a financial liability, the dividend whatever is there, dividend will be expense or it will be distribution. Expense means charge to PL. Distribution means debited to retained earning. But it will be expense or distribution. Expense means charge to PL. The dividend expense will be calculated by applying which rate of interest? By applying which rate of interest? Contractual rate of interest. One second, listen what I have said. Dividend expense will be calculated by applying which rate of interest? I said dividend expense. I have not said dividend payment. Dividend payment is based on what? Contractual rate of interest. I said dividend expense. Abhi we have done yesterday which chapter? Financial instrument. There also we have taken one compulsory cumulative preference here. There we have to calculate dividend expense by applying what rate of interest? Yeah. Now you are saying contractual rate of interest. So it will be calculated, dividend expense will be calculated by effective rate of interest and will be charged to profit and loss account. And if suppose all the entry has been done correctly record, no adjustment required now, and they will give you correct only. Why they will give error? If they have given error, then to apply correct entry. So I will say if nothing has been given, no special adjustment. Treat it as a liability as you treat borrowing. Any other liability. Chalega. But if it is equity, now it can be two types. Either it can be cumulative preference shares, or it can be non-cumulative preference shares. Non-cumulative. Now, if it is non-cumulative, then dividend not declared will be what? Will be lapse. Yes or no? That you know. Dividend is not declared, that will lapse. And therefore no special treatment. No special treatment. But if it is cumulative, dividend not declared is not lapse. It will be carried forward and will be declared whenever you are declaring equity dividend. So here become a special adjustment. Special adjustment. Understood what I am saying? What is that special adjustment? I need to explain. So special adjustment we are doing for cumulative preference shares of subsidiary company which is classified as equity. Interesting concept. They should ask this type of point, but till now they have not given this type of question in ICS study material. I teach in my regular batch. But normally what happens when we come to exam now, so we do only ICA question. We believe in ICA question and okay, do good from a student point of view. Normally they are asking from ICA book only. Normally they are asking from ICA book, but what if they are not asking from ICA book? So it means some other concept also you should do it. Correct now? For worst condition, you should do it. If comes, what you should do? So if you are attempting, you are getting marks. So if you know this, then only you can attempt. Otherwise, how can you attempt? Correct. So of course, chances are rare. But some attempt, pakka they will create. I don't know which attempt. And when they will create, you remember me, sir has said. Same thing I used to say for bonus share. Same thing I used to say for bonus share. But what happened? Dire, I understood they are not asking. I also say, nahi, puchi, why I should trouble my student much? They are not asking. Because unnecessary, if I will teach you more, what will happen? This teacher is teaching more. That negativity will come now. So sometimes what happens, we also teach from a student point of view. I can teach everything, but that much hours you should give me now. If you have given me only 140 hours, how can I teach? Got this point? So that is only point. So can we explain? First, you can understand only when you think that yes, it should come. If you think that it will not come, you will not be able to understand also. So first you should have an intention to understand. So then only I will take. Do you have an intention to understand? Then I will take. If you think sir, rare chances, now leave it, then you will never understand. Then we are wasting our time. So can I take? But chances are rare. Remote chances. Remote chance means as per IND AS 37 no treatment. We don't record in our books of account. Okay? Chalo. Let us do. Let me create one example. Suppose they have given equity share capital as on 31st March 2024, 31st March 2025, 10 lakh and 10 lakh. And 12% cumulative preference shares classified as equity. They will mention if it is given under share capital, means it is classified as equity. It is given under financial liability, means classified as liability. That will be able to understand from the question only. Correct? So suppose 5 lakh and 5 lakh. Understood? And they have given retained earning. Suppose 2,50,000 and 5 lakh. Correct? Then they have given additional information कि on 1/4/2024 parent company acquired 60% of equity shares of subsidiary company. Correct? 60% of equity shares of subsidiary company at rupees 8 lakh. They have given one more information कि parent company acquired 40% of preference shares of subsidiary company at rupees 3 lakh. So they have acquired both. They have acquired what? Equity shares as well as preference shares on the same date. Understood? Correct? Yes, sir. But the percentage are different. Then they have given one more information कि on 30th June 2024 final dividend was paid at a rate of 10% on equity share capital. Means this is all information of subsidiary company. Now you only say this final dividend is for which year? Current year, previous year. So So it means previous year preference dividend will be also paid. It is understood point, because you can't pay equity dividend before payment of what? Preference dividend. Now the question is that whether preference dividend is paid in this year or previous year, that one doubt will come. The question is silent. So what assumption you will take? But the question is silent, what assumption you will take? But preference dividend is paid or not? Previous year preference dividend is paid or not? Paid. Understood point. Current year nothing has been given. But previous year preference dividend will be paid or not? Paid. So what assumption you will take? Paid. But when it is paid? Either you will say it is paid in previous year, or you will assume it is paid on the same date. From my point of view, question is silent. Better assume paid on the same date. Better assumption. Okay? Do as per the information given the question. Nothing is given. So assume preference dividend of previous year is also paid on the same date. That is better assumption. Correct? So I am just writing, suppose it is given in the question only. Ki previous year preference dividend was also paid on 38 June 2024. But nothing has been informed about current year preference dividend. Means current year preference dividend is not yet declared. Correct now? Can you assume by your own that current year preference dividend is already paid? You can't assume that by your own. It means current year preference dividend is not declared. अरे बोलना रे, current year preference dividend is not yet declared. बोलना रे. Understood? So nothing has been given about current year preference dividend. It means it is not yet declared. Understood? Correct. Now we need to prepare statement of net asset. Can we do? So first we'll do AOP. Retained earning has been given. Closing balance, opening balance. Both I have given. How much I have given? 5 lakh and 2,50,000. So what is the profit after appropriation? 2,50,000. Can I say in this we'll add final dividend? How much? 10% of 10 lakh. Means 1 lakh will be added. We'll also add preference dividend. Preference dividend is also paid. So preference dividend will be also added. How much? 12% of 5 lakh. That is what? 60,000. Total become how much? Total become how much? It is 4,10,000. Correct. So this become profit earned during the year. No other adjustment even. Now we will allocate in pre and post. Because I have given on which date it was acquired on 1/4. So I have not given any time adjustment. So entire profit is what? Post. So retained earning, entire profit is post. 4,10,000 is post. But opening balance will be pre. Opening balance is what? 2,50,000 is pre. So 2,50,000 become pre and 4,10,000 is post. Understood? Then you will do minus final dividend paid how much? Final dividend paid how much? How much? Final dividend paid amount is what? 1 lakh. From pre ki post? Post. 1 lakh minus. Then in preference dividend paid, but the pre ki post? Post. The concept remains same now. Up to this too, you could have done by your own. No special adjustment. Just try to understand. Up to this, no, but the preference dividend has the same treatment as we have done for equity dividend. Same treatment. But there is one special adjustment. Don't write now. Don't write. This is what profit is coming: 4,10,000 plus 1 lakh minus 1 lakh minus 60. Fast. 2,50,000. 2,50,000. Now normally what we do, we'll allocate this to equity shareholders, means 60% and 40%. But out of these, can some profit belong to preference shareholders? Because preference dividend of current year has not been declared, and that is cumulative preference shares that will be declared in future. It is not lapse now. So out of these, some profit belong to preference shareholders. So can you allocate entire profit to equity shareholders? No. This is special adjustment. So what our IND AS 110 says that when you are calculating profit which should be allocated to parent company and NCI, before allocation also deduct preference dividend of cumulative preference shares which has been classified as equity even though dividend is not declared. Even though dividend is not declared. Correct only. Can is a common sense point? Common sense point कि this profit entirely does not belong to equity shareholders. Some profit belong to what? Preference shareholders. So from this special adjustment is what? Minus what? Preference dividend of current year not yet declared. Not yet declared. If declared, so already you have deducted. Declared means paid now. So that already you have done. But if not yet declared means not yet paid. Not yet declared. So deduct it. How much? 60,000. So this balance profit, how much? This balance profit will be allocated in 60% and 40%. And this will be allocated in 40% and 60%. Because out of preference shareholders, some portion belong to what? Parent company. You can see 40% belong to what? So that profit will be allocated, but will be allocated in 40:60 ratio. And the profit which is available to equity shareholders will be allocated in 60:40 ratio. Understood? This was the concept. Till now not asked, but what was simple only now. If asked, of course no one can do it because new question. But can you see, if you have understood, you can attempt now. That is the point. What question they are asking that we don't know. But if you know each and every point, you can attempt it. So can it's simple. Have you understood this point? So it means the total profit is 2,50,000, but allocation will be different. This profit is 40:60. This profit is what? 60:40. Chalega. Now we can prepare Sona. Sona may be special adjustment. Sona. Date of acquisition, date of consolidation, post. But the equity share capital how much? 10 lakh and 10 lakh. My question to you all, whether preference shares will come? Whether preference shares will come? Yes, because that is also equity. So cumulative preference shares will come 5 lakh and 5 lakh. Correct? Yes or no? 5 lakh. And retained earning will come. How much already we calculated? How much we calculated? It was 2,50,000. 2,50,000 and 1,90,000 na. 2,50,000 and 1,90,000 na. Total is what? $4,40,000. Now this will not match with closing balance. Why? Because 60,000 we have deducted. It was actually 5 lakh closing balance, but we have already deducted 60,000. So it will not match. Understood point? It will not match. Now what is the total? 17 lakh. $19 lakh. This will be allocated in which ratio? 60:. Now you are doing correct now. So 60:40 how much? 1,98,000. How much? 1,14,000. 76,000. Done. Now, goodwill or gain on bargain purchase. Apply common sense. Okay. Now you can see I am writing separately so that you can understand equity shares, preference shares, total. Basically we will do in total. But what is the cost price of investment? So equity shares they have acquired at what amount? 8 lakh. And preference shares? So 8 lakh plus 3 lakh na? 8 lakh plus 3 lakh. And total is what? In exam, do total wise. This I am giving for explanation purpose. This is total equity purchase. And total consideration paid. Total consideration paid. Total consideration paid. Now value of NCI by using which method? Pasina method. Pasina method. Now just try to understand. This has two parts. One belong to equity shareholders. One belong to preference shareholder. But the preference shareholders how much? Can you say 5 lakh belong to preference shareholders? And this 10 lakh plus 2 lakh 50, 12 lakh 50,000 belong to what? Equity shareholders. So बताओ your NCI will be what? 12 lakh 50,000 how much? How much? 40% now. And 5 lakh how much? 5 lakh how much? 60% now. 60%. बोलना रे. That will be NCI na. So you can't do in total. Total you can't apply 60%, 40%. So be careful. Special adjustment till now not asked. But very interesting point. Very interesting point. 12 lakh 50 into 40% how much? 5 lakh. And 5 lakh into 60% how much? 3 lakh. Total NCI become how much? 8 lakh. If you are applying fair value method, to do based on the fair value of equity shares and fair value preference shares. Fair value of equity share for this, fair value preference share based on this. So both fair value will be given in the question. Both fair value will be given in the question. Total. Total is coming how much? 13 lakh. This is what? 6 lakh. This is how much? 19 lakh. Now minus what? Fair value minus fair value when I directly do 17 lakh. 50,000. So what is the goodwill? Goodwill is 2 lakh. 1 lakh. 50,000. This become goodwill. Partial goodwill. Understood? Understood this much? Now when you are calculating other equity, retained earning and NCI. But the opening balance though I have not given for this. This parent company information I have not given. NCI how much you will take? 8 lakh. NCI how much? 8 lakh na? This na? Are bolna re? NCI. Now when you are allocating the profit, how much you will allocate as per Sona? 149, 114 and 76,000. But now you need to also allocate preference dividend not declared. So that 60,000 will be allocated in which ratio? 40:60 means how much? 24,000 and 36,000. This will become your retained earning and NCI. This will become retained earning NCI. So this is 40:60 ratio. This was 60:40 ratio. This was the concept. Have you understood? Suppose the entire cumulative preference share belong to NCI. Then okay, 100% NCI. Then entire profit belong to what? NCI. And entire preference shares will become what? NCI. That is also quite possible. They have not given any acquisition by parent company. Then entire cumulative preference shares belong to what? NCI. That question can be also asked. So be careful in that case. Means I have intensely I have given 40%, 60% so that you can understand why we are allocating on that way. I hope you have understood. Once you have understood, correct now, you can apply this point in exam. So this one adjustment I think can be asked in exam, which is not yet asked in exam. Apart from that, only one point was left. This was also asked in exam in the last attempt. Dividend declared but not yet paid. That I will do with that question. Chalega. So with this consolidation, all point done. Now we can come to joint arrangement and what? Associate. Joint arrangement will do before break. Associate will do after break. Joint arrangement is very simple. Correct. But up to this, any doubt? So one question I have not done, that you do by your own. One question I have not done, which is given expected question. This question you do by your own. Okay, 24. You will be able to do it now. ठीक है, do it by your own. Already asked in exam. This question was already asked in exam. Now let us come to joint arrangement. Now joint arrangement, let me give you the basic point. When I am saying joint arrangement, so joint arrangement means any contractual agreement between two and more than two parties. Contractual agreement between two and more than two parties, which gives them joint control. Means when I say control, it is subsidiary. When I say joint control, it becomes a joint arrangement. Now, any joint arrangement are of two types for accounting point of view. So, for accounting treatment, it can be joint operation or joint venture. For accounting treatment, it can be joint operation or joint venture. Joint operation can be unstructured or it can be structured. But joint venture will be always what? Structured. Unstructured means whenever a separate entity is not created. Suppose we both join together and we said, sir, let us teach CA foundation without creating any separate legal entity. So that is what joint operation always. But we joined together as a partnership firm and we created a separate entity partnership firm and let us teach CA foundation. I will teach accounts, you teach all other subjects. Correct now. So this is also what? Joint arrangement. But if it is structured, so it can be either joint operation or joint venture. Means doubt is not in this case. This will be always what? But whenever structure, one doubt will come whether it is joint operation or joint venture. So what IND AS 111 say that whenever parties which are having joint control have a right to asset or obligation to liability of joint arrangement, then this will be always joint operation. What I said, whenever a party is having joint control, have a right to asset and obligation for the liability, then this will be always what? Joint operation. Means in simple words, suppose we join together, we created a separate company. I contributed one building, you contributed furniture and fixture, correct? So whether I have a right on this building or not, because this is my building. Once the joint arrangement will be over, this building belong to whom? You ki only me. This is only for a special purpose na. Special purpose I contributed building. Once the joint arrangement over, this building belong to me only. So I have a right on what? Building. You have a right on what? Furniture and fixture. Therefore this is joint operation. Joint operation. But suppose we both join together. I invested 1 lakh, you invested 1 lakh. And now we purchase building and furniture and fixture. Batao, this belong to me. This belong to you. It means I have a right on net asset of the company. You have a right on net asset of the company. So you have a right on net asset. It means what? It is a joint venture. It is a joint venture. So I have just given hint. I am not going to depth concept content of IND AS. But once you read now content, you will be able to understand. So whenever the parties having joint control have a right to asset and obligation for the liability, it is what? It is what? Joint operation. Whenever parties having joint control have a right to the net asset of the joint arrangement, then it is what? Joint venture. Correct. However, in question they will inform you whether they have a right or they do not have right. Understood? Now, the accounting treatment of joint operation and joint venture are different. The accounting treatment of these in SFS apply IND AS 27 and in CFS apply IND AS 28. So IND AS 111 says joint venture we are not giving any accounting treatment. Go to IND AS 27, go to IND AS 28. It means joint venture is defined under IND AS 111. But accounting treatment is given under IND AS 27 and IND AS 28. Means the accounting treatment of joint venture is similar to what? Associate. For accounting purpose, joint venture and associate are same. And therefore, we'll do under IND AS 28. So when I will do IND AS 28, automatically joint venture and associate will be covered. But the accounting treatment of joint venture is given under IND AS 111. IND AS 111. So what they want to say? Suppose this is the balance sheet of a joint operation. This asset 1, asset 2, asset 3, asset 4. Correct? This belong to Mr. X, this belong to Mr. Y, this belong to X and Y, this belong to X and Y. Quite possible. Means there are some asset in which whoever right X, some asset in which whoever right, some asset which are jointly held, some asset which are jointly held. Similarly, liability 1, liability 2, liability 3, liability 4. These are what? X, this is Y, this is jointly incurred, jointly incurred. So now what IND AS 111 says that in the individual financial statement, correct, all the asset will be incorporated. Means in the books of X, in the books of Y. In the books of X, we record what? Asset 1, 100%. In the books of Y, we record asset 2, 100%, because that belong to what? X and Y separately. Correct? And which are jointly held, that will be proportionately recognized. Means suppose their profit sharing ratio is 50:50. So this will be proportionately allocated. So asset 3 will come in both balance sheet proportionately. Asset 4 will come in both balance sheet in the individual financial statement. Means what IND AS 111 says that joint operator, they are known as joint operator. So in the individual financial statement of joint operator, their asset will be recorded. Their asset means what? Asset 1. Correct? And the share of jointly held asset will be recorded. And share of jointly held asset will be recorded. Then second, their liability will be recorded. Means liability means X. This will be recorded, liability 1. And the share of jointly held liability will be recorded. Share of jointly held, these are jointly held. So proportionately it will be recorded. Similarly, we'll also record their income and we'll also incorporate share of jointly earned revenue, jointly earned income. Correct? Understood? Or they will also record their own expense plus jointly incurred expenses, share of jointly incurred expenses. For example, we are teaching CA foundation. Okay. X is teaching accounts, Y is teaching maths, and we hired 2 faculty for law and economics. Okay, na? So the accounts fees belong to whom? X. Entire fees will be transferred to individual financial statement of X. Maths fees belong to whom? So that income belong to what? Y. But can you say any income from law and economics, because they were to employ faculty we have hired. So that does not belong to that faculty now. That belong to us only. So any income generated from law and economics belong to both. Belong to both. So that will be shared between both parties in their profit sharing ratio. Same thing expense. Expense of account classes belong to me. Expense of maths classes belong to him. But expense of other classes belong to both. So that will be shared between both. This is the accounting treatment. Have a lollipop 2-3 question has been given that you can do by row. Very simple. This is what joint arrangement. This is joint arrangement. Correct? I think I have taken some question. Let me take that question. Acha, this. Yeah. One question this. Question number 3. Similar question I think was given in RTP or MTP in MCQs. Same question was given in RTP, MTP in MCQs or exam. I don't remember, but similar question they have given in RTP or MTP, but in MCQs they have given. Okay? So quite possible now this type of question they may ask in MCQs. Because super easy question now. So they will not ask for 5 marks, they will ask for 2 marks, this type of question. On 1st April 2007, Alpha Limited commenced joint construction of property with Gamma Limited. For this purpose, an arrangement has been entered into that provide joint operation. Joint, it is mentioned in the question joint operation. Game is over. Now joint operation. Given the question, now don't apply your content of IND AS. It is joint operation. And ownership of the property. All the ongoing expenditure comprising maintenance plus borrowing cost is to be shared equally. The construction was completed on 30th September. The construction was completed on 30th September. Started on 1st April 2017. Means how many months? 6 months. My question to her, 6 months as per IND AS 23, it is substantial period of time. It is not substantial period of time. Huh? Means whether borrowing cost will be capitalized or borrowing cost will not be capitalized. Huh? Huh? Will be capitalized, will not be capitalized. Means you don't know anything. This is not correct. What IND AS 23 says? What IND AS 23 says? His substantial period of time is not defined. Not defined. Means we need to apply judgment. Apply judgment. So IND AS 23 is totally silent about substantial period of time. So we need to apply judgment whether any period of time is substantial or not substantial, as we have done in what? IND AS 109, substantial what? Modification. So that was defined, but here it was not defined. So what we'll take? We'll take the help of AS 16. We'll take the help of AS 16. AS 16 means what you have done, CA in term. CA in term of what they have done. What AS 16 says? First let us understand. AS 16 says that any asset which is taking more than what? 12 months, it will be always qualifying asset. But any asset which is not taking more than 12 months, it may or may not be qualifying asset depending upon the facts and circumstances. So AS 16 says that if any asset is taking more than 12 months, it will be always what? But if any asset is taking less than 12 months, it may or may not be qualifying asset. Apply judgment. So it means for this to now we get creative, it will be always qualifying asset. In this doubt will come. Means in exam you take assumption. If the question is silent about judgment. Correct. If the question is silent of judgment, take assumption. And can you say if you are constructing a big asset, it will be always a qualifying asset. Suppose you are constructing a flyover and the construction completed in 6 months. Huge expenditure involved. It is a qualifying asset only. Understood point. Why it will not be a qualifying asset? It will be a qualifying asset. So normally we should assume it is a qualifying asset. But if you are assuming it is not a qualifying asset, give a note. But marks will depend upon who is checking your paper. Understood? But your answer will be correct because in this judgment need to be applied. In this question, even though question was silent, they have assumed it is a qualifying asset. Because they have said they have commenced construction. Construction means okay now. 6 months is substantial only. Why it is not substantial? Why it is not substantial? So normally whenever construction word now, my judgment is what from exam point of view always what qualifying asset. But whenever acquired and they are taking 3 months, 4 months for making ready for use for installation, etc., you can assume what? It is not substantial. You can assume, correct? So I will say construction whenever given now, always assume it is a qualifying asset. Correct. And utilization of the property started on 1st Jan 2018. But it was completed on which date? We started using on which date? My question to you all, depreciation will start from 30th September ki 1st Jan? 30th September ki 1st Jan? 30th September. Very good. This too you have understood. From the date when it is ready to use. At which time the estimated useful life of the same was estimated to be 20 years. Total cost of construction of the property was 40 crore. Besides internal accrual, the cost was partly funded by a loan of 10 crore taken on 1st Jan 2017. The loan carries interest at a rate of 10% with interest payable at the end of 31st December each year. The company spent 4 lakh on the maintenance of such property. The company has recorded the entire amount paid as investment in joint venture. Wrong? Because it is joint operation. So investment will not come. Now the property will come in the balance sheet. The loan will come in the balance sheet. So this is not correct treatment. This is not correct treatment. Joint operation now. In joint venture it will come as an investment. But in joint operation it will not come as a investment. In the books of accounts, suggest suitable accounting treatment in the verb as per respective interest. Very good question. I like this question personally. The first you need to find out what? Cost price of PP. But what was the cost given? How much they have incurred? 40 crore. 40 crore na? 40 crore they have given. Can I say in this will capitalize what? Borrowing cost will be capitalized. Borrowing cost will be capitalized. So it was the commencement started from 1st April 2017 and on 30th September. So we'll capitalize borrowing cost for how many months? 6 months. What was the amount of loan? 10 crore. Even the loan was taken from 1st Jan. This was not relevant. Commencement of capitalization will from 1st April 2017 as per IND AS 23. Means you need to understand IND AS 23 also in this. IND AS 23 knowledge is required. Chalega? So it is 10 crore multiplied by 10% into 6 by 12. How much? 0.5 crore. So it becomes 40.5 crore. Can you say out of this, uske depreciation. Can you say minus depreciation for how many months? It is 6 months only. So 40.5 divided by 20 into 6 by 12. How much it is coming? 1.0125. This depreciation. This become how much? Minus carrying amount how much? 39.4875. This belong to alpha and gamma in 50:50 ratio because this become jointly held asset. So 50% will go to the financial statement of alpha. 50% will go to the financial statement of gamma. Correct? This depreciation, but the 50% will go to the financial statement of alpha. 50% will go to the financial statement of gamma. Understood? Then borrowing cost. Loan. Loan is how much? 10 crore. It is not repaid. So 50% of this liability will go to what? Financial statement of alpha. 50% of this liability will go to what? Financial statement of gamma. Then there is one maintenance cost. Maintenance cost how much? 4 lakh. 4 lakh. So 50% of this will go to what? Financial statement of alpha. 50% will go to financial statement of gamma. This is the question. Understood? Correct? So you can now read and understand by your own what they have given. Correct now? Now, this is very, very important point. Samajhna. This also question was asked in exam. Very interesting point. Means when this question was asked, it was a question of ICS study metric. But when this question was asked, I have understood they can ask anything. Because this was very good point. Conceptual point. Correct? Suppose A, B, C, D are 4 parties to a joint arrangement. Companies A, B, C, D. They invested what? 25, 25, 25, 25. Now these 3 have done one contractual agreement to have joint control this. So 75% हो गया. So can you say this is to alone? Akela na? It means who have joint control? A, B, C. Means D is a party to this company but not having any joint control. So there are 2 type of party. A, B and C are the party having and D is a party having not having joint control. So right now whatever accounting treatment I have given, that is for A, B, C. Parties having joint control. Now question arises, any party that is a party to joint arrangement but having no joint control, what will be the accounting treatment? So what they say, just try to understand. For D what they are saying, if they have right to asset or obligation for liability, means if they have a right to any asset or obligation for any liability, even though they do not have any joint control, means they might have also contributed some asset, quite possible, but they do not have joint control. Then the accounting treatment will be similar to joint operator. Whatever we have done. But if they do not have no right to asset, no obligation for any liability, then the accounting treatment will be as per IND AS 109. As per IND AS 109 means this become, for this party, this is investment in equity interest. Investment in equity interest. Apply FBTPL or FBTOCI as the case may be. So then the accounting treatment will be as per IND AS 109. This is given. This question was asked in the form of this question, which might be again repeated. Therefore, I have given as an expected question. But this is theoretical answer. Just read it. Can be again repeated in exam. Then one new question was introduced, which is not yet asked, but this is important for MCQs. I think this is for identify whether it is a joint operation or, already I have explained, you can do by your own. Already I have explained. So this is MCQ. For MCQ it is important. It is given RTP, MTP till not asked. Important. Can be asked for 5 marks also. 6 marks also. 1 marks, 1 marks, 1 marks like this. Important, do it. From my point of view, already given 2 time in RTP, MTP, now expected. Now expected. Can be asked in exam. Correct? Now, the last point is what? Of this chapter. कि transaction between joint operator and joint operation, both are JO, इसलिए I am not writing. Joint operator means joint operator means party, joint operation means joint arrangement. ठीक है? So suppose Mr. X is a joint operator and XY Limited is a joint operation. So there may be some transaction between these two parties. Suppose they have sold one property, plant and equipment to X Limited, XY Limited. ठीक है? Cost price was ₹100. Profit was loss कर लो. Loss was ₹20 and 80 was sale price. Correct. So this become cost price of this. So what will be the journal entry in the books of Mr. X? What will be journal entry in the books of Mr. X? Not in the books of joint operation, because joint operation, so we don't prepare separate account. All journal entry will do in the books of what? In respective parties, in the respective individual financial statement of that party. Correct? Are you able to understand? So what will be journal entry? What they want to say? Ki they will recognize bank, they will say, what journal entry? They will say bank account debit. How much? No. Only to the extent of other parties' shares. Because can you say whatever they have sold to joint operation. So out of that 50% belong to what? Mr. X only. Mean they have sold only to the extent of 50% interest now. Let us think in this way. Suppose they have invested 60%. Suppose they have invested 60%. Arey? One minute. What happened, Ray? He is also tired. Hang. चलो. Now, what I was saying? Ki suppose Mr. X has invested 60% on this, means Mr. Y has 40%. Suppose let us assume there are two parties only, 60%, 40%. It means whatever they have sold, 60% belong to them only. Means they have sold only to the extent of what? 40%. They have sold only to the extent of 40%. Therefore, their journal entry should be only to the extent of what? 40%, which they have transferred. Means they have transferred right only to the extent of 40%, because 60% they have retained or not. They have already retained 60%. Means the journal entry what? Bank account 80 into what? 40%. How much? 32. 2. Property, plant and equipment 100 into what? 40%. How much? 40. And they will recognize the loss only to the extent of 40%. That is how much? 8. Understood? This question has been given ICS study matter till not asked 2 marks. Super important question. 2 marks. For 2 marks. Understood this point? So simple word, pass journal entry to the extent of 40%. Understood? Pass journal entry to the extent of other party interest. You can do it. You can do it now. If suppose they have given a transaction with profit, then also you can do it. Correct? Now there is one special point for loss. Therefore I have taken loss. Profit, there is no special point. Loss, there is a special point. Now what they are saying? If there is an evidence of impairment, special point, evidence of impairment. Bola no evidence of impairment. Yes, there is an evidence of impairment. Bola if there is no evidence of impairment, don't pass any journal entry for further loss. But if there is an evidence of impairment, so can I say it means they should recognize the entire loss. Ki suppose the sale price is equal to recoverable amount. Sale price is equal to recoverable amount. It means can I say their own interest means to the extent of 60% is also impaired. 60% means what is the 60% of this is 60, and their recoverable amount will be what? 80 ka 60% how much? 48. Means this loss need to be recognized as an impairment loss or not. So what they are saying, if there is an evidence of impairment loss, then you should recognize further loss of what? 12 to property, plant and equipment 12. Understood? If there is an evidence of impairment. But if there is no evidence of impairment, that 12 will not be recognized as a loss. In the books of what? Mr. X. In the books of Mr. X. Understood this point? If question is silent, always assume there is no evidence of. If the question is silent, always assume there is no evidence of impairment. Only pass this journal entry. Only pass this journal entry. So what I said, first pass this journal entry to the extent of other party interest. Then if there is an evidence of impairment loss, recognize entire loss, balance loss also. But if there is no evidence of impairment loss, no further journal entry. Chalega. Now I am giving one more question. If you can do it, means you have understood. Okay. Mr. X, same question. Joint operation. Now they have purchased. They have purchased. Mr. X has purchased. Means joint operation has sold cost price 100, loss 20 and sale price 80. Correct. And they have purchased from them this property, plant and equipment. So they have purchased at 80. Batao. What journal entry will do in the books of Mr. X? Apply common sense. Now joint operation, some goods, some property, plant and equipment was sold by joint operation to Mr. X. Now whatever they have sold, I am just giving him, whatever they have sold already is 60% belong to what? Mr. X. 40% does not belong to Mr. X. Now give what is the answer. But they will record 60% or 40%? 40%. Because already 60% recorded or not. So batao, they have purchased the property, plant and equipment, account debit to bank, how much? 32 and 32. This is the entry. This two similar question is given in ICS study matter, which can be asked. Which can be asked. Understood? Last question, which is newly inserted in ICS study material. That also I will cover, because if I will not do that, then maza nahi aayega. Last question. This question is also in CA Inter book, because now AS 27 is also introduced in CA Inter. Same question is given in CA Inter, same question they have given in CA final. Means both are same. CA Inter and CA final are same as per ICA point of view. Entities A's and B's, apply now your common sense, I will not do it. Entity A and B establish 50:50 joint operation in the form of separate legal entities. Suppose this question come in exam and we have not done in class, but we have done a concept. Concept we have done, so you can't say out of book. Whatever you have understood, do it. Let's see whether you are doing correct or wrong. Entity J, whereby each operator has a 50% ownership interest and take 50% output. Okay. On formation of joint operation, entity A, on formation of joint operation, means today is the formation date. Entity A contribute a property with a fair value of 110 lakh and an intangible asset with a fair value of 10 lakh. whereas entity B contribute equipment with a fair value of, it was contributed to whom? Joint operation. So there is a transaction between joint operator and joint operation. Means it is sale of what? Property, plant and equipment. Okay? The carrying amount of this asset, entity A is 100 lakh. So entity A 100 lakh, this is the carrying amount of what? Carrying amount of what? This property as well as what? Intangible asset. So 100 lakh is given for both. And for B is what? 80 lakh. 80 lakh is only for what? Equipment. What will be the amount of any gain or loss to be recognized in entity A and entity B? You do give only for entity A. If you are giving entity A correctly, means entity B also you can do. What will be the gain or loss in the books of entity A? I'm just giving hint. Coming in, going out. Think. Coming in, what is coming in and what is going out? Good point is both are 50-50. You'll do, I will not do. Huh? Mr. X, Mr. Y. Mr. X and Y now. Oh, sorry, A and B. A and B. Coming in, going out. Apply. I say this question comes in exam. You have two options, do or do. Do. Give me either wrong amount or correct amount. What is the gain or loss in the books of X? In the books of A. 10 is gain. Loss. 10 is loss is coming. Any other answer? Gain. You are saying gain. 10 is gain. One is saying 10 is gain. You are saying loss. ठीक है ना? 30. 30 is what? Loss. चलो. Any other option? चलो. Let's see. Now, what is coming in the books of X? What has been transferred by B? B. So what is coming in? बताओ. Equipment. So whatever is coming in, that will be recognized at fair value. Recognized at fair value. So what is the fair value of equipment? 120. 120 ka 50% how much? So this will be recognized at 60. What is going out? Going out to will de-recognize at carrying amount. So what is going out? Intangible asset property. What is the carrying amount? 100. What is the 50%? 50. So coming in, going out. So there is a gain of what? Rupees 10. Gain of rupees 10. And the same thing now do for B. Now you'll do correctly. Do for B. How many of you said 10? Gain. Means you can say if you try to attempt, you can do correct. So attempt it in exam. You also said gain, na? Bolo. What is coming in for B? Intangible asset and property. Fair value is what? Total fair value? 110 na? Total is what? 120 means 60 will come and 40 will. So 20 is what? Gain. Both have gain. So 10 and 20 again check karo. What is the answer given? 10 and 20 is given. Chalega? This is only given. They have given two alternative way of calculation. Simple. So this type of question can come for 2 marks MCQ question. 2 marks MCQ. 100% accepted. It is expected can come. The joint arrangement is also completed from my point of view. After break we'll take joint, associate. Associate will complete and then we'll complete as a share based payment. Share based payment is left now 2 points. That is also target to complete. So once associate completed, consolidation completed from my point of view. Okay, sir? Break for how many minutes? 45 minutes. Lunch break 45 minutes. Okay. चल हेलो 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 coming sound coming hello not coming sound hello hello now voice hello hello now what they have done hello can you come once mic is not working hello hello this one not working no chalo can we start once again everyone yes sir okay so we are left with IND AS 28 we have completed IND AS 110 and IND AS 111 however two more questions will take both are last 2-year examination question 2 attempt examination question both will take and let us we'll see that whether we are able to do it or not okay so IND AS 28 let us first complete it because last attempt they have asked one question of associate and subsidiary last attempt correct however similar question we have taken in the class but normally what happens when we don't have question in ICA study material we don't do before examination and when you don't do just before examination that will not click in your exam but investment associate is very simple investment associate joint venture meaning to already be covered by under IND AS 111 but accounting will be covered under IND AS 28 associate meaning will be given under IND AS 28 only so what do you mean by associate associate is an entity in which investor has significant influence and which is neither a subsidiary nor a joint venture means if the investor has a significant influence over the entity that entity will become associate now significant influence means power to participate in the financial and operating policy decision of the investee. So if you can participate in the decision making, then that investee will become a associate. Now this power to participate will be presumed from share ownership. So what IND AS 28 says that if any investor is holding 20% or more than 20%, either directly or indirectly, then it will be presumed that the entity is able to exercise significant influence unless otherwise can be demonstrated otherwise. Correct? Or simple what they are saying, if they are holding less than 20%, then it will presume that the entity has no significant influence. Now when they are saying directly or indirectly means what? Direct relationship is always directly, means if I am saying P is holding 40% over A, so it is direct significant influence directly. But suppose P is holding 60% over S and S is holding 40% of A. So can this A become associate of subsidiary? And through subsidiary, this A will also become associate of parent company. Through subsidiary, A will also become associate of what? Parent company. This is known as indirect significant influence. Indirect significant influence from P company point of view. Means the P company will prepare CFS for subsidiary as per IND AS 110 and for associate as per IND AS 28. S will prepare CFS only with A as per IND AS 28. Got this point? Correct. But if I say in this way, P hold 40% of A, S, and they hold 40% of A, so A become associate of subsidiary. Correct? S become associate of what? Parent company. But because S is not a subsidiary of P, so A will not be an associate of P. So the relationship, indirect relationship is always created through subsidiary. Understood? Correct. So this is two type MCQ question of this nature can be asked in exam, whether there is a direct or indirect holding or not. Correct. So indirect relationship is always created through what? Subsidiaries. Now there is one more important point. Already we have not done the definition of control. Means I have not done revision of definition of control. Correct now. So control definition, of course, you can revise by your own. You want me to revise control definition? Because that is, we don't expect this type of question, but MCQs, that control definition is important. 2 marks question can be asked from the definition of control definition. Now what IND AS 110 says that control definition, there are 3 elements. Control definition, IND AS 110, first they say there must be power over investee. Second they say ki there must be exposure or right to variable return of investee. And third, there must be ability to use power. If these 3 elements exist, then the investee will become subsidiary of investor. Correct? Means that investor will be able to control the acquiring company. Got this point? So in that power over investee, so what IND AS 110 says about power over investee? So what they say, keep power over investee, for that there are 2 type of right. One is known as substantive right. One is known as protective right. So if there is some protective right of investor, this protective right will not be considered for determining power over investee. So we will not consider any protective right. Sometimes protective right is given to investor only to protect the interest of our investor. For example, debenture holder may have a right in case of non-repayment of the principal amount, interest amount, they can file a case against the company for the liquidation of the company. They have that much right. So that is only a protective right to protect their interest. So any protective right will not be considered to determine the power. So only substantive right will be considered. Substantive right means what? Keep practical ability to exercise that right. Correct? This right is normally arises from voting right. This right normally arises from voting right. Normally can I say if more than 50% will have voting right. So if any entity is holding more than 50% of paid up share capital, it means they have a voting right. But sometimes what they say, even though they are not holding more than 50% of paid up share capital, then also they may have some de facto power. We call it what? De facto power. de facto power. So this de facto power can arise in three situations. One, first situation is known as some agreement done with other shareholders. Agreement done with other shareholders. For example, A, B, C, D are four investors. A is holding 40%, B is holding 20%, C is holding 20%, and D is holding 20%. So nobody is holding more than 50%. Correct. But what A has done? A has done one agreement with B. A has done one agreement with B कि on behalf of B now A will vote. On behalf of B now A will vote. So it is not joint control. Joint control means both will have unanimous consent. Both consent are required to take any decision. But here will not consent B. On behalf of B, who will take the decision? A. So it means even though they are holding 40%, they got what? De facto power with the mutual agreement with other vote holder. So this type of question till now not asked, but suppose this type of question they have created. So in this case, बताओ what is the A's holding ratio? A's holding, hello, A's holding ratio is how much? I mean, voice is coming? Hello, something happened na? अरे यार. Hello, hello, now I have done nothing. Hello, hello. Hello. Once again, this mic is not working. The mic is not working. Chalo now. So what I was saying, we are discussing about control definition. So control definition, I say there are three elements: power over investee, plus then there must be exposure or right to variable return, and then there must be ability to use power. Out of that second two condition, even though not given, will be deemed to be satisfied in every question. Normally they will ask the question for first condition, that is power over investee. Now for the power over investee, there must be right, existing right. The right normally comes from what? Either there can be substantive right or protective right. However, protective right will not be considered from the point of view of power. So even though any investor has protective right, that should not be considered to determine the power over investee. So only we need to consider substantive rights. Substantive right means what? Practical ability to exercise that right. So that comes from voting right. That comes from voting right. So if any entity or any investor is holding more than 50% of voting right, so always that will be deemed that yes, they have a power over investee. Power over investee. So correct. So if they are holding more than 50%, so of course there will be some power over investee. But sometime whatever, even though investor is holding less than 50% of voting right, then also they may have some de facto power. So there are three circumstances when an investor may have de facto power. This is important from examination point of view for 2 marks MCQ question. Correct. So what I said, first circumstance is what? When investor has done agreement with other vote holder. So I was saying A, B, C, D, 40, 20, 20, 20. In this you can see no one has what? More than 50% of voting power. Correct? Voting right. So now A has done one agreement with B that on behalf of B, A will vote. So in that case, what happened? A has got 60% voting right. 60% voting right. Understood? So it means A will be having de facto power, and if the other two conditions are satisfied, so A will have control over investee. So if suppose this type of question they ask, so in that case, A holding will be what? 40% or 60%? No, 40%. They have a control. But can I say their holding ratio is what? 40%. So till now this type of question they have not asked. Suppose they created a question where they will inform you that this situation arises. So A will be able to control what? Investee. So investee becomes subsidiary. So of course consolidation required. But in that case the allocation will be what? 40% will be parent company and 60% will be what? NCI. 60% will be NCI. Then also consolidation is required. Consolidation is required. First situation you have understood. Till now this type of question has not been asked. I don't know whether it will be asked or it will not be asked, but if asked, it will be a difficult question because of this particular point. Other entire working note remains same. Entire working note remains same, only the allocation will be 40:60. The second is what? Suppose A is holding 40% and there are small shareholders. There are many small shareholders. Total holding what? 60%. So small shareholders, it is quite possible they are holding, their total holding might be less than 1% each holding, and they will not participate actively in the general meeting. So even though they are coming, they will not all come. So they will not all come because they are small shareholders. For example, I am also the owner of Reliance Industry Limited. You know, I am also owner because I am holding what? 1000 shares. Correct now. But I will never go to the meeting, even though Mukesh Ambani is calling me, but I will never go. I say you only do on behalf of me. So I am not a actively I am not participating in the general meeting. So my vote is of no meaning, even though I have a voting right, but it is of no meaning. So in this case, what happens? A will get de facto power. Now all the decision who is taking? A is taking. So in this situation, A will get de facto power over investee, and A will be able to control the investee, and therefore consolidation required. So in this case also A will be 40%, NCI will become 60%. The last is what? Potential equity share. Potential equity share. Now this is very interesting. Suppose this is the date when the general meeting will be held. Now right now A is holding 40%, but he has a potential voting right. Now I think you know about potential equity share because you have done EPS, earning per share. So you know about potential equity shares, which can be converted into equity shares. Either it can be convertible debenture, it can be call option to purchase additional equity shares, it can be call option to purchase additional equity shares. So they are holding some option or they are holding some potential equity shares, quite possible, which may give them 20% additional equity shares in future. means they can exercise this right to acquire 20% additional equity shares. Understood now? So right now this is potential equity share. So whether it will be considered to determine power over investee, so what IND AS 110 say, yes, it will be considered if the potential voting right are substantive. Substantive means it is in the money. In the money means it is favorable. Whether they can exercise it. Well, if it is in the money, so of course they will exercise. And if they can exercise before general meeting, means all the decisions in the general meeting will be taken by them only. So it means if that can be exercised before general meeting, it will be considered as what? De facto power, and they will be considered as having power over investee, and they will consolidate that subsidiaries. It means potential equity shares will be considered only when it is substantive. Substantive means it will be in the money. In the money means when it will be favorable. Favorable means if it is deeply out of money, then it will not be substantive, and therefore it will not be considered for determining power over investee. Important for 2 marks MCQ question. 2 marks MCQ question means with the introduction of MCQ, now this all paras become important. When there was no MCQ, we used to say they will never ask this type of question for 2 marks now, because there was no scope only. So now all these para become important because of MCQ questions. Got this point? Yes, sir. So this was a control definition. I have given an overview. Now you just read, you will be able to understand. So why I have done this point? Because to explain this point about what? Associate. This is also very important. Now what IND AS 28 says that whether potential voting right will be considered to determine significant influence. Well, yes. Yes. Whether it is substantive or not substantive. So there is a difference. There only when substantive. Here it will be always taken into consideration whether substantive or not substantive, means whether in the money or out of money, but only when it can be currently exercisable. Currently exercisable means what? When it can be exercised before meeting. Before meeting. Understood? So what they are saying? Potential voting rights that are currently exercisable are considered when assessing whether an entity has a significant influence. Potential voting rights that are not currently exercisable means they are exercisable after meeting. That will not be considered. They are not be considered for assessment. This para is important. You can see they have not used the word substantive. Means even though it is not substantive, means even though it is deeply out of money, it will be considered. It will be considered. Understood? If it is currently exercisable. If it is currently exercisable. So this was some difference between control definition and significant influence definition. Chalega? But I don't know whether this type of question they will ask or not. Now coming to equity method. So what IND AS 28 says that in CFS investment will be accounted as per which method? Equity method. Equity method means what that we need to understand. So in case of equity method, what is the first step? Step number 1 is what? We need to first calculate goodwill or gain on the date of acquisition. Date of acquisition means the date when the investee become associate or joint venture. Date of acquisition means the date when the investee become associate or joint venture. Correct? So can the formula remains same? It is a cost price of investment. Suppose they acquired 30% minus 30% of fair value of IND AS of which company? Associate or joint venture. So can you say this will be either goodwill or gain? Goodwill or gain. So can this is always partial goodwill because we are calculating only for 30%. We are calculating for 30%. Therefore, we have not added NCI. In case of associate, there is no NCI. In case of joint venture, there is no NCI. So 30-30. Chalega. So this will be always partial goodwill to the extent of 30%. Goodwill to the extent of 30%. Now just try to understand. If I am saying this was 1000 and this is 800. So what is the goodwill? 200. So this 1000, can I say include 2 parts? If you see it is nothing but 800 plus what? 200. Means this 1000 is inclusive of what? This 1000 is inclusive of what? Goodwill. So what IND AS 28 says, because the carrying amount of investment is inclusive of goodwill, don't recognize goodwill. Only disclose goodwill. Don't recognize goodwill because the carrying amount of investment is already included in what? The goodwill is already included in the carrying amount of investment. So don't recognize goodwill separately. Only disclose how much goodwill is included in the carrying amount of investment. Means goodwill will not be recognized. It will be only what? Disclosed. Correct. But second situation, suppose this is 1000 and this is 1200. So this become 200 gain. We'll not call it gain on bargain purchase. We'll call it only gain. And this gain will be transferred to capital reserve. This gain will be transferred to capital reserve. But this is not gain on bargain purchase. Gain on bargain purchase only in case of IND AS 103. Understood? So we'll call it gain and that gain will be transferred to what? Capital reserve. Correct. Now in this case, just try to understand. This 1000 is the cost price of investment. But what is the fair value of asset? 1200. So equity method means what? We need to represent, means investments to represent the proportionate fair value by name. Means if you are recording 1000, it means we are not recorded 200. It means that gain is not yet recorded. So what IND AS 28 gain will be recognized? Gain will be recognized, and for this will pass one journal entry. Investment will increase to gain and the gain will be transferred to what? Capital reserve. So this journal entry will pass. Will increase investment by 200 and gain will be recorded and the gain will be transferred to what? Capital reserve. So what journal entry will do? Investment account debit to capital reserve. This is the step number 1. Step number 1 you understood? So step number 1 is what? Calculate goodwill or gain. Do not recognize goodwill but recognize gain. What is journal entry for recognizing gain? Investment account debit to capital reserve. Step number 1. Now step number 2 is what? Calculate the value of investment as per equity method. As per equity method. So now we need to find out value of investment as per equity method on the date of consolidation. On the date of consolidation. Because on the date of acquisition, this is the value of investment. On the date of acquisition, so we have done. Now we need to calculate value of investment on the date of consolidation. For that, what we should add, what we should not add, that we need to understand. So this is the one statement which will be used from examination point of view. Correct? So let me explain. So we will start with the cost price of investment, including what? Goodwill. It is including goodwill. But if there is a gain, we'll add what? Capital reserve. So this become value of investment as per equity method on the date when the investee become associate or joint venture. So this is the on the date of acquisition, this become value of investment. But we want value of investment on which date? Consolidation date. So what we'll do? We'll add investor share in profit or loss of associate or joint venture. Means whatever profit earned by associate. Suppose the investor share is 30%. So 30% profit will be recognized in the books of investor. 30% profit will be recognized in the books of investor. So we'll add investor share in profit or loss from what? Associate or joint venture. Understood? If loss, we will deduct. If profit, we will add. So what journal entry will do for this? Journal entry will be investment account debit to share in profit from associate or joint venture. And that share in profit will be transferred to PL account of investor. If there is a loss, what journal entry? Share in loss from associate account debit to investment. Share in loss from associate account debit to investment. Similarly, there can be a corresponding OCI of associate or joint venture. So share in OCI will be also recorded. So what journal entry will do? Investment account debit to share in OCI. If the OCI is a loss, then share in OCI account debit to investment. Understood? So this will be also added or deducted from investment. Means it is as simple as suppose you purchase one investment at rupees 1000. Corresponding profit was 200. So you have added 200. So your total investment become what? 1200. Now dividend distributed. So dividend distributed from profit only. So you receive the dividend. So suppose you receive the dividend 120. What you will do? So dividend received will be deducted from investment only. So suppose you receive 120 dividend. So that is nothing but one type of drawing of profit. Drawing of profit. So any dividend received will be deducted from the cost price of investment. So what journal entry will do? Bank account debit to investment. Bank account debit to investment. So minus dividend received from associate or joint venture. Minus dividend received from associate or joint venture. Understood? Got this point? Correct. Then because we have initially taken, this was what, fair value of INA. Fair value INA means PP has been taken at what? Fair value. PP has been taken at fair value. So can I say if the PP has been taken at fair value, so there will be some post acquisition additional depreciation adjustment or saving in depreciation adjustment as we have done in what? Subsidiary company. Because there also we have recognized INA at fair value. Here also we are taking INA at what? Fair value. So there will be some post acquisition additional depreciation or saving in depreciation adjustment. Correct now. So can I say any fair value depreciation adjustment will be plus minus. So if there is some additional depreciation, that will reduce what? Share in profit. If there is some saving in depreciation, that will increase what? Share in profit. So that will also be adjusted with investment account. That will be also adjusted with investment account. So any additional depreciation, what journal entry will do? Will do share in profit to investment. Your share in profit will decrease to investment. So investment will also reduce. If there is some saving in depreciation, the investment account debit to share in profit, your share in profit will increase. So your investment will also increase. So any plus minus fair value additional depreciation adjustment. Correct. Then last में elimination of unrealized profit only from which transaction? Downstream transaction means upstream transaction will not affect what? Investment. Till now this point has not been asked in exam. Till now this point has not been asked in exam. If asked, most of the student will do wrong because no question has been given of this nature. Correct now. But if they can ask in subsidiary, so they can ask in what? Associate also. They can ask now. So elimination of unrealized profit only for which transaction? Downstream transaction. So of course you will ask me why. So I will explain this why. Only why downstream, why not upstream? That I will explain. But you have understood we need to eliminate. So what journal entry we are supposed to, that I will explain. This become what? Value of investment. Value of investment as per equity method. So can you repeat with me? How to find out? First find out cost price of investment. That will be given the question. Then any goodwill, no journal entry. Any gain? Journal entry. What journal entry? Investment account debit to gain. So that become value of investment on the date when the investee become associate or joint venture. Now we'll find out value of investment as per equity method on the date of consolidation. In that we'll add what? Share in profit or minus what? Share in loss. Similarly, any share in OCI will be plus or minus. Any dividend received will be deducted. Any fair value depreciation adjustment will be plus or minus. Then last point is what? Elimination of URP, but only to the extent of downstream transaction, but to the extent of the share of investor. All are done with what? Share of investor, with proportionate amount will be adjusted. Now let me come to journal entry. Sometimes they ask journal entry also. Till now not asked in exam, but they may ask journal entry also. Means they will ask you to pass journal entry in the books of investor in CFS. In CFS. So on the date of acquisition, what journal entry? Investment account debit to cash. Investment account debit to cash. For recognition of goodwill, no journal entry for goodwill. For recognition of gain, what journal entry? Investment account debit to gain, and gain will be transferred to capital reserve. Okay. Then for recognizing the share in profit, if associate or joint venture makes profit, then what journal entry? Investment account debit to share in profit, and this share in profit will be transferred to PL. From PL it will go to what? Retained earning. Means now I am just showing you what will be the effect in consolidation question. So last exam they have asked associate and subsidiary together. So if you know this journal entry, you can give direct effect now. You can give direct effect. So investment will increase and other adjustment will be where? In retained earning of investor. Retained earning of investor. If there is a loss, then what journal entry? Share in loss from associate to investment. To this share in loss will be transferred to PL. From PL it will go to what? Retained earning. Then for recognizing share in OCI, if gain, investment account debit to share in OCI, this OCI will go to, this share in OCI will go to OCI, and from OCI it will go to other component of equity. It can be revaluation surplus, it can be foreign currency translation reserve, it can be FBOCI reserve, as the case may be. Similarly, loss share in OCI from associate to investment, it will be debited to OCI, and from OCI it will go to other equity. From OCI it will go to other equity. For dividend received, in this one special point, suppose dividend received is already recorded in separate financial statement of investor. So as per IND AS 27, it will be transferred to PL. If suppose they have already done that journal entry, means what journal entry they have done? Bank account debit to dividend income, and dividend income is transferred to PL. Means this journal entry is already done in the books of separate financial statement of investor. Now from that separate financial statement, if you are preparing consolidated financial statement, as we do in subsidiary company, we normally prepare from SFS what CFS. So this journal is already done. Now this will be transferred where? This will be deducted from investment. As per Ind AS 28, it is not transferred to P, it is deducted from investment. So what adjustment entry will do? Bolo? What adjustment entry? Means if this journal is already done in the separate financial statement of parent company, but as per Ind AS 28, it will be deducted from investment. So what journal entry will do? Will do dividend income account debit to investment. Dividend income account debit to investment. Means dividend income is already transferred to PL. From PL it is already transferred retained earning. So will do retained earning account debit to investment. So dividend income or retained earning account debit to investment. But if they are asking direct entry in what? CFS, then you can say cash account debit to investment. So when they ask only journal entry and they have not said anything past this journal entry, but if they ask to prepare CFS from SFS, then this journal entry. Understood what I am saying? Not able to understood. If they are asking journal entry in the books of investor, then directly will pass one journal entry cash account debit to investment. But if you are preparing CFS from what? SFS. So in SFS this journal entry already done na, but they have transferred to what? PL account, but that should be deducted from what? Investment. You will pass one adjustment entry. Adjustment entry will be retained earning account debit to investment. Retained earning account debit to investment. This be thoda sa careful. Thoda sa careful. Then for fair value depreciation adjustment. So for fair value depreciation adjustment, for additional depreciation, what you will do? Bolo? For additional depreciation, bolo? So it will be what? Sharing profit will decrease. So sharing profit to what? Investment. For saving in depreciation, your sharing profit will increase. So investment account debit to sharing profit. And this sharing profit will be ultimately transferred to retained earning. So direct entry you can say retained earning account debit to investment or investment account debit to retained earning. Chalega? Yes, sir. Now this point I said I will explain. Till now not asked in exam but can be asked because one specific question means only a question has been given for explaining this, but not included in full question. Not included in full question. So for elimination of unrealized profit on unsold stock or asset due to intercompany transaction, let me explain. Suppose this is parent company and this is associate. So first downstream transaction, P Limited has sold to associate and suppose they are holding 40%. Correct? So they have sold, sale price is suppose 100. Yeah, 100. Profit is 20. So cost of sales is what? 80. And now this become cost price of inventory, that is 100. So can this include unrealized profit of parent company means investor to the extent of 20. Correct. Now can you see in this CFS the inventory will not come. This inventory will not come now. In CFS, we don't write inventory, but we write investment. We write investment na. Are bolna re. This investment is nothing but can you say 40% of net asset of associate? Bole yes or no? Bol. This investment represents 40% of net asset of associate. This net asset includes 40% of stock. Bole yes or no? This 40% stock includes 40% of URP. Therefore, we need to eliminate only what? 40% of URP. But what journal entry you will do? 40% of URP will be eliminated. So can you say investment is overvalued by 40% of URP? Because that is unrealized profit. So if you want to eliminate what journal entry you will do? P&L account debit to investment. Understood that journal entry? So this will affect which account? Investment account when it is a downstream transaction. Downstream transaction. Understood? So journal entry become PL account. This is profit and loss of which company? Parent company or associate? This is profit of which company? Parent company, associate. So this will only be affected in retained earning. So you can say directly retained earning account debit to investment. Retained earning account debit to investment. Understood the effect? So whenever downstream transaction to affect retained earning and investment. Retained earning and investment. Chalega. Downstream you understood? Upstream. Upstream, suppose if I say associate has sold to what parent company, it become upstream, correct? Suppose same, sales is equal to 100, profit is equal to 20, cost is 80, this become the cost price of stock, 100. Now in the book of parent company, this inventory is coming or not? This inventory is coming at 100. And can you say they have earned how much profit? Out of this 20, 40% is already recognized in the books of parent company or not? So what journal entry we have done for this? Investment account debit to share in profit, and that is transferred to PL. Means the PL include this 40% of 20 means how much? 8. Are you able to understand? Correct. Now bata, if you want to eliminate, what journal entry will do? What journal entry? This sharing profit has been transferred to PL. We need to eliminate that only. What journal entry? PL account debit to? No, stock. This is inventory ray. This is stock na. So this stock include profit. So we need to eliminate from stock only na. So PL account debit to stock. PL account debit to stock. So your journal entry become PL account. You can say sharing profit also. But that sharing profit is transferred to PL and PL is transferred retained earning. So ultimately the effect is what? Retained earning account debit to stock. Can you say here so there is no concept of NCI? Here there is no concept of NCI. So because we are eliminating only to the extent of 40% only, therefore NCI point will not come. So journal entry become retained account debit to stock. Means downstream the journal entry retained account debit to investment. Upstream retained account debit to stock. So can you say whenever upstream, that will not affect which account? Investment account. But downstream will affect which account? Investment account. Normally 5 to 6 marks question they ask only investment account. If they ask 5 to 6 marks question, they will ask you value of investment as per equity method. So then be careful. Downstream will come, upstream will not be adjusted. But if they ask full question, so both journal entry is important. So one journal entry is what? PL account debit, means retained earning account debit to investment. Second journal entry is what? Retained earning account debit to stock. Understood? Have you understood? This point you have also understood. Then this is not so much important. Point number 7 is what? Intercompany debt will not be cancelled. It cannot be cancelled because we are not recognizing the asset and liability of associate company or joint venture company. Therefore, intercompany debt will not be cancelled for preparing the consolidated financial statement with what? Joint venture and associate. So intercompany debt will not be cancelled. Then this outstanding cumulative preference shares. We have done one point, last point in consolidation. Whenever there is outstanding cumulative preference share classified as equity, so dividend not declared will be deducted to find a profit which will be allocated to parent company and NCS. Same thing यहाँ पर भी given, but I think in associate they will not ask this point. First they will ask in subsidiary. Correct now. So this is not so much important for associate. If they ask him, if they want to kill you. But understood now. Suppose there is some cumulative preferences in the books of associate which is held by other party. So if you want to find out sharing profit, first deduct what? Preference dividend not declared. Then the balance profit will be allocated to what? Parent company and other party. So that much will be allocated to parent company to the extent of their share. That is only given. If an associate or joint venture has an outstanding cumulative preference shares that are held by party other than entity are classified as equity, then entity should compute its share of profit or loss after adjusting for dividend on such share, whether the dividend has been declared or not declared. So similar point is given. Chalega. This much I hope you have understood. Okay. Then out of this one more point is important, but that I will do after taking one question of one small question, one big question. Big question directly I will take exam question. Means normally I take one simple question in class, but I will not take simple, I will take directly a big question, which was asked in exam. Can I take? But if you have understood this much, you can do by your own. The consolidation. Chalega? First, let me take one small question, means only 5 marks question. This question is super important. Whenever they want to ask a 5 to 6 marks question, this is only one question, which they normally ask. What they have given? On 1st April 2019, Investor Limited acquired 35% interest in another entity XYZ Limited Investor Limited determine that it is able to exercise significant influence over XYZ Limited. Okay, sir. Even though not given 35% means what? Significant influence. Okay. Investor Limited has paid total consideration of 47,50,000. This is purchase consideration for acquiring its interest in XYZ Limited. At the date of acquisition, the book value of XYZ net asset was 90 lakh. This is book value. The fair value is 1 crore 10 lakh. What is increase? 20 lakh. 20 lakh is fair value gain. The investor has determined the difference of 20 lakh pertain to an item of PP which has a remaining useful life of 10 years. So 10 years means post acquisition additional depreciation will be what? 20 lakh divided by 10. How much? 2 lakh. 2 lakh will be post acquisition additional depreciation. Also think about date of acquisition. This is the date of acquisition. So post acquisition period is 12 months. If the date of acquisition is in the mid of the year, the post acquisition period will be 6 months. So be careful about that also. Chalega? Are you able to understand? Here the date of acquisition is what? 1st April 2019. So post acquisition period is 12 months. Post acquisition period is 12 months. During the year ended, XYZ made a profit of 8 lakh. XYZ paid a dividend of 12 lakh on 31st March 2020. XYZ Limited also had a long-term investment in equity securities. Under IND AS, investment is classified as FBTOCI in accordance with IND AS 109 and has recognized an increase in the value of investment 2 lakh in OCI. So this become OCI gain. OCI gain during the year. Ignore deferred tax. Thank you very much. Calculate closing balance of investment. So it means you need to find out only the balance of investment. What you will do? First you will calculate goodwill. Even the question is silent about calculation of goodwill. The question has not said calculate goodwill or gain or bargain purchase. Even though they have not said calculate it. Chalega? Understood? Because when you disclose that. So how to find out? Batao. What is the PC? 47 lakh 50,000. What is the fair value of INA? 1 crore 10 lakh. 35% how much? 35% of 1 crore 10 lakh? 38 lakh 50,000. What is goodwill? So 9 lakh is goodwill. So 9 lakh is already included in the cost price of investment. You can see 9 lakh they have written goodwill. Understood? Correct. So it means you will start with 47 lakh 50,000 and you write down including goodwill how much? 9 lakh. Or you can write down separately as your choice. But we don't write. We write down including goodwill of how much? 9 lakh. Okay. Now what is the share in profit? 8 lakh. 8 lakh ka 35% how much? 2 lakh 35%. 2 lakh 80,000 will be added, deducted, added. Then dividend received, total dividend paid how much? 12 lakh. How much they have received? 35%. So 12 lakh ka 35%. 4 lakh. So 4 lakh 20,000 minus 35% you have calculated na? Yes sir. Then what is the OCI gain? 2 lakh. 2 lakh ka 35%. So 70,000 will be also added. Now there is one additional depreciation of how much? 2 lakh. That is 2 lakh. 35% how much? 35% how much? So 70,000 will be again what? Deducted, because additional depreciation that will decrease share in profit. This become value of investment as per equity method. Calculate. How much it is coming? Oh my God. 46 lakh 10,000. Okay. Understood? One more point. What is our share in profit? Share in profit was 2 lakh 80,000. And what was the additional depreciation? So you can deduct 70,000 from this. What is the net amount? 2 lakh 10,000. And you can add 2 lakh 10,000. This also you can do. Or you can do separate adjustment. Ultimately your answer will remain same. Ultimately your answer remain same. Chalega. This is one of the favorite question of institute which they may ask for 5 to 6 marks. And in MCQs also they are asking this type of question I have seen. MCQ 2 marks also they are asking this type of questions. So this is one of the question which can be asked in MCQs also. So this become one question which may be asked. Now let me take. There are some more question, but that I will take after doing that. Examination question, but I don't have question paper. Download, but I don't have internet. So we need to go to ICI ना. Let me download. I forgot to download actually. Chalo, connected. So I need to go to website na. Which website we have? Student BOS. You go to here. Suggested answer not yet came na. Not yet came na. This picture will always come at the beginning. Correct. We need to go to question paper na. Previous year question paper is where Baba. Second row. Where you are getting? Achha, this one. This final na. Final. Financial reporting ha. Yes. This was the question. Part 2. This was the question. Chalo, can we read? Now let's see whether we can do it or not. Dekho, I have not given any special point. This much only we have studied in class. So no special point, only apply your common sense. Okay. The accountant of Mr. Ramesh Khanna, accountant Mr. Ramesh Khanna of H Limited submitted to you the following standalone balance sheet extract as on 31st March 2004. From name understood, it is what? HSA, holding subsidiary associate. From name only we are understanding. PP is given. Financial asset given 14,000 shares of S Limited and 4,000 shares of A Limited. So 4,000 shares divided by total shares what? It is 10,000. It is 40%. So 40% means associate. Understood. 14,000 divided by what? 20,000 means how much? 14,000 divided by 20,000. 70%. 70% means what? Subsidiary. Understood. चलेगा? बोलना रे. Then they have current investment, inventory, financial asset, cash and cash equivalent, trade receivable, equity share capital rupees 10 each, other equity, retained earning. Okay. Financial liability, borrowing, term loan, financial and trade payable. ठीक. देखो in exam how to read the question. First be calm. Like this. Very important. If you are saying, "Ore baap re, this is the question," then you will not be able to understand. Believe me. Take a deep breath. Forget everything. Just try to understand that you are here to enjoy your life. Maximum what will happen? There is unlimited attempt. Correct na? Maximum is what? Unlimited attempt na? ठीक है, मजा आएगा. But enjoy. Don't take any pressure. In exam, don't panic. Okay? At a time of result, you want to cry, cry. But in exam, be smiling face. And always now what happened, I am just seeing, कि when you smile na, others will panic. You say like this, ah. So others will panic, they will die. They will die na. So let them cry na. You enjoy. Once you do like this, believe me, others will, what happened to him? Correct na? First question, Are, Gazab. Others, what happened? Correct na? Matlab, when I was in CA Inter, CA final, so I have not done CA Inter. What I used to do? CA final, because I was na actually, was a masti wala. I used to do lot of masti. CA final, I also become serious like you. CA Inter, lot of masti I have done. So CA Inter exam was going on, advanced accounting. That time, so there were one paper only. That time also. So accounting exam was going on. So my 4 or 5 pages were left. Paper, I think in one page 20 papers were there, na? 20 or 24. So my 5 to 6 pages were left. Understood na? I understood. I require one more page. I require one more page now. Sir, page. And only what? 45 minutes, 30 minutes, 1 hour has gone. Everyone saying, what happened? Correct na? So it means what? Let them die na. Let them die. Correct na? Then after exam they were asking how many pages. Means I have taken 4 or 5 pages. You taken itna pages? बोला ऐसे यार मजा आ रहा था. And what I used to do, I used to write in this way. My habit is what? I write in this way. Suppose property, plant and equipment. Then one line I will leave. Then I will write down inventory. So I will take more pages only na. So mine always I will leave one line. Always I will leave one line and after that I will write down. So if you require 12 pages, I require 24 pages. Correct na? That was my style. But maja aata tha. But in CA final what happened with everyone, we also become serious. H Limited purchased the shares in S Limited on 31st October 2003. 31st. What is the balance sheet date? Identify. It is 31st March 2004. Means can I say it is what? Mid of the year. But 31st October. 31st October. Oh my God. 31st October. When the retained earning of S Limited was 5 lakh. So retained earning of S Limited was given on that date. On which date? 31st October 2003 only. Means on the date of acquisition retained earning was given. They have not given opening balance. They have given on 31st March 2003. And the shares in A Limited were acquired on 30th June 2003. When its retained earning stood at rupees 1,75,000. Once again retained earning is given on which date? On the date when it was acquired on 30th June 2003. One thing we have understood that they have acquired investment associate on 30th June 2023. Correct? Inventory of A Limited means associate as on 31st March 2024 include inventory valued at rupees 60,000 which has been purchased from H Limited on 1/1/2024 at cost plus 20%. But downstream, upstream. It is downstream. It is for associate or subsidiary? Associate. So this information you should write down. Point number 2 information is for associate. My pen is not working in this in PDF because this is from website now. So this point number 2 is for associate. Correct. Then trade payable of H Limited include 25,000 payable to A Limited. Whether cancellation required? No cancellation. Cut do. This point number 3 is no important. Cut do. Point number 3 is not at all important. Not at all important. Then goodwill in respect of acquisition of S Limited has been fully impaired. Means goodwill is fully impaired. The first calculate goodwill and that is fully impaired. Means impairment loss will be equal to that amount. Now that will be attributable to both party. If full goodwill. If partial goodwill then only attributable to parent company. The recoverable amount of investment in A Limited exceeds its carrying amount. So recoverable amount exceeds the carrying amount. But if recoverable amount is more than carrying amount, whether any impairment loss? No impairment loss. So thank you very much. No impairment loss. No journal entry. Means bakwas point they have given. Only they are confusing you. The recoverable amount of investment in A Limited exceeds carrying amount at 31st March 2004. So it means this point is also of not relevance. No impairment loss. NCI valued at proportionate. Okay sir, we know Pasina method. We can do it. Correct. 10% dividend were declared by both H Limited. This point was thoda sa confusing. Point number 5. This I will explain. 10% dividend were declared by both H Limited and S Limited, whereas A Limited declared 15% dividend for the year. They have said declared. Up to this it was okay. But at the end what they have written? Let me read. On 31st March 2024, S Limited made a bonus issue. S Limited, subsidiary company, made a bonus issue of 1 equity shares for every 2 shares held by the subsidiaries of S Limited. Nothing has been given. But nothing has been given means journal entry has been done or not done? If nothing has been given, so what do you assume? Journal entry has been done or not done? Done only. How can you assume by your own it is not done? But read the entire question, na. We need to read entire question. But up to this journal entry is done. But dividend were declared but not accounted. Oh my God. Point number 5, they have said dividend declared but not accounted. Means no journal entry. No journal entry. Not accounted by all this company in the books before the year end. So dividend was declared but not accounted. Not accounted means not paid only. Because if paid to it will be accounted now. If paid it will be accounted. because cash and bank balance तो everyone will account ना, so it means dividend declared but not paid. Not accounted means what? Dividend declared but not paid. Abhi this is my assumption. Till now ICS solution has not came. From my point of view, it become dividend declared but not paid. I don't know what ICI will take assumption because till now suggested solution has not came. So once solution come, we need to obey what? ICI solution. But as per my understanding, it is dividend declared but not paid, and the journal entry has not been done. So the bonus issued of S Limited, we are not reflected in the statement of financial position as on 31st March 2024. Means the bonus shares also journal entry not done. You are required to make. Acha, this question has been given. Okay, take it. Can I say whatever you have understood? 70% you can attempt or not? You can attempt. 70% you can attempt. Bolna re. 40 marks into 17%. If suppose you are getting 50% also, 7 marks you are getting or not? In 30 minutes, scored 7 marks. What is wrong in this? But if you panic, you will take 1 hour and score 0. If you panic now, only in my exam why it happens? Why not others exam? Why this exam? Next attempt this question should come. If you panic in this situation, so you will take time also. You have read this question, you have wasted 10 minutes in reading only. Now you will attempt, you will take another 45 minutes. Ultimately, whatever you will leave in between only. And you will not do it. So you wasted 45 minutes and you are scoring 1 marks or 2 marks. That will happen. So now you will help me, I will not help you. Okay, na? Let's see what you are doing. But I have the solution also. Where is my pen? So to save time, we'll go to solution only. Well, I will ask you all the things, okay? So this is the question. So whenever this type of questions come now, I will say draw timeline. Once you draw timeline, most of the thing you will understand. Whenever new question and you find difficulty in understanding question, draw timeline. It will take 2 minutes extra, but you will save 10 minutes. Okay? So what are the information given? Because already I have drawn. On 30th June 2003, associate investment in associate was purchased. On this date, return earning was given. Correct? 4,000 share was acquired out of 10,000 share, 40% was invested. The investment on subsidiary was acquired on 31st October at rupees 5 lakh. And 14,000 was acquired out of 20,000, that already we have understood 70%. Now, what they have given on 31st March 2024, ki inventory of A Limited associate is 60,000 purchased from H Limited at a cost plus 20%. At a cost plus 20%. Means we need to eliminate URP. Correct? Now, dividend, they have given HSA 10%, 10%, 10%. 10%, 10%, 15%. Ki dividend declared by H is 10%, dividend declared by S 10%, A 15%, but no journal entry. No one has done journal entry. Correct? No one has done journal entry. Then bonus share in 1:2 ratio, but no journal entry. These are all information given. If you write down this now you will be able to proceed. Ki these are the adjustment given. So you need to play with this game now. Now game is in front of you. Now working note number 1 batao. First think about subsidiary. Working note number 1. Working note of fair value, no information. आगे चलो. Working note number 2. Analysis of profit. We'll start analysis of profit. But can I say analysis of profit is not required because they have given return earning on which date? On the date of acquisition only. Means can I say this become pre and this become entire what? Post. So if you do closing balance minus opening balance, this become post and there is no abnormal loss. Or if you want to do, let us do, because they have given bonus shares. Correct. Chalo, thoda sa I will explain with other way. Otherwise you will be confused. Okay. Chalo. We'll prepare analysis of profit. You have the question. So retain earning. But what is the closing balance given from balance sheet? Opening balance given from the additional information. So let us go to balance sheet. So what is the closing balance of retained earning? It is given how much? 7,50,000, 7,50,000. Take 7,50,000. And opening balance means what? On the date of acquisition they have given. On the date of acquisition, how much they have given? 5 lakh. So write down 5 lakh. So difference is what? Profit after appropriation. How much? 2,50,000. 2,50,000. Now any abnormal loss? Any final dividend? Yes, but no journal entry done. So will you add back? No need to add back because no journal entry done now. So there is no need to add back. Common sense point. Any bonus here? Yes, but no journal entry done. Will you add back? No. No add back. Understood? No error. Nothing has been given. Proposed. Nothing has been given. So this become profit after appropriation and this become entire post acquisition profit. Entire post acquisition profit. Why post acquisition? Understood now? Because the date of acquisition they have given retained earning. Date of acquisition they have given retained earning. So now let us find out pre and post. So pre will become opening balance how much? 5 lakh and this will become what? 2,50,000. Understood? Now from this will minus what? Bonus shares. Minus bonus share. So bonus share ratio was what? 1:2 na? The bonus shares were given in which ratio? 1:2. So what is the capital? Capital of a subsidiary company? 2 lakh. So 1:2 means 1 lakh. 1 lakh is the bonus shares. So for 1 equity shares was given. So 1 lakh is the bonus shares. So we'll do minus what? 1 lakh. But from where? Pre ki post. It is given. Let's check karo what is given. Ki bonus shares were declared from which profit? Nothing has been given. They have written as limited made a bonus issue of 1 equity share. Nothing has been given pre post. You will always assume what? Always pre. I said always pre. Always pre. Always pre. Ki it is declared out of accumulated profit. Pre acquisition profit. So 1 lakh minus karo na. 1 lakh minus this become what? 4 lakh and this become what? 2,50,000. 2,50,000. No other adjustment. No other adjustment. This will be allocated in which profit ratio? 70% and 30%. Allocate. Achha, yahan we don't allocate. We'll do Sona. Sona. Now let us prepare Sona. Sona mein date of acquisition, date of consolidation and what? Post. Post may we have only retained earning. But the equity share capital is before bonus shares ki after bonus shares? Equity share capital will be given before ki after? Journal entry done or not done? Not done. So equity share capital coming, whatever is appearing in the balance sheet, before ki after? Before. So what is the equity share capital given? 2 lakh. Now in this you will add what? Bonus shares you will add. Bonus shares how much? 1 lakh you will add. So 1 lakh add kar do. Now you will add what? Other equity. Other equity is what? 4 lakh what? Date of acquisition means pre. Post is what? 2,50,000 and this will become 7 lakh. 6,50,000. 6,50,000. Total become what? 7 lakh. 7 lakh. This become what? 2,50,000. And this become what? 9,50,000. Okay. But can you say one point we have forgotten? Dividend declared, no journal entry is done. So we should do the journal entry na. Not paid also. Then also payable na. No, just try it. Dividend declared, no journal entry done. Even though not paid, it is payable or not? Nah, but dividend declared before balance sheet date na. Where it is given. This was only point of confusion yahan par. Most of the students assume that dividend is declared after balance sheet date. But where it is given? It is given what? Check karo. If you read the question, 10% dividend was declared for the year 2023-24. They have not given dividend date. This was actually AS based question. Understood now? So that time we used to assume that it was declared on 31st March. It was declared on 31st because no date has been given when it is declared. So now it also based on assumption. I don't know what ICI is taking assumption, but if they follow previous solution, so they will assume what? It will be declared on 31st March. It is declared on 31st March. Quite possible it may be declared on 31st March. If declared on 31st March, then it will become liability, na? Then it become liability. Because date is not given when it was declared. How can you assume it is declared after balance sheet? Or it is quite possible this is interim dividend. It is quite possible it is interim dividend. Because this is for which year? 23-24. 23-24 means which year? Current year. So it may be interim dividend. Interim dividend may be declared in current year only. So it is also interim dividend. Because it is for current year only, na? Are bolna re? Are you able to understand what I am saying? So interim dividend, journal entry is required. Journal entry was required. So in this point, actually most of the students have done wrong. I will say even though you have done wrong, balance part is correct, na? Balance part is correct. Only this point was disturbing point. Because of lack of information, because of wrong drafting, I will say. We should blame what ICI. They have not given proper question, but then also we don't have choice. We need to give a maximum output in worst condition. Worst condition. Can you blame ICI in exam hall? After exam also we can't blame. Because they are godfather. Our godfather, na? We can't blame ICI. We can't blame ICI. We all byproduct of what? We are all a byproduct of what? ICI only, na? So how can we blame our godfather? We can't blame our godfather. Yes or no? Can you blame your parents even though they are wrong? You can't blame, na? Are bolna yes or no? So we should not also blame ICI. Correct? So 10% dividend was declared. So from my point of view, because this is 23-24, this will be interim dividend and it can be declared during the current year also. So it become a dividend payable. Dividend payable. So what journal entry you will do? Can you say retained earning account means here only in AOP you will do minus what? Dividend payable. Dividend payable. 10% of capital how much? 10% of capital how much? 2 lakh. 2 lakh how much? 20,000 na? So 20,000 you reduce from here. Understood? So this will actually become 2 lakh 30,000. 2 lakh 30,000. And because it is declared after acquisition, so deducted from after acquisition. After date of acquisition means post acquisition period. Post acquisition period. Because this will become liability after acquisition. So this will reduce from net asset after acquisition. So we will say this is what? 2 lakh 30,000. 2 lakh 30,000. This become 9 lakh 30,000. 9 lakh 30,000. So this become your post acquisition profit. Post acquisition profit. This will be allocated in 70% and 30%. This will be allocated in 70% and 30%. Understood? Have you understood this point? Well, first point understood. Now we'll come to what? Sona done. Now we can calculate goodwill or gain on bargain purchase. So what is the fair value of consideration paid? For 70%, it is given in the question. So fair value of consideration paid, so it was how much? 5 lakh. 5 lakh. Now value of NCI by which method? Pasina method, na? So 30% of what? 7 lakh. How much? 2 lakh 10,000. So this become what? 7 lakh 10,000 minus what? 7 lakh. So what is the goodwill? 10,000. Goodwill is 10,000 which is fully impaired. So minus what? Impairment loss 10,000. So goodwill carrying amount will become nil and that will not appear in the balance sheet. That will not appear in the balance sheet. This impairment loss is for partial goodwill ki full goodwill? This impairment loss is for partial goodwill ki full goodwill? Partial goodwill. This will be attributable only to what? Only to parent company. But this also we can do. So one by one marks, you are getting all marks. You are getting marks now. And even though you have done wrong with dividend payable, your goodwill will be correct. Your goodwill amount will be correct. Suppose you have done mistake yahan par. You have not accounted. Then also this remains same na. The date of acquisition that remains same means you are getting marks for goodwill calculation. You are getting marks for goodwill calculation. So understood na? We always say in Hindi, boon boon se ghada bharta hai. Means when you score 1 marks, it will become 50 marks. It will become 50 marks. So importance is how much you are getting, 1 marks you are getting or not. So you will get some marks for this. Understood? This also done. Then what you will do, other equity and NCI will do at the end, because we have associate also. So can you say for subsidiary, apart from other equity and NCI, you have done all the calculation? Now let us come to associate. Let us come to associate. Now can you say for associate, also you want fair value of INA on the date of acquisition? So better if you prepare one AOP of associate, what will happen? Can you say data, if I will say retain earning, what is the closing balance given? Closing balance given, bata. 4,24,000. 4,24,000. And what is the opening balance? Opening balance is how much? They have given on the date of acquisition how much? 1,75,000. 1,75,000. So this become a profit. Profit how much? 2,49,000. 49,000. Understood? Correct. This much you understood? Correct. So this become, because in this case also, this become entirely post acquisition profit. Entirely post acquisition profit. So we'll allocate pre and post. So pre is what? 1,75,000. Post is what? 2,49,000. 2,49,000. Understood? From this also we'll do dividend payable. Dividend payable. Dividend payable. Correct? Because dividend declared. So we should reduce this post acquisition profit. We should reduce this post acquisition profit. Are you able to understand? Correct? But then also, even though you don't do, chalega yahan par. But I am just explaining you if you are doing, then what will happen. So it is 15% of what? Capital. 15% of capital. Capital is how much? Capital is 1 lakh. So 15% of 1 lakh how much? 15,000. Correct? So this become 2,49,000 minus 15,000 how much? 2,34,000. Chalega. First I am just writing what should be done. Understood? But okay, just try to understand. Out of this post, what is the profit before dividend? 2,49,000. What is the profit after dividend? 2,34,000. Profit before dividend is 2,49,000. Profit after dividend is what? 2,34,000. This much so you can understand. Correct. Now, can you see, we'll also calculate goodwill or gain for investment in associate. Investment in associate. So we'll find out what is the cost price of investment. Cost price of investment for how much percentage? 40%, na? 40%. It was how much? Cost price of investment. It was given it was acquired at what? 5 lakh, 1 lakh. But why we have taken 5 lakh? Here, why we have taken 5 lakh? It is 5 lakh 60, na? Why we have taken 5 lakh? This is 5 lakh 60, na? I don't know why I have taken 5 lakh. 5 lakh 60 plus 2 lakh 10, how much? 7 lakh 70,000. Minus 7 lakh, how much? So your goodwill was 70,000. Impairment loss is 70,000. Then it will become nil. Understood? Your cost price of investment was 5,60,000. Chalega? Yes or no? Yes, 70,000 is partial goodwill. Our answer is correct. Understood? Now we'll find out what cost price of investment. 40% how much? It is 1 lakh, na? 1 lakh. 1 lakh. Correct. Now we'll find out fair value of INA. Fair value of INA on the date of acquisition. So what is the equity share capital? Equity share capital of associate is how much? 1 lakh. Equity share capital of associate is 1 lakh. 1 lakh. In this we'll add pre-acquisition profit. Pre-acquisition profit is how much? Already we calculated 1,75,000. So we'll add 1,75,000. This become total INA. Total INA is what? 2,75,000 into 40% how much? 1 lakh. 1,10,000. It means there is a gain. There is a gain. Gain of what? 10,000. Means this gain you recognize, and this gain will be transferred to what? Capital reserve. This gain will be transferred to capital reserve. Understood? This also you can do it. This working note has also marks. Correct? Let's see how much gain we calculated. So here also we have calculated gain. Means our working note is correct. Understood? Yes, sir. So this gain will be transferred to what? Investments. We'll do one generate investment account debit to capital reserve. Now we'll find out investment value as per equity method. But what is the cost price of investment? Cost price of investment is what? 1 lakh. We'll add what? Gain. Gain is what? 10,000. So what is become 1 lakh? 10,000. Then we'll plus share in profit. Share in profit. Share in profit, just try to understand share in profit. So when I say share in profit, so that is profit and before dividend. Profit and before dividend. So what is the profit of associate before dividend? It is 2,49,000 ki 2,34,000? 2,49,000. So 2,49,000 into what? 2,49,000 into 40%. How much? 99,600. Okay. And can I say there is no dividend received, but dividend receivable is there. So dividend receivable will be deducted. There is a dividend receivable. So minus will do what? Dividend receivable. So how much dividend receivable? It is 15,000 ka 15,000 into 40%. How much? 6,000. Or you can do with net amount also. Same answer will come. So you can do with net amount also. But I am just explaining the concept. Understood? Now, I think OCI is not given. Only one more point is left, that is downstream transaction URP. URP downstream transaction. Let us go to that transaction. So what they have given? Inventory of A Limited include inventory valued at rupees 60,000 which had been purchased from H Limited at cost plus 20%. So cost plus 20%. So 20% of cost is how much percentage of sale? Means 20% of cost means 1/5 of cost. Means 1/6 of sale. Means this 60,000 include how much profit of H Limited? 10,000 profit. 60 divided by 10. 60 divided by 10. Correct now? You know this point now. Ki 20% of cost means 1/5 of cost. So how much of sales? 1/6 of sale. So 60 divided by 1/6. How much? 10,000. So 10,000 become unrealized profit. What journal entry you will do for downstream transaction? Retained earning account debit to investment. Retained earning account debit to investment. So investment will reduce. So that will come. So minus URP. Minus URP. So it is 10,000 into what? 40% means 4,000 you will reduce. So now what is the value of investment as per equity method? Batao. Value of investment as per equity method. One 99,600. Let me see what is our answer. The value of investment, you can see 1,99,600. This is my suggested solution. It can match or it cannot match with ICA solution because they may take some other assumption. Okay. This much you understood. Now to come to this working note, I need to explain you dividend payable wala transaction. I said now I will explain you dividend declared but not paid. What can be the possible effect? Now let me explain. Now working note, just try to understand. Dividend declared by H Limited. Don't see, but the dividend declared but not recorded by H Limited. What journal entry you do? If you want to record, what journal entry? Bolo, if you want to record the dividend, what journal entry? Retained earning account debit to dividend payable. Correct? With 10% of their capital, 10%. The retained earning account debit to dividend payable. Can you reduce retained earning? And this will come in what? CBS. This will come to CBS. Dividend payable as a liability. So this will reduce what? Retained earning. No other effect. Correct. Now by S Limited, for the dividend payable, what journal entry? S Limited will pass what journal entry? Same, retained earning account debit to dividend payable. Already we have done in AOP. Already we have reduced retained earning. We have reduced. So retained earning account debit to dividend payable. But can you say whatever dividend payable will be received by what? So that become dividend receivable from whom? H Limited. So H Limited will pass one journal entry. Dividend receivable account debit to dividend income, and dividend income will be transferred to retained earning only. So dividend receivable to retained earning to the extent of their share means 70% of what? 20,000. 70% 20,000 is what? 14,000. What is the net effect in CBS? Batao. What is the net effect? Can you say dividend payable will come 20,000? Bole yes or no? Can you say out of this 14,000 is dividend receivable? 14,000 is dividend receivable? Bolna yes or no? And 6,000 belong to what? NCI. 6,000 belong to NCI. Yes or no? Means this is the in CFS this adjustment. In CFS this adjustment. Not able to understand? Once again. What S Limited will pass journal entry? Retained earning account debit to dividend payable. Retained earning account debit to dividend payable. This is in the books of SFS. In the books of S Limited, in their individual finance statement. What journal entry H Limited will pass? Dividend receivable to dividend income. That dividend income will transfer to retained earning only. So dividend receivable to the extent of 70%. That journal entry. What is the compound effect in CBS? Ki dividend payable is what? 20,000. Dividend receivable is what? 14,000. Correct. And NCI will, because what is the amount payable to NCI? 6,000. So this is the in CFS, this is the adjustment entry. In CFS, this become adjustment entry. Have you understood this point? Have you understood this point? Means can you say out of this 14 to kata. Because intra-group transaction, eliminate karo na. Intra-group transaction will be eliminated. To dividend payable, dividend receivable to the extent of what? To the extent of 14 kata. Means only what will affect? Dividend payable 6,000. Dividend payable 6,000. To NCI will be 6,000. This will be the only effect. Correct? Have you understood this point? Correct. Now coming to by A Limited. A Limited. In SFS of H Limited, as per IND AS 27, means as per the separate financial statement, dividend receivable to retained earning 6,000. That will be transferred to what? PL only. In SFS of H Limited, because they will receive some amount from what? Associate. They will receive some amount from associate. So in the SFS of H Limited, dividend receivable to retained earning. And in CFS, the journal entry dividend receivable to investment. In the CFS, because whatever they receive, that will be deducted from investment. That already we have done. So what is the adjustment entry? If dividend is recorded in CFS, then journal entry is what? If it is already recorded, then our journal entry will what? Retained earning to investment. But in our case, it is not recorded. So our journal entry will be what? Dividend receivable to investment. Means in CBS, what will come? Dividend receivable come to the extent of 6,000 and investment deducted what? 6,000. Already we have given this adjustment. You can see we have already deducted what? 6,000. Already we deducted. Already we deducted 6,000 from this. So this will come as a dividend receivable in the balance sheet. Dividend receivable in the balance sheet. Lot of confusion. Why confusion? Because they have given H Limited, A Limited, S Limited, everything they have given. Lot of confusion happened. What I want to say is, of course, whatever difficult point in exam, you have done mistake in dividend receivable. मान लेते. Now, we are not there to give perfect answer ना. I am not saying that you will do correct answer. Suppose you have done mistake यहाँ पर. You are not able to understand. So only one information you have done mistake now. Then also out of 14, you can easily score 8 marks or 9 marks because all other adjustments are correct. All other adjustments are correct. So only I think up to this you could have done correct. Only mistake will come in other equity and NCI. Only mistake you will do in other equity NCI, and that is the last effect, last working note. So your balance sheet will not tally or your balance sheet tally. That is not important, but you have done this much correct. What I want to say that much. In the worst question paper, whenever new point is coming, do whatever you have understood. Whatever you have understood, do it. But don't panic, don't waste your time. Because of that point, if you will waste your 30-40 minutes or if you will leave the entire question, that is not correct. That I just want to inform you. Correct. Of course, this was a complicated point in exam. I am not saying it is an easy point, but quite possible you could have understood by your own. Quite possible you have not understood by your own. Whatever you have understood, applied it. If you have not understood, leave that particular point and do it. Means ignore that point. I will say ignore that point. Do it. Whatever they will give, let them give. And they will give 100%. If those students who have attempted now, they have given 10 out of 14. Because they also know complicated question paper. So they will give easy marks. But you need to attempt it. Those who have not attempted, 0 marks. And those who have left only, they also 0 marks. So if you have attempted and you have prepared CBS, even though wrong, they will give 10 marks to you. This is a trend. Now only I will explain what is other equity and NCI. So what? Retained earning and NCI. So 9 lakh is the balance given as per balance sheet. 2,10,000 already we calculated from previous working note. Now dividend payable by H Limited will be deducted from retained earning because not recorded. This to I hope you have understood. This to you can do by your own. Correct. Then can you say whatever dividend receivable from S Limited, that will be also accounted because that is an error not recorded by parent company, that will be recorded. So dividend received from subsidiary company, that become dividend receivable. So dividend receivable will be added, 20,000 ka 70% will add it. Okay. Then dividend receivable from A Limited, because that was also not recorded, we record that also. So dividend receivable from A Limited will be recorded. So first this was an error, this was error in the books of what? Parent company. So we have recorded error in the books of parent company. So this become rectified retained earning. This become rectified retained earning because after passing the journal entry, what become rectified retained earning. Now do the adjustment. So sharing profit of S Limited already we calculated, that will be added. Dividend payable to NCI. Dividend payable to NCI, that 6,000, that adjustment we have done. 6,000. I say kata 6,000 NCI. That adjustment will do. So dividend payable to NCI will come 6,000. Correct. This is thoda sa difficult. I know you will do mistake. Sharing profit from A Limited will come. Sharing profit from A Limited will come. Dividend receivable from A Limited will be deducted because the journal entry is what? Dividend receivable. It is what? Dividend receivable to dividend receivable. That will be transferred retained earning to retained earning to investment. So we have deducted. Means this you have deducted. This you have added. So automatically what happened? This is kata. Yahan par. So even though you have ignored, it will become tallied. Even though you are ignoring now this transaction, this will tally. Correct. URP of unsold transaction means unsold stock, that was 4,000 URP. 4,000 URP that will be also deducted from retained earning, that downstream transaction. Then impairment loss will entirely attributable to goodwill, that will be also deducted. This will become balance, and after this the balance will tally. So what I want to say, to the extent of dividend, it was difficult. Balance point was easy. Balance point was easy. Understood? Correct. So how to score in exam, that you need to understand. Correct. Understood? So if you want, I just can explain what to do about dividend payable, dividend declared but not recorded. If you want, I can give a note. Right on? Dividend declared but not paid. if recorded, understood? If not recorded, अच्छा, first I am doing about holding company. Holding company means parent company. If recorded, no adjustment required, because correct only, already coming in the balance sheet as dividend payable. If not recorded, then pass one journal entry, retained earning account debit to dividend payable. This is the adjustment. Chalega? Done. For this much only. Then dividend payable but not paid by subsidiary company. If recorded, if not recorded. If recorded, so can you say whatever profit after appropriation you are calculating in EOP, whatever profit after appropriation means closing balance minus opening balance, already recorded to, will add back what? Dividend. Find out what? Profit. Correct? Yes or no? Find out pre and post. Find out pre and post. Then do minus dividend payable. Again from post. This become understood? Correct? This much you understood? Now this has two parts. One is parent company and one is NCI. These are two parts now. Parent company and NCI. So parent company will be cancelled with dividend receivable in the balance sheet. Because there will be some dividend receivable in the parent company balance sheet. So this will be cancelled with what? Dividend receivable in the balance sheet. So dividend payable, dividend receivable cancelled. It will not come in the balance sheet. And this will be what? Added to NCI. Add to NCI. Understood this point? Because it is parent company dividend payable. Dividend payable to parent company. So there is some dividend receivable in parent company balance sheet. So dividend receivable and dividend payable kata kata. So that will not come in CVS. That will not come in CVS. But NCI, that much amount will be added to what? NCI. Understood? If not recorded, so what you will do? First you calculate profit after appropriation. But will you add dividend? Will you add dividend? No, because no journal entry has been done. So this only become profit earned. Then allocate pre and post. Allocate pre and post minus dividend payable. 1 second from this. This is what that. In this also, this will have two parts, parent company and NCI. But parent company will be cancelled and NCI will be added to NCI. Only this is the difference. यहाँ पर it is not recorded, so don't add back. यहाँ पर recorded, so add back. Understood? So this was also one point. If you know the concept of dividend and declared, so you could try, attempt. Got this point? This also done from my side. Have you understood? Correct. Done? Chalega? Now let us come to The last question, last big question of this particular chapter. That is given in consolidation chapter only, which is with step acquisition. This was also a question asked in exam. This question 27. The extract of balance sheet of Hammer Limited and its subsidiary Slick Limited as on 31st March 2003. Hammer Limited, Slick Limited. Okay. This is simple. You can do it. Okay. You need to help me. I will not help you. Property, plant, equipment 6 lakh. Intangible asset investment. Once again, investment given. Nothing is given. Means there can be some other investment also. To be careful. There can be some other investment also. Okay. Inventory, financial asset, trade receivable, cash and cash equivalent. Equity, share capital, other equity, financial liability, borrowing, short-term borrowing, bank overdraft, trade payable. Okay. Now they have given notes to account also. The property, plant and equipment consists of plant and machinery, furniture and fixture. Intangible asset, goodwill. For the first time in the exam history, they have given goodwill in the balance of subsidiary company. I am not happy with the ICI solution. First, I will give you my viewpoint and you will understand ICI is wrong. You will understand ICI is wrong. Understood? So, I will give you my viewpoint, and of course, I know that is a 100% mistake done by ICI, because first time this type of question come, they will 100% rectify their mistake. Because till now, right now, they are not realizing that they have done mistake. Understood now? So, there is some mistake I will explain. Other equity, journalism, retained earning, 8% debenture, 1 lakh. Additional information. Hamel Limited acquired 20,000 equity shares of Slick Limited on 1st April 2022. So 20,000 out of what? 20,000 out of 50,000 means how much? It is how much? 40%. 40% na? At a cost of rupees 2,40,000. Further 17,500. 17,000 out of 50,000. How much? 17,500 divided by 50,000. How much? 35%. Means this becomes a step acquisition. First they acquired 40%, then they acquired 35%. Date of acquisition will be 1st October 2022. And what is the total? 2,40,000 and 1,95,200 to 1,90,000. Total is what? Total is what? So 6,25,000 minus what? 4,32,500. The balance will be other investment. Balance will be other investment. That will come in the CBS. Are you getting what I am saying? Correct. But can you see this 2,40,000 is the carrying amount of investment? But we need to find out fair value, because this become previously held equity interest. Previously held equity interest. The 8% debenture in Slick Limited include debenture held by Hamel Limited of nominal value of rupees 35,000. Acha, this 8% debenture Slick Limited include debenture held by Hamel Limited of nominal value. These were acquired by Hamel Limited on 1st Jan at a cost of rupees 84,000. Means this investment also include what? 84,000, that is investment in debenture. So investment debenture is the borrowing of subsidiary company. That will be cancelled. That will be cancelled. Any difference will be gain or loss, that will be transferred to PL account. Already I have explained. Correct. The retained earning of Slick Limited had a credit balance of 75,000 on 1st April 2022. So they have given retained earning had a credit balance. Opening balance of retained earning is given. Okay. On the date, balance of general reserve is 50,000. They have given opening balance. Okay, sir. Okay. Slick Limited had paid a dividend of 10% on its paid up equity share capital out of balance of retained earning on 1st April 2022 for the financial year 2020-22. This is final dividend. Final dividend. The entire dividend received by Hamel Limited was credited to SOPL. Okay, sir. As per the resolution dated 28/5/2023, Slick Limited has allotted bonus shares 1:10 held out of general reserve. The accounting effect was not given. No journal entry was done. So we need to give journal entry. Trade receivable of Hamel Limited include bills receivable of 2 lakh drawn upon SIC Limited. So trade receivable include how much bills receivable drawn to SIC 2 lakh. Out of this bill of 50,000 has been discounted. But how much we can cancel? We can cancel 2 lakh or 50,000. How much we can cancel? Out of 2 lakh, how much discounted? How much remain undiscounted? So we can cancel only what? 1,50,000. Be careful. Okay. During the financial year 2023, Hamel Limited purchased goods from SIC Limited. Hamel Limited purchase means holding purchase from subsidiary. It become which transaction? Upstream transaction of rupees 25,000 at rupees 30,000. So what is the URP? 5,000. Total profit is 5,000. 40% of this good remain unsold. So 40% of these will be URP. So 5,000 into 40% become URP. Annualized profit. Because it is upstream transaction, this become profit of subsidiary company, will be attributable to both parties. On 1st October 2022, machinery of SIC Limited was overvalued by 20,000. Overvalued by 20,000 means gain or loss. It is fair value adjustment, gain or loss. It was overvalued by what? 20,000. The fair value is more than or less than book value? Are nare. English. Machinery was overvalued by 20,000 for which necessary adjustment. It means the book value was more than what? Fair value. In the books of account it was overvalued. Means fair value is less than what? Book value. Overvalue does not mean gain. It was overvalued by this much. So this fair value loss is given. Fair value loss is given now. This is for fair value adjustment. And depreciation is charged at a rate of 10% per annum. Nothing has been given SLM RBM, but they have not given opening balance. We can't do it. So we need to do as per our choice only. The parent company, that is Hamel Limited, has adopted an accounting policy to measure NCI by fair value method. Assume the fair value per equity share 11. So they have given market price of equity shares of SIC Limited on the date when the control was obtained. Okay, you are required 20 marks question. 20 marks question. Can we do it? You have the question with you? Let us start. Batao, kya karna? First we'll take what? Working note number 1 is what? Fair value adjustment. अच्छा, what is our date of acquisition? पहले वो find कर लो. So this is our period. Balance date is 31st March. 31st March 23. Date of acquisition is 1st October 22. And this becomes 4/4/2022. On this date 40% was acquired. On this date 35% was acquired. And this becomes date of consolidation. This is the date of acquisition. Chalega. In this case, only one point where you will be disturbed. The point is what? Where assumption is required. They have given final dividend. Let's read once again. SIC Limited has paid dividend, but they have not given कि it was paid on which date. But what assumption you will take? SIC Limited has paid dividend on paid up equity share capital out of balance of retained earning on 1st April 2022. Means it was final dividend understood, but it was paid on which date they have not understood. Now you have two assumptions. Either you can assume it was paid here, it was paid यहाँ पर. Understood? Either you will assume, because this is date of acquisition, either you assume it is paid after acquisition, or you can assume it is paid before date of acquisition. But what will be your assumption? Means before ki after? Before ki after? When I have done my first suggested solution, I have assumed after acquisition. Because normally in all question IC has assumed that. Because they have not given any question of step acquisition. But for the first time in this question, they have assumed, IC have assumed what? This. Correct? So we will go as per IC assumption whenever step acquisition. So always assume this. I always follow IC assumption. So we'll also assume that. But my first solution was what? On that assumption. So okay now, let them deduct marks, 2-3 marks. Okay. How much marks they will deduct? 2-3 marks. Let them deduct now. But balance is all correct now. So you should not panic about assumption. And if you have taken assumption, they will give marks only. Because on basis of your assumption, this is your answer. So they should give marks. But even though they want to deduct, we should think in that way. We should be always happy. We should remain always happy. Don't panic. Oh, sorry, they will deduct, then what will happen? 100 marks paper. You need to score only 50 marks. Some donation also we should do sometime. We should give some donation now. Bolna yes or no? Let us give 2-3 marks, 5 marks as donation. Correct now? ICA donated. Then only will become CA as soon as possible now. So think in a positive way. Think in a positive way. So this becomes final dividend paid. So this is our assumption. Now when this is the assumption, so parent company will receive only to the extent of what? 40%. If you are paid यहाँ पर, तो parent company will receive to the extent of 75%. So this assumption will differ. This assumption will differ. Understood this point? Yes, sir. Chalo. Now let us start. First, fair value, working note number 1. Fair value adjustment. They have given fair value loss. How much they have given? 20,000. They have given fair value loss on the date of acquisition, overvalued by 20,000. Overvalued by 20,000. They have given this question in this for property, plant and equipment. But the less what? Saving in depreciation. Saving in depreciation. So what is the rate given? 10%. The 20,000 at 10% for how many months? For post acquisition period. What is the post acquisition period? 6/12. So what is the additional depreciation? Saving in depreciation? 1,000. So your net decrease will be how much? So net decrease will be 19,000. Understood? This is your first working note. In this you can do mistake if you are not able to understand English. Overvalued you say fair value gain, तो mistake हो गया. But that is English mistake, not question mistake. Understood? So sometime we need to understand the emotions of English also. Working note number 2 is what? Bolo? Analysis of profit. So they have given retained earning and general reserve. Can you give me the closing balance? Closing balance? Closing balance? 2 lakh. 2 lakh? 2,50,000. Everyone is tired. You are tired? Tired? You are not responding. General reserve how much? 1,25,000. Opening balance given how much? Given in additional information. $70,000. General reserve 50,000. So this become profit after appropriation. How much? 175,000. This is how much? 75,000. Nothing. Any abnormal loss? No. Any dividend? So plus final dividend paid. So this is how much percentage they have given? 10%. 10% of what? Capital. But capital before bonus shares. In this question easy because journal entry is not done. So whatever capital is coming, that is before bonus shares. So you are saved. But be careful. If suppose in the next exam they have given journal entry done, so be careful about this point. This will be 10% of capital before bonus shares. So that is only given. What is the capital of subsidiary company? 5 lakh. It means 50,000. But any bonus share? Yes, but not recorded. So no adjustment. No adjustment. I think nothing has been given. only this much. So can you give me this? 2,25,000 and 75,000. This will be allocated to pre and post. In post, retained earning will come and general reserve will come. First, can you allocate in time ratio? Time ratio is what? Time ratio what? 6:6. Allocate. This is 1,12,500. 1,12,500 na. And 75,000 allocate. 37,500. 37,500. Then can you give me opening balance? Opening balance is what? 75 and 50. So 75,000 and 50,000. Can you give me this amount? Done. How much is coming? 2,75,000. This is 1,12,500. This is 37,500. Correct. Now we'll do minus what? Final dividend. So we have assumed paid before acquisition, after acquisition. Before acquisition. Deduct from pre ki post? Pre. Now it become pre. Now it become pre. So pre, how much? 50,000 deduct from this. Correct. Then minus bonus share. So what was the bonus share? 1:10. 1:10 means what is the bonus share? 5 lakh divided by 10. 50,000. So 1:10 was the ratio. So bonus share is also 50,000. So bonus share you deduct from what? Pre-acquisition general reserve. Pre-acquisition general reserve. Have you understood this point? 1/10 was the ratio. Correct. Done. But what is this amount coming? 1,75,000. This is 1,12,500. This is 37,500. Done. Now I'll come towards Sona. Sona. Date of acquisition, date of consolidation, post. Post mein what will come? Retained earning and general reserve. Correct. But the equity share capital how much? Before bonus share. This is before bonus share. How much? 5 lakh and 5 lakh. But because it is before bonus share, what will add? Bonus share. Bonus share is what? 5 lakh. 50,000 na? 50,000. Then we'll add other equity, that is 1,75,000. 1,12,500. 37,500. Total is what? 7,25,000. 1,12,500. 37,500. This total is not required only if you are not giving. Chalega. Understood? Correct. Now any fair value adjustment? Yes. So fair value adjustment is what? For property, plant and equipment 20,000 loss. What is the saving in depreciation? 1,000 will add. 1,000 will add. So this become how much? 7,05,000. 7,05,000. This will become how much? Plus. So 1,13,500. This become 37,500. Done. This will be allocated to what? Which ratio? Batao. $75 and 25. This will be allocated which ratio? 75 and 25. Allocation you can do. Allocation you can do. Up to this, any doubt? Bolo. Only one point where I am not happy with ICA solution. Just try to understand. ICA has done in this way. And answer will match if the value of NCI is calculated by fair value method. But in Pasina method, they will be wrong. But just try to understand. Right now, we are calculating net asset by which method? Equity method. Means if you see the balance sheet, so this is asset, liability, equity. So this is asset plus goodwill na. So when you are taking equity, this is including goodwill or excluding goodwill? Means this is net asset na. Either you take this approach or you take this approach. So if you are taking equity plus reserve and surplus, so net asset is coming including goodwill, excluding goodwill? Including goodwill. But we want INA excluding goodwill, because INA means what? Exclusive of goodwill. So it means this INA, whatever we have calculated, this is including goodwill now. Including goodwill. Bole yes or no? For the first time they have asked this type of question. However, in class we do this type of question. But once again, first time always complicated, because we will not revise before exam. Correct. So we should do minus what? Goodwill, because our objective is not to find a total net asset. Our objective is to find a INA excluding what? Goodwill. So what is the goodwill given in the question? Goodwill given in the question is how much? In subsidiary company balance sheet, that is 75,000. So deduct 75,000. So yahan se we should deduct 75,000, and from this also we should deduct 75,000. So this will become INA. From my point of view, INA should be this. But answer will match. Why it will match, that also I will inform you. But in Pasina method it will not match, because in Pasina method we can take this na. Understood what I am saying? So ek baar batao, what is the answer? 7,05,000 minus 75,000, 6,30,000. This is 1,13,500. This is 37,500. Understood this point? Have you understood this point? Correct. So this is what INA excluding goodwill. So this should be considered for what? Goodwill or gain on bargain purchase, if Pasina method. If Pasina method. Have you understood what I have done? Correct. Now let us come to next working note. Next working note is what? Next working note is what? Goodwill or gain on bargain purchase with a fair value of consideration paid to the extent of 35%. How much? 35%. 1,92,500. Correct. Then we'll find out fair value of previously held equity interest for 40%. So that is what? Number of shares which was initially acquired. What is the number of shares? Number of shares, give me. Number of shares. Means 50,000 into 40%. That only you have done now. What is the fair value of equity share given in the last para? 11. So this becomes fair value of previously held equity interest. How much? 2,20,000. Then we'll use fair value of what? NCI. Fair value of NCI. That is what? Number of shares which is not held by parent company, means 50,000 into what? 25% into what? 11. Into 11. How much? 1,37,500. Correct. Understood. Total is what? 5,50,000 minus fair value of INA. How much? As per my working, how much? 6 lakh. As per my calculation, 6,30,000. So what is the goodwill? This is coming gain on bargain purchase. Gain coming na. So gain on bargain purchase how much? 80,000. But as per ICS solution, they are doing 5,50,000. How much? 7,05,000. So their answer is what? 1,55,000. चलो ठीक है. I will say that ultimately balance will tally. But this is only 100% correct. And in Pasina method, they will die, will be safe. Because Pasina method, if they are taking these 7,05,000, that is 100% wrong. Because INM is what? Excluding goodwill. So we should do in this way only, na? Am I right or not? In fair value method, our answer will match with their answer, that I will prove at the end. They have calculated this, we are calculated this, then also I am saying this is only correct. Why? I will explain. Have you understood? But I hope you have understood. With Pasina method, their answer will get wrong, our answer will be correct. Our answer will be correct. Understood this point? This point have you understood? Now, can you say one more working note to find out fair value gain or loss on remeasurement of previously held equity interest? So what is the fair value? We calculated 2,20,000. Less carrying amount is given. It was purchased at what amount? 2,40,000. Means there is a loss. So how much loss? 20,000 loss. This will be transferred to what? Retained earning. This will be transferred to retained earning. Got this point? Correct. Now last working note will be other equity and NCI. So other equity and NCI. This will be what? Retained earning, general reserve, NCI. But can you give me the balance? Balance of parent company. Retained earning. 3 lakh. $3,50,000. General reserve. NCI. 1,37,500. Then plus sharing profit, retained earning and general reserve. Can you allocate? So already we have calculated. Can you allocate in 75% and 25%? 1,13,500. Allocate. 88,000. 85,000. 125. And NCI? Then what was retained earning? 37,500. That also you allocate. 28,000 and 375. There is one URP also. That also we need to eliminate. So minus what? URP. It is upstream, downstream. Upstream, downstream. I forgotten. Upstream. What was the amount of URP? $10,000 na? Pakka na? So 10,000 will be allocated to what? Parent company NCI 75 and 25. Allocate 7,500 and 2,500. This also done. Plus will do, minus will do remeasurement loss. What was the remeasurement loss? 20,000. That also will deduct. That also we will deduct. I think all points done. एक बार check कर लो. Huh? I don't know. I forgotten. You said 10,000. I have done 10,000. It is what? This was a transaction, na? It was 5,000 of 40%. 5,000 of 40%, how much? 2,000 URP. Where is 10,000? Why you are giving 10,000? That was previous question. कुछ भी बोलते हो. This is all lack of concentration. देखो one thing please try to understand. एक बार समझो मेरी बात को. When I am asking something, so there are two type of student. This is from my experience. One student who will not do anything, will always wait for others. Wait for others. Understood? They will never do mistake in their life. They will never do mistake in life, but in exam they will do mistake. Because in that case you are performing na. But they will never realize that yes, I can do mistake. Second, the student who will give answer. Understood? they can realize that mistake. Yes, they are doing mistake. So I always favor those students who are giving wrong answer. Because once you are giving wrong answer, you think, yes, I have done mistake. That you should not repeat. So first, everyone should respond. If you are responding, then only something is coming out of you. If you are not responding, nothing is coming out of you. Nothing. I'm just give example. Just try to understand. You have played any matches, cricket match, football match in your life? अरे बोलना yes or no बोल दो यार. You don't say anything. I need to only say everything. Sometimes just after becoming CA, you will come here na. Someday you will also come here na. If other party is not responding, so what you will feel? They are not interested only. You need to respond. Then only you will be given response. Just try to understand. Respond karo. Now, have you played any match? Because I have played many football match, but I don't know how to play football. But then also I always run before what? Yeah, with what ball? To make sure that I can hit what? Goal. But I have never hit. But I have tried now. I don't know how to play cricket now. But what happened? Club match happened initially in New Year. So I participate. Maja aa raha tha. So in the first ball, believe me, what I was going in my mind, I don't know, because now I have never played. In the first batch, what I was saying, marenge, 1-6, marenge. But I don't know how to hit. But then also, what is going in my mind? Hit 6 na, कि I will say low, out ho ja. Even though bowler is dangerous bowler, what I will think? Hit or out? Out. How out, Ray? I hit, 1 run I have taken. Second ball I hit 1-6. Third ball out. So it means I am capable of hitting 6 or not. But that you will understand only when you will play and when you will hit. So you will be able to understand whether you are capable or not when you will say. Otherwise you will think you don't know anything. Please behave. You are a student right now. CA Inter Techna used to respond. After coming to CA final, our life changes due to Article 6. Up to CA Interna used to be responsive, means whatever CA teacher used to say, yes sir, yes sir, yes sir. But CA final, man, why he is talking? Why I am here? I should be here. I don't know why I am here. So even though you are here, respond. If you are not understanding, then also respond. Something will come with you in your mind. Try to become responsive. Correct? Because this exam, think as a last exam of your life. Then only that attention will come. Otherwise, there are multiple attempts. Multiple attempts means we become relaxed. Our body become relaxed. Because after May, after November, again May is there. So you need to think that we don't have any options only. This attempt is the last attempt. Next time I will become CA. Do in that way. So when I'm asking, please do now, because I know everything, Ray. I was knowing that you have given wrong answer. 10,000 when you said now, I was knowing, but I have not reacted. Because I was watching who is responsive, but no one was responsive. In this class of 70 students, no one was responsive. Just try to understand, we all are same. I was knowing 10,000 is wrong. Because this question I have done multiple times. I know each and every answer. But then also I am not reacting, because I just want to, I want to just think how you are reacting. You are not reacting. I am writing. You are not writing. I am seeing. You are not seeing. I need to become CA. You don't want. I need to become CA. I am CA. I am CA. November 2005 I became CA. So you need to become CA na? अरे बोलना रे कि I need to become CA. तो behave. देखो, God is watching. ICI is watching. Our Godfather is ICI. He's watching. Correct? God is watching. You say na, God is watching. You believe in God na? So God is watching. ICI is watching. Correct na? So behave as a student. Be like a student. Don't forget that you are a student. You are a student. As you used to do in CA Inter, that only you do. CA will become easy because you pass CA Inter now. So you can pass CA final. But what happened with CA final? You change the method of study only. You change the method of study. Am I right or not? You have changed. Lot of changes came. Lot of changes came. And one of the reason was articleship. One of the big reason was articleship. Second reason was what? Atmosphere, environment, negative environment. In articleship, in CA Inter, there was no so much negativity. In CA final, negativity came. And third, which I will not say, YouTube. YouTube is the most worst factor in our life. I become CA because why no? In that time there was no YouTube. If there was YouTube now, I would also become taken n number of attempts. YouTube mein there is so masala, there are so masala that we are distracted. Ki what to do, what not to do. What to do, what not to do. Focus on study. If you study only in focus, you will pass. Correct? Now please behave. I am asking, so you should say. So 5,000 into 40%, how much? 2,000. So 2,000 was URP now. It become what? 2,000 into 75%, 25%, how much? 1,500 minus and 500 minus. This is correct. Now, once you see, whenever all the adjustment done now, always see whether you have done this, you have done, this you have not done. Second point you have not done. Let us think about second point. So what is the cost price of investment? 84,000. What is the nominal value? Nominal value is coming in the balance sheet of subsidiary company. Cost price is coming in the books of parent company. Difference is what? So can you see, parent company has paid more to acquire debenture. It means this become loss. Loss on cancellation. That loss on cancellation will be transferred to retained earning. So do minus loss. How much? Minus loss on debenture. 49,000. Done. This also done. This done. Retained earning done. This dividend done. Then bonus share done. Trade receivable due in the balance sheet directly. This URP done. Machinery done. Fair valuation done. This is the final answer. Final answer you can find out, and the balance will tell you after that cancellation of intercompany balance. Can you give the final answer? Coming how much? 3 lakh? Bolo? 3 lakh na? 3,64,625. Then 2,28,125. Then NCI 75,000. 77. Let's see whether our answer is correct or not. Correct. Understood? So it means, once again, this question was easy if you have applied your common sense. Only one point, debenture was a new point. Chalo, one mistake done. Correct. Balance, all point were correct. Only dividend, if you have taken some other assumption, so your answer will be different. But as per assumption, your answer would be correct. Now let me explain that wala point. Ki as per ICI, what was the gain on bargain purchase? Correct. But can you say what they have done? They have shown this as a gain on bargain purchase. And what is goodwill is coming in the balance sheet? 75,000. So they are showing this goodwill 75,000 separately and gain on bargain purchase separately. So the net effect is what? 80,000. You only say for subsidiary, can we show gain on bargain purchase and goodwill separately? Whether they can be goodwill and gain both? No, impossible. Means they don't know what is the answer. Means what they are doing, they don't know. 100% wrong, na? But if you have acquired one subsidiary company, whether gain and goodwill both will come? No, impossible. But you can see the balance sheet given by ICI. The balance sheet given by ICI. What they have done? Means We also don't know what they are doing. Means you can see in this intangible assets 75,000 plus their goodwill also. Their goodwill to come na. It was what? 1,25,000. This to will come. This will come na. But 75,000 also they have taken. So 75, this is not correct. And then in gain of bargain purchase, they are showing what? In the gain of bargain purchase, this include what? 1,55,000. This is 100% wrong. So our answer is more correct. 80,000 is gain of bargain purchase, that is more correct. And can you say in Pasina method, so their solution, way of doing solution is 100% wrong. Because Pasina method means proportionate share of fair value of INA. INA means excluding goodwill. So our method is always correct. So what new adjustment we have understood with this? Ki whenever goodwill is coming in the balance sheet of subsidiary company, deduct directly from what? Pre and on the date of acquisition, on the date of consolidation, that goodwill. So your ultimate answer will be same. This was one new adjustment given in the exam. With this, we completed consolidation chapter. Consolidation chapter we have done. Means all adjustment we have done. All type of adjustment we have done. It's difficult to reconcile everything in what? One day. Correct? But we have done our job. Now your job is started. Do now all the question of ICS study material. I think you will be able to do all the question of ICS study material, but revise all the adjustment. Because any adjustment come, you can do it once you know the impact of that. If you know the impact, you can do it. If you don't know the impact, you can't do it. And we have covered all type of adjustment. All types of adjustment we have covered. Now we'll take a break. After break, we'll do the share-based payment. That two concept is left. Okay. We'll take a break. Yeah. Because time is not there, no. I don't think so. I don't think so. Only, I mean, right now 1 hour is only left now. I will not start. Tomorrow I will take. Now, one question have been asked in the live stream that, sir, how goodwill will come in the books of subsidiary company? So it is quite possible good subsidiary company has done some past business combination. Means subsidiary company may acquire any business now. So if subsidiary company acquire any business, so in their balance sheet also goodwill may come. Got this point? So this was one doubt ki how in question the subsidiary company may have goodwill. Quite possible they have done some past business combination, they have acquired some company. If they have acquired some company, they have absorbed some company. So in that balance sheet also goodwill may appear. Chalega? So that was one question. Okay. Now coming to share based payment. So share based payment may employee share based payment we have done. In that equity settled we have done. This was we have covered only the last class. Equity settled we have understood. Then we have done cash settled also we have done cash settled SBP. Then we have done share based payment with cash alternative, this also we have done. Then we have done modification also done. Now in modification there are actually this point we have done, if the modification increases the number of, this point we have done, if the modification increases the fair value of option granted, means whenever exercise price reduce, the fair value of option will increase. But sometime what happen, the number of option may also increase. That question has not been given in ICS study material. So simple, if suppose that question come, so additional number of option you will calculate, multiply by fair value of option on that date, that will become the additional fair value of option, means that will become incremental fair value of option, that will recognize as an expense over remaining vesting period from the date of modification, means accounting treatment will remain same. But no question of this nature have been given in ICS study material. Chalega. Then before I start cancellation, there was one important point condition. This might be important for MCQs. So condition are of two types. One is known as vesting condition, one is known as non-vesting condition. Non-vesting condition means any condition which arises after vesting period, during exercise period or after exercise period. The best example of this is lock-in period. Lock-in period means what? The shares whatever you have acquired that cannot be transferred to other party. So that is after exercise. Here the non-vesting condition will never be considered for determination of number of options. Means number of options is not based on performance or non-performance of non-vesting condition. Got this point? Understood what I am saying? So this will not be considered for determination of expense. Means even though it is achieved, not achieved, will not consider this for determination of expense. But vesting condition will consider. The vesting condition are of two types. One is known as service condition, one is known as performance condition. Service condition means what? Minimum number of employment period. Of course, can I say the service condition will be considered for determination of number of option. Already we have seen, we have calculated number of employee based on the condition whether they are fulfilling, whether they are able to complete the employment service or not. So we have calculated that number of employee. So service condition will be considered for determination of number of options. Now performance condition means what? Some target will be achieved. Means with service condition there will be some target condition. Now this target condition means performance condition are of two types. One is known as market related performance condition, one is known as non-market related performance condition. Non-market related performance condition means target of profit target, reduction of cost of sales target, increase in earning per share target. These are the target which is related to non-market related performance condition. But sometimes target is related to market condition. Market condition means achievement of certain specified market price of share. Means this much market price of shares must be achieved. If achieved, then condition satisfied. If not achieved, then condition not satisfied. But what our IND AS 102 says that ki market related performance condition is not based on the performance of employee. Means even though employee is performing, but market price may not be achieved, because that market price depends upon many external factors. The stock market price depends upon many factors. Now even though company is profit making, then also due to some recession in the market price is coming down. Therefore, market related performance conditions should not be considered for determination of what number of options. Means number of options will not change due to non-achievement of market related performance condition. But due to non-performance of non-market related performance condition, the number of options will be affected. Means what is the conclusion of this point? We are here to find out, means whenever we calculate EV expense, there are two factors. One is number of options, and one is the fair value of option. These are two factors. Number of option means number of employee multiplied by option per employee. But ultimately we are calculating number of option now. Number of option multiplied by fair value option. Means these are two factors determine EV expense. So what our IND AS 102 say that service condition and non-market related performance condition, this will be considered for determination of what? For determination of number of option. But performance market related performance condition and non-vesting condition will not be considered for determination of what? Number of option. Important for MCQs. However, some practical question is also given based on this. Correct. I'll just explain you when this type of questions come how to react in exam hall. Have you understood this point? Have you understood what I said? Batao. We are discussing there are two factors for determination of EV expense. One is what? Number of options. Second is what? Fair value of option. So what are the two conditions which will affect number of options? What are two conditions which will affect number of options? Service condition and non-market related performance condition. What are two conditions which will not affect number of options? Market related performance condition and non-vesting condition. Understood? Similarly, this fair value option will be always given in the question, because in our FR exam will not calculate fair value of option. In our FR exam will not calculate fair value of option. Fair value of option will be always given in the question. If not given, then we'll use the intrinsic value. Are you able to understand what I am saying? Means can you say, but fair value of option need measurement, means we should measure fair value of option. Then it will be given in the question now. So that fair value of option is measured by considering market related performance condition and non-vesting condition. Means non-vesting condition and market related performance condition will be considered for determination of fair value of option. But that is given. Thank you very much. But whatever has been given, that has been calculated by taking into consideration what? Not able to understand. Not able to understand what I am saying. Fair value of option will be given in the question, but whatever has been given, that has been measured by considering what? Non-vesting condition and market related performance condition. Means in MCQ question they will ask fair value of option will be affected, will be measured by considering what? So what will be your answer? What will be answer? Market related performance condition and non-vesting condition. Means what will not be considered? 2 marks MCQ question done. Have you understood? Correct. But can I say in our exam this will be always given, because we don't measure it. So whatever given, that has been already calculated by considering which two conditions? These two conditions. Understood? Now if suppose they ask this question, I'll just frame one question, because I am expecting one question of this nature in exam. Till now a similar type of question given, but till now not asked in exam. So let me create one question. Suppose they have given 3 year, employee 1000, employee left 50, year 2, year 3, 20, 30. Understood what I am saying? Then employee left 25, year 3, employee will leave 10, but actual employee left is 5. So 1000 minus 50 minus 25 minus 5, how much? 9 20, 920. Correct? This is exercise period. This is vesting period. Understood? Now, there are two conditions. Employment period is 3 years. Service condition is 3 years. And they need to achieve market price of rupees 120. Means during exercise period, market price should become how much? 120. Understood? This was the target. This was the target. Not during this. During vesting period. Means during vesting, on this date, market price should become how much? 125. But actual market price was 100. Means target not achieved. Target not achieved. Okay? Now calculate EB expense. Let's see how you are calculating. Concept I have given. Calculate EB expense. Batao. Year 1. Year 1. What will be the number of employee? 1000 minus 50. Minus 50 means how much? 900. Into what? Number of option. I have not given. Number of option is 100. Into 100. Pay value I have not given. Fair value of option, let's say 90. So this fair value has been already considered by taking this market condition. Already calculated now. So it means that has been calculated by considering market condition. So we are not going to change that. We are not going to change that. So it is what? 90 into what? This you can calculate. Year 2 how much batao? This you can calculate. Chhodna. Calculation we can. Second year. 1000 minus 50 minus 25 minus 10. 9 into what? Into what? Into what? 2 by 3. Second year also will do correct. Third year you might do wrong. Third year what? What was the target? But target not satisfied. Understood? Now third year, what is the expense? If you can do correct, means you have understood my emotion. If you are doing wrong, so it is good that I am doing this. Correct now? Batao. Year 3 will be what? Actual number employee 920 into 100 into Bolo. Have you understood my question? Not able to understand. I say there are two conditions. One is service condition of 3 years. Second is market price achievement condition. Initially quite possible, what was the condition that we should achieve 125. Their market price here might be what? 70. But we need to, this is market condition. So this is our target, but actually how much achieve? 100. Means market condition has not satisfied on vesting day. Market condition was not satisfied now. So year 1 to year 2 you have got this. Year 3 what is the answer that I am asking? Year 3 what will be your EB expense? If 1 second, you have two options, do or do. Why you take so much time now? Do something. But 100 into what? 90 into what? 3 by 3. Everyone saying this? So batao, change karo. Batao, how much? 0. So bolna 0. Why you are thinking so much? Nil. Acha, how many are saying this? Confidence नहीं है बोला ऐसे like this. ठीक है. How many are saying nil? 1 second. Balance what you are doing? Huh? Just now came from where? Three by 4. Why? Vesting period is 3 years only na. Hat na. Vesting period only. This is the exercise period. Now you are thinking much. Overthinking. This is correct, this is not correct. Nil is not correct. Nil is not correct. Now I will explain. Means theoretical part you have understood, but practical part you are not able to understand. Because this type of question you have not done. Even though there is one ICS study matter, they have question. Small question they have given. But Good question they have not given. And I am expecting one of this question because in old scheme AS based question, when there was AS syllabus, they have asked this question. Till now in IND AS based question, they have not asked. And now in this chapter also they will take some question from previous scheme of syllabus. So this is one question they may ask from my point of view. So what I said, keep market condition, only this will be affected. Whether you can affect number of options. Number of options will not be based on achievement or non-achievement of what? Market related. So this too you will not change. Now 90 already we have, it is what? Already measured based on which condition? This 90 is already calculated based on which condition? Market related performance condition. But in ESOP, can you do reassessment of 90? In ESOP, can you do reassessment of 90? It is already considered by taking market related performance condition. Means can you say when you have done measurement, so already you have taken the probability of this condition, whether it will be achieved or it will not be achieved. I think you have done binomial pricing model in AFM. In binomial pricing model in AFM, you see the volatility whether that condition will be satisfied or not satisfied. So that is already considered. That is already considered now. And in ESOP, we can't do reassessment of fair value of option. So if you are saying it is 0, means you are doing wrong. So this will remain 90 and this will be 3 by 3. Means this expense, this expense, this expense. But the option remain unvested. Option is not vested. Option is what cancelled because condition is not satisfied. So first recognize and then it will be cancelled. Entire SBP reserve will be transferred to what? Retained earning. So this become cancellation of SBP reserve, which will be transferred to what? Retained earning. So recognize the entire expense, then reverse it by transfer to what? Retained earning. Good question or not? Till now not asked, but very important question can be asked in exam. Till now not asked. This question is till now not asked. So one question which I think if they want to create a new question, they will create this new question. Understood is fine. Now you will not do mistake. Correct? Now you will not do mistake. Okay, done. Jana entry remains same. Jana entry EB expense to SBP reserve. If it is SAR, so automatically the fair value on this date becomes 0. If it is SAR, so because condition not satisfied, the fair value will become what? 0. So in SAR, so automatically it will be adjusted. In SAR, it will be automatically adjusted because fair value will be based on what? Whether condition satisfied or not satisfied. So not satisfied, the fair value become what? 0. Understood? In case of SAR, but in case of ESOP, we need to reverse entire SBP reserve by transferring it to retained earning. Got this point? Yes, sir. Now coming to cancellation. Cancellation, they have given one question and that question is also asked in exam. We have only one question. I can explain with that question only. So let us come to cancellation. Now cancellation means cancellation of plan by entity. The entity has cancelled the plan. It is quite possible due to closure of factory. Suppose one factory is closed. So all the employee become retrenched. So whatever employee has been reduced, for that their plan is also cancelled. If you have closed down one factory, so all the employee will be retrenched now. So they are not in employment right now, even though vesting condition is not satisfied. So then we need to cancel the plan. Cancel the plan. Now this cancellation of two types. Either cancellation is with settlement or without settlement. Means whenever you have cancelled, we need to compensate employee for that. So if you are paying compensation for that, so that is cancellation with settlement. If you are not paying anything, that become cancellation without settlement. In exam, the cancellation with settlement will come because that is only more interesting. So let me come to that question, whatever is given in ICS study material. This is now expected because I think 3-4 attempts gone, this question was asked. So once again it can be repeated now. This was the question. It was asked in exam, I think 3-4 attempts before. Anara Fertilizer Limited has issued 2000 share option to its 10 director for an exercise price of 100. The directors are required to stay with the company for the next 3 years. Fair value of option estimated 130. Expected directors to vest the option 8. This is the number of employees who are expected to vest the option. During the 2 years, there was a crisis in the company and management decided to cancel the such scheme immediately. It was estimated further as below. Fair value of option at the time of cancellation was 90. Market price of share at the date of cancellation was 99. Because the market price of share is not at all relevant. Market price of share is not at all relevant. They have given to confuse you. If you are confused, you use this information. But market price of share is not at all important. There was a compensation which was paid. So there was a compensation paid, means this is cancellation with settlement. My question to you all, suppose today's scheme is cancelled, whether settlement will be done today or after some time. After some time, negotiation will be there, trade union will come, they will negotiate, and settlement will be after 6 months, 7 months. So normally cancellation, then settlement now. It cannot be done immediately. Impossible, practically impossible. But in this question, cancellation date and settlement date are same. So we'll consider this as two transactions. Cancellation separate, settlement separate. So think that way. First cancellation, then settlement. So there was a compensation which was paid to directors since only 9 directors were currently in employment during the date of cancellation of such scheme. Hence the amount of 95 per option was paid. So how much was paid? 95 to each of the 9 directors. How the cancellation would be recorded? So this is the question. So it is 3 year. 3 year. This is Y0, Y1, Y2, Y3. What was the number of employed? 10. What was the number of option? 2000. Initially, what was the estimated number of employee? 8. Understood? This was the question given. What was the fair value of option given? 130. What was the exercise price given? Exercise price given 100. This was the date of cancellation. Date of cancellation during year 2 they have given. So it can be at any point of time. But a 9 employee was there. And they given fair value of option on the date of cancellation was 90. Fair value of option on the date of cancellation was 90. Correct. But actual payment was done how much? 95. So this is date of cancellation. Date of settlement, sorry. However, in this question, date of cancellation, date of settlement are same. Correct. So 90 was fair value, but settled at 95. Now, what is first journal entry will be done at year end 1. But what journal entry will do? EB expense to SBP reserve. This journal entry only now. But for how many employee? We will calculate. 8 or 9? 8. 8 into what? 2000 into what? 130 into what? 1 by 3. How much? 6 lakh. I think this though you will do correct only. Now year 2 will come. Year 2 will come to date of cancellation. Date of cancellation. Now just try to on the date of cancellation. We don't know whether it requires settlement or it don't require settlement. But normally can I say it will be settled. If we have done negotiation with trade union and we can convince trade union, then they will not demand compensation. But trade union will come into force. Are you able to understand what I am saying? So on the date of cancellation, we don't know whether settlement will be done or settlement will not be done. Means one thing is clear that can I say we need to settle it. And when you are going to settle it, this cancellation was due to a mistake of employee or entity. So they need to pay entire compensation for the entire year, entire vesting period, because they were willing to perform the condition. They were willing to perform the condition, but because of the mistake or because of the decision of entity, the plan was cancelled. It means can I say the entire expense during this vesting period will be recognized on which date? On the date of cancellation. So whatever remaining expense which is not yet recognized will be recognized on the date of cancellation. So we will pass one more journal entry. EB expense account debit to EB expense account debit to SBP reserve. So what is the new remaining expense? Now 9 employee into what? 2000 into what? Into what? 90 or 130? 90, 130? 130, it is ESOP. ESOP. SAR then take 90. ESOP na? ESOP. Into what? 3 by 3. Entire expense. Minus what? 6 lakh. How much? 16 lakh. This na? I think this also you have understood. This also you have understood. Correct? Understood. But can I say now, if it is going to be settled, means we will pay in cash. It means now we will not allot equity share because now cash will be settled. It means, can I say, reserve will become liability? Reserve will become liability. Suppose you are holding my equity. You are holding my equity, means I am entity and you are holding my equity interest. And if I pay you cash, this become what? Buyback of? This will become buyback of equity. Means, can I say, if you are converting SBP reserve into SBP liability, it is as simple as buyback of equity. Buyback of equity. Correct? So on this date, we will pass one journal entry. SBP reserve to what? SBP liability. So can you say, before settlement you are thinking, so you will pay based on which amount? If you are paying cash, so you will pay cash based on which amount? 95 or 90? You will pay based on which amount? Means if you want to buy back equity, so what is the fair value of option? 90. So you will buy back equity at 90 rupees only. You will buy back equity at 90 rupees. So it means SBP liability will become what? 9,000. 9,000 into what? Sorry, my mistake. 9 into 9 into 2000 into 90. How much? 16 lakh. But what is your SBP reserve? This plus this amount was how much? 23 lakh 40,000. Correct. So this is buyback equity. Whenever there is a buyback equity, difference will be transferred to PL or other equity. Other equity. So whenever you buy back equity, the difference will remain in other equity. Means the difference will be transferred to retained earning. Means you can say other equity. How much? 7,20,000. 7,20,000. Understood? Okay. So this was your SBP liability. But you are paying not 90, you are paying 95. So settlement is done at higher amount. So one more journal entry will do. SBP liability, how much? 16,20,000. But you have actually paid how much? You have paid 9 into 2000 into 95. How much? 17 lakh 10,000. 17 lakh 10,000. Now you say this is settlement of liability. If you are paying more, this will become gain and loss, and gain and loss will be transferred to PL or retained earning? PL. So this will be transferred to what? PL. PL. How much? 90,000. This is the entire case. Have you understood journal entry? Now ICI has given solution only in our working note. They have not given journal entry. So I have given journal entry to explain you. Correct? Means, can I say, in exam, if suppose MCQ question asks, so they will ask you how much will be transferred to PL. So this amount will be transferred to PL. Means find out what is the liability and how much payment done. Or they will ask how much is transfer retained earning, then this is your answer. Understood? So they may ask MCQ question of 2 marks for this particular case. Or they will ask you what is the total expense recognized on the date of cancellation. So total expense recognized means expense recognized on the date of cancellation will be this amount. Total expense will be this amount. And so this type of question may be asked in MCQs. Chalega. So cancellation also done. Now coming to one last part of this particular question is group share based payment plan. But before that, non-employee share based payment, because that is also now become important for MCQ question, because a lot of MCQ questions created for this. Now non-employee share based payment means what? you purchase some goods or services. Means you purchase PP, you purchase inventory, you purchase any other asset, or you receive some services, but payment is done in the form of equity shares. Means PP purchase in exchange of equity shares. IND AS 16 applicable, IND AS 102 applicable. Understood? If you have acquired PP by issue of equity shares, the cost price of PP will be calculated as per IND AS 16 ki IND AS 102. No, IND AS 102. IND AS 16 is silent regarding that. Understood? Any inventory acquired in exchange of equity share, which IND AS is applicable? IND AS 102. Means whenever you are doing payment in the form of equity shares for acquisition of asset, any asset, or for receiving some services, any services, which IND AS is applicable? 102. It means journal entry is very simple. Journal entry what? Asset account debit to equity share capital to securities premium. But 2 point, what will be the date, on which date it will be recognized? First question. Second, what will be the amount? Correct. Date when the control is obtained. Control of asset is obtained. Date. So this journal entry will be done when the control of the asset is obtained. Correct. Amount, first preference will be fair value of asset or services received. First preference. If this cannot be measured reliably, if it cannot be measured reliably, second preference will be what? Fair value of equity shares issued. Only this much. These two questions may be asked. So what is the date of recognition? When the control is obtained. What is the amount? First preference is what? Fair value of goods or services received. If that cannot be measured reliably, then take fair value of what? Equity shares issued. Understood? Correct? This type of MCQ question can be asked. Chalega? Got this point? Suppose they have given one question. You have acquired property, plant and equipment whose fair value is 10 lakh. And you have issued equity shares of rupees 50,000 whose face value is 10 and whose face nominal value I am writing, whose nominal value is 10 and the fair value is 50. Batao, what journal entry will do? PP account debit how much? 10 lakh. To equity share capital 5 lakh. To securities premium 5 lakh. What will do with this 50? Nothing. Correct. 100% correct. If they have not given this, then take this into consideration. Then take this into consideration. So this type of question now become important because of what? MCQ. 2 marks, super easy question, but difficult in exam. If you have forgotten the point, I think this is only given, you can understand. So we recognize when we obtain the control of the goods or services are received. The journal entry remains same and the first preference will be given to what? Recognize that fair value of goods or services. If cannot be measured reliably, then what? Recognize that the fair value of equity instrument on grant day. Chale. Now group share based payment plan. This is also important. A 5 marks question may be asked or 2 marks MCQ question may be asked. Till now to not asked in exam. There can be 2 type of transaction. Suppose this is subsidiary company, this is parent company, and this is the employee of subsidiary company. Employee has given services to whom? Subsidiary company. But who has given option? Option has been granted by parent company. This can be one possible question. This question will be normally asked. Correct now. Now, in the books of parent company, in the books of subsidiary company, what will be journal entry? So, it become EB expense of which company? Subsidiary company, because they have received the services. But this become SBP reserve or SBP liability of which company? So, we write on 2 SBP reserve or liability of parent company. Now, the question is that which account will be debited and which account is credited? Understood, understood. Investment account will be debited यहाँ पर, and 2 capital contribution will be credited यहाँ पर. Similar point we have done where? In financial instrument chapter, that subsidized loan, that point. I think understood. But in one of the question what they have given, कि suppose this was 50,000 and one of the question it was given कि 50% of या 30% of this will be reimbursed by subsidiary company to parent company. So it means can say parent company will get reimbursement for how many percentage? 30%. That is received. That is received. So can you say only investment will be what? Investment will be 70% of what? 50,000, and 30% will be receivable from which company? Receivable from subsidiary company. Understood? Can you say this transaction will be entirely eliminated where? In consolidation. Means can I say this investment, this is kata kata, and this will remain where? In what? Your separate finance, consolidated finance statement. Now दूसरा reverse. Parent company, subsidiary company, and these are the employee of. So employee has provided services to whom? Parent company. But subsidiary company has granted option. Rare situation, but possible. Rare situation, but possible. Correct. In this case, but the what in whose books EB expense will come? Parent company. And what will come in the books of subsidiary company? To SBP reserve or SBP liability. But now what will come in the books of parent company? Credited. And here debited. So it will be deemed dividend transfer to PL account, and this will be distribution of dividend to dividend and transfer to retained earning. Same point we have done in what? Financial instrument chapter. So this can be one 5 marks question if they ask journal entry, 2 marks question if they ask only what? The effect. So can be asked. Now with MCQ question, this all point become very, very important. So MCQ 2 marks, they will ask this type of questions now in MCQs. Correct. With this share based payment is also done. Correct. One last point, associate, I forgot to say one point. In the break, I realized that one point I forgot to say for associate. Let us do that also. Why to miss that? ठीक है ना? The last point of associate. This is the point. Post acquisition loss. Post acquisition loss, I will explain with one example, then I will take one question which is given in what? ICS study material. I don't know whether that is important or not, but if they ask, that is a difficult question. So if you have done it, it is simple. If you have not done it, difficult question. Correct? Means once you have understood, simple question. But in exam, directly it will come, and if you have not done, difficult question. So some question become easy once you have done it. If you have not done it, it is difficult only. Correct? So first I will explain with an example, post acquisition loss. Let me take this example. A Limited purchased 30% equity shares of B Limited on 1/4/2015 at rupees 5 lakh. Equity share capital retained earning of B Limited on that date is 5 lakh plus 10 lakh. Means what is the net asset? 15 lakh. If fair value is not given, the book value and fair value are same. First calculate goodwill. So 5 lakh is the cost price, and 15 lakh ka 30% how much? 4 lakh. So goodwill is how much? What journal entry will do for goodwill? What journal entry for goodwill? Bolo. No journal entry. It will not be recognized. Only disclose. Abhi to we have done na. No journal entry for goodwill, but only will calculate na. Even though question is silent, calculate. But no journal entry for goodwill because this is included in the carrying amount of investment. Okay. Now they have given B Limited reported loss in first year, loss in second year, and profit in third year. So how to react in this? So just try to understand. What is the first cost price of investment? What is the cost price of investment? 5 lakh. Then you will do minus what? Share in loss. So what is the total loss of first year? 10 lakh. 10 lakh into 30% now. 30%. So 3 lakh will be deducted and the carrying amount will become what? 2 lakh. Then again next year, what is the loss? So share in loss how much? 15 lakh into 30%, how much? But how much you can deduct? Only to the extent of 2 lakh, because investment cannot become negative. Investment cannot become negative. Means what is unrecognized? 2,50,000 remain unrecognized. Unrecognized share of loss. Unrecognized share of loss. So this become nil. But in subsequent year we have profit. So share in profit how much? 10 lakh. 10 lakh ka 30%, 3 lakh. So what our IND AS says now, ki out of this 3 lakh, first adjust what? Unrecognized share of loss. And then balance transfer to what? Investment account. So 2,50,000 will be adjusted and that 50,000 will be transferred and the value of investment will become what? 50,000. Till now no question of this nature have been asked. So 2 marks to MCQ question pakka deke asked. But recently they have added one, I will say, good question. But whether they will ask or they will not ask, because that is lengthy question. But if they ask, it will be difficult question if you have not done it. So can I take this question? On the assumption if they ask, correct now? So let me do it. Because itna we have done and they ask that question. So wastage of class na. Suppose we have done this much and they have asked 10 marks question of that. So waste ho gaya na, pura revision class wasted. Revision class gone, wastage. Let us do that question. Because if I will not do, you will also not do. This question. I don't like this question personally. Means I will never give this type of question in exam. But you know ICI. ICI is always there to change the trend. Now, an entity has the following 3 types of interest in an associate. Try to understand whatever I am saying. So they have invested in the equity shares of which company? Associate. 25% of equity share to which equity method of accounting is applied. So this is investment in equity shares. For investment in equity shares, SFS may be applied 27, CFS may be applied 28. Means IND AS 27, IND AS 28. For investment in equity shares. Understood? Then they have also invested in preference shares, non-cumulative preference shares that form part of net investment in the associate. Such preference shares are measured at fair value as per IND AS 109. Oh my God. Means they have done investment in preference shares. Investment in preference shares means a preference share can be classified as financial liability or it can be classified as equity. If it is financial liability, so it is the liability. So it is not a financial liability. It is what? Equity. And investment in preference shares, for that IND AS 27 is not applicable. Correct? For that IND AS 28 is not applicable. So for that we apply what? IND AS 109 only, because that is a financial asset. Understood? So it means that is measured as what? IND AS 109. This is investment. This is not preference share capital. Means in the books of investor, these are investment. Investment means the preference shares of associate has been acquired by investor. So that become investment. Third, there was some long-term loan. Long-term loan. The long-term loan, there are 2 types of loan. For which settlement is planned. Means we know when the settlement is going to happen. Correct. But there are some loans for which settlement is not planned. Settlement is not planned. So for that also IND AS 109 is applicable. In that we need to estimate the settlement period. We need to estimate the settlement period. So these are the loan carrying interest at a rate of 10% per annum. The interest income is received at the end of each year. The long-term loan is accounted as per amortized cost as per IND AS 109. This loan also form part of net investment in the associate. But for these, actually settlement is not planned. settlement is not planned. So what our IND AS 28 says that if there are some financial asset for which settlement is not planned, so they will be accounted as per IND AS 109, but that will become a part of the carrying amount of investment in associate. Means in the balance sheet that will be shown by adding to the carrying amount of investment in associate, because the settlement is not planned, so it will be as simply as permanent investment to what? Associate companies. Means some amount has been given to associate company because settlement is not planned, so it is treated as what? Permanent investment. But accounting will be done as per what? IND AS 109. This much you have understood? Correct. So this is investment in equity shares, this is investment in preference shares, this is loan given to associate, At the start of year 1, the carrying value of each of the above interest is 10 lakh, 5 lakh, 3 lakh. This is as per IND AS 28, this is as per IND AS 109, this is as per IND AS 109. Understood? Chalega. Following table summarize the changes in the fair value of preference shares as per IND AS 109, impairment loss as per IND AS 109, and entity sharing profit as for the year 1 to 5. So they have given for preference share, they have given changes in the fair value of preference shares as per IND AS 109, because this is measured FB either TPL or FB TOCI. Correct? Either PL or OCI, that we don't know. Correct? So they have given changes in the fair value to do accounting as per what? IND AS 109. And they have given impairment loss on long-term loan as per IND AS 109. So because loan is what? Financial asset, to impairment loss will be covered under IND AS 109. So they have given impairment loss and then reversal of impairment loss they have given. So this is also as per IND AS 109. Then they have given entity sharing profit or loss of associate. This is as per IND AS 28 for the accounting. What is the sharing profit? What is the sharing loss? So this is sharing profit loss has been given. Throughout this point, even though you don't read, chalega. Correct? Now let us come to year 1 to year 5 accounting. Okay? Normally, from my point, this question should not be asked. But if asked, you will blame me only, na? Because if I will not do, so I am doing my job. Okay, na? Now we have equity shares, preference shares, long term. So what IND AS 28 did? For first you do accounting as per IND AS 109, then apply IND AS 28. So first we'll do what? IND AS 109. Then we'll do what? IND AS 28. So first we'll find out balance of this account as per IND AS 109. So the opening balance was 10 lakh, 5 lakh, 3 lakh given. Now they have given there is a fair value loss in preference shares and there is an impairment loss in loan. So first apply 109. So apply 109. So you can see minus 50, minus 50. So this become balance after applying IND AS 109. So first we'll calculate balance after applying IND AS 109. Then we'll apply IND AS 28. Now IND AS 28 said the sharing profit or sharing loss. So the sharing loss is given 16 lakh. My question to you all, this sharing loss belong to whom? First to equity shareholders and balance belong to preference shareholders and then balance belong to what? Loan holder. Correct now? Means can you say but equity shareholders bear loss to the extent of their investment only, not more than that. Means out of this 16 lakh, but how much you can allocate to equity shareholders? You can't allocate more than that. Means the balance loss after allocation of 10 lakh, 6 lakh what left? First will be borne by what? Preference shareholders to the extent of their carrying amount, and the balance to what? Loan holder to the extent of balance, that is 1,50,000. So this become 0, this become 0, and this become 1 lakh. Understood? Have you understood this point? So this will become now opening balance of second year. Opening balance of second year 0, 0, 1 lakh. Have you understood this much? Now once again we will apply first IND AS 109. So first IND AS 109 what they have said कि once again fair value loss is 50,000 and here there is nothing. Correct? Here this is nothing. So here we'll do minus 50,000 again. So this will become minus 50,000. This will become plus 1 lakh. But can you say as per IND AS 109 the investment cannot be negative? It means why it become negative? Because in previous year we have allocated loss of rupees 4,50,000. But can you say if we apply only IND AS 109, listen, if we apply only IND AS 109, this should be 5 lakh minus 50 minus 50 means it should be 4 lakh na. Means how much loss can be borne? 4 lakh. Means 50,000 was excess loss allocated to preference holders. Means that loss will be reversed. That loss will be reversed, and they have reversed that loss. They have reversed that loss. Understood this point? Correct. Now what is the share in loss? 2 lakh. But this 2 lakh will be only allocated to whom? Loan holder, but to the extent of their carrying amount. To the extent of their carrying amount. So closing balance becomes 0, 0 and 0. Means can I say unrecognized share of loss is how much? Can I say out of this 2 lakh, how much we have allocated? So 1 lakh is what? Unrecognized. And out of this 16 lakh, how much reverse? So what is the total unrecognized share of loss? 1,50,000 is the unrecognized loss in second year. In second year. So they have given in the solution कि unrecognized loss is 1,50,000 at the end of year 2. Have you understood this much? Because if they will ask same to same questions. Sometime now this type of bakwas question they ask in exam. We have done so much and they ask this question. So we should be ready for that. Ready for that. Normally two type of questions are important in exam. One question which they are asking on a repeated basis, and one question which they have never asked. Suddenly they will ask that question. Suddenly in my exam, what happened in audit, means till entire my life I have never done selective study. Means foundation I have done 100% syllabus. Inter I have done 100% syllabus. Final also all subject I have done 100% syllabus. But in audit now there was one concept, due diligence. Now it become important topic. That time a due diligence concept was never asked in exam. Means before that it was never asked. Understood now? And when I was, because I have done self-study about it, so that time I was not able to understand due diligence. Because we have never done audit of due diligence. So I was not able to understand what was due diligence. Now to I know. That time student. So I said, chhod na yaar. Because not asked. So not important na. And I have left it in my exam, 10 marks question came. And I missed rank from by 6 marks. 50th rank. Guilty entire life. Understood what happened? If I would have done that, so ICI is watching. Who is watching? ICI. Whatever you will not do, they will ask that only. Correct? If I am doing that, suppose you have not done that, entire consolidation you have done and they ask 10 marks question. Because of that reason I am doing. Understood? However, chances are very remote. Rare type of question. But do it, Baba. Now it become easy. Now you will be able to understand. Second year was only tough. Now it is 0, 0, 0, 0, 0, 0. Now once again you will apply first IND AS 109. So what they have given? Now they have given payable again added and reversal of impairment loss added. 1,50,000 will be added. You can see 1,50,000 they have added. So what is the closing balance after impairment, after IND AS 109? 0, 1,50,000. But what was the unrecognized share of loss? 1,50,000. And what is the share of loss in second year, third year? 0. But can you say now 1,50,000 will be allocated to what? Preference holders and loan holders. And their carrying amount is what? Exactly equal to what? 1,50,000. So this will be also recognized. And once again become 0, 0, 0. I think third year you have understood. Third year you have understood. Now once again this will become opening balance 0, 0, 0. Once again you will apply IND AS 109. What they have given, check karo. 50,000 gain, nil. So 50,000 will be added. 50,000 will be added. And closing balance after IND AS 109 will become how much? 0, 50,000 and 0. Now they have given sharing profit. Now you only say sharing profit, how much will be allocated? Sharing profit is 10 lakh. So first will allocate to whom? Loan holder to the extent of their carrying amount. Not more than that. So what was their carrying amount? 3 lakh to the extent of their carrying amount. Understood? Yes or no? Preference holders, how much will allocate? To the extent of their carrying amount. Carrying amount was how much? 5 lakh. And balance will be allocated to what? Equity holders. Understood? Correct. This will become what? 2 lakh, 5 lakh, 2 lakh, 5 lakh, 50,000 and 3 lakh. Then once again these two. Now you can, now it entire share in profit will be allocated only to what? Equity shareholders, because their loss was automatically reversed. Now we'll again not share the profit to what? Because surplus profit always belong to what? Equity shareholders. Now the fifth year, so I hope you have understood. You only say bakwas question. But ICI is there, means I will say there was one question in IND AS 115 about which we'll do tomorrow. There was one question about, about service concession arrangement, appendix D to IND AS 115. So there was bakwas question given in ICI study matter. So I used to say bakwas question, but do it. But when I say bakwas question, what student think? Means it was my mistake in the class. I accept it. I say bakwas question, but do it. But when I say bakwas question, what you will think? It will not come. Exam mein aa gaya 15 marks. ICI is there to change the trend. But I have never said don't do it. I say bakwas question, but do it. But when I say bakwas, so what student is some understanding? Bakwas kato de. And most of the student, it might happen, have not done, but I have understood, even though they have done, they will not be able to do it. Correct now? Because that question was only bakwas. So always bakwas question do 2 times. Because ICI has given that question, means they will ask. They will pakka ask. I always say this is bakwas question, but expected. Now I say expected. I have changed my dialogue now. So now I think this also you have understood. With this associate more or less completed from revision point of view. Joint arrangement completed. IND AS 27, do it by your own. There are some few points, small points are there that you do for your point. I think the chapter is completed from my point of view. Share based payment also completed. Tomorrow we'll take what? Business combination and then revenue recognition, but I'm worried whether revenue recognition will be completed or not. Now I'm worried. ठीक है ना? So tomorrow I can't extend beyond what? 6. Okay. So we'll be able to complete because business combination is smaller as compared to consolidation. Acha. What about business combination? Business combination. First, I just want to ask you how you feel about business combination. Manageable, not manageable? Manageable means I can do thoda quick revision so that we can complete what? Revenue recognition also. Because business combination, once you have understood, as per examination point, there are very few questions and that can be done. So only a revision is required. Revision is required. Consolidation, have you understood? So are you getting confidence? Thoda confidence about adjustment? Once again, last, before I leave this question, any new questions come, take a deep breath, do how much you can do in 30 minutes. After 30 minutes, suppose you think that yes, I can complete in another 5 minutes, complete it, otherwise leave it. After that, whatever you are doing now, you are wasting your time. Better do some simple question. Better do some simple question now. So if you are thinking that you can't manage it, just leave it now. But in 30 minutes, I think you can score what? 70% you can score. Okay. Thank you very much. We'll meet tomorrow. Till then, bye-bye. Take care. Enjoy your remaining day. Bye-bye. A minute. हाँ